Everybody, we're live. Good morning. It's good to see you. Thanks for coming. Get in here. My name is Jeff Gibby. I'm going to kind of introduce our guests, run everything today, read our legal disclaimers, thank our sponsors, all that kind of stuff. It's good to see you. If you're watching us on YouTube, make sure to like and subscribe. It helps a great deal. We will be running prizes all day long, and I'm going to pin a comment in terms of how to get registered in just a few minutes here. So without further ado, welcome. Let's get started. Today's demonstration is designed to instruct you on using Metastock and the accompanying software plugins. It is not a recommendation to buy or sell, but rather guidelines to interpreting and using specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of the software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of a security, nor are they paid for the promotion of a security. No information contained in today's presentation should be construed as investment advice or the solicitation to buy a security. So with that being said, I do want to say thank you to our sponsors, CMT Association, a great organization. If you manage money, or if you're looking to have assets under management, if you're looking to kind of be a bank, any of those things, CMT Association a CMT designation might really help with that. You can find out more about them at cmtassociation.org. Also want to thank Stocks and Commodities Magazine. Stocks and Commodities Magazine, you can find them at traders.com. Very, very big partner of our online traders conferences and our online traders summits. They've been kind of supporting us since we started doing this about 14 years ago. We appreciate it. They've been publishing magazines since 1982. A subscription to them will get you 17,000 articles, all of their historical archives. You can find out more at traders.com. And also want to kind of talk a little bit about the community that we're started. You can join the tradersforum.com. It's a free community. You can learn about technical analysis, learn about the markets, learn about candlestick patterns, chat with other traders. It's been a lot of fun. Join us at thetradersforum.com. So that kind of course, we are Metastock. Metastock, we're going to be talking about all day. We're going to be using charts in Metastock. We're going to be scanning for stuff. We're going to be looking at setups. Metastock has been rated #1 in its price category 32 years in a row. It's great at scanning. It's great at testing. It's great at forecasting the markets. And it all starts at about $75 a month. We're offering an extended trial where you can pay 1 month and get the second and third month for free. That means it's about $25 a month to try the software that's been rated #1 in its price category for 32 years ago. All of the promos, all of the promotions that we've talked about today, you can find at metastock.com/conf-promo. You can call us if you have questions during the day, 800-882-3040. And if you have any questions, you can also chat with us at metastock.com/sales-chat. If you do have questions as we go today, if you're watching and go to webinar, there's a questions box. Say hello in there. If you have any questions in YouTube, do it in the chat. All right, let's go ahead and kick off. Our first guest today is a good friend of mine, Rahul Mohindar. Rahul Mohindar has been a partner of Metastock for, I think, 1 more year longer than I've been employed, which would put it at 28 years. And I'm sure he'll correct me if I'm wrong. Rahul is our great partner in India. He does a really good job. Has several offices in India, trains people how to trade, how to look at the markets and all that kind of good stuff. His methodology, the Rahul Mohindar oscillator, the RMO, I talked a little bit about yesterday. He's going to talk a little bit more about it today and some of the other stuff that he's got going on. Great technician, great way to kick us off. Rahul, how you doing?
Doing great, Jeff. Always kind of you to go back and remind me of how old this relationship has been. It's been a wonderful journey. Been a wonderful journey indeed, yeah.
Cool. All right, you should have just got the pop-up to say, hey, you want to share your screen? I can see your screen. I'll go ahead and get my camera out of the way and my microphone off. It's your turn.
Thanks, Jeff. Well, appreciate everything that Jeff and the entire team at Metastock does. I'm very grateful to him to, be someone who wants to be connected to customers rather than just selling them a product. So I think I appreciate the effort the company puts in terms of getting together a lovely set of speakers. And I think there's something in it for everybody. It doesn't matter what your trading style is. I think conferences like these are only there to help you grow. And in fact, some of the sponsors, including the Stocks and Commodities magazine, age-old stuff. I've been looking at those magazines, well, in the print days in the 1990s. So it's fantastic to continue to see their support. And you know, I feel every day is a learning curve in this industry. There's so much of evolving that we can do. The market keeps evolving, and I think we need to keep upping our skill set. Yes, our experience gets upped with time, but as long as you keep giving it a bit of a knowledge quotient every day. So it's important to keep the learning curve up. Today, I'm going to talk to you about the RMO ATM 4, which is an add-on available to Metastock. I'm going to first start out by giving you a quick overview of the inbuilt RMO system, and I'm going to take a brief 5 minutes to do that. And then I'm going to move straight on to the ATM RMO 4. And the idea of talking to you about a different set of studies. Usually I cover studies like the uh, uh, you know indicators like the trend decider, the breakout catcher. Today is all about how do we have a solid set of price and volume indicators. And I'm going to talk about the newest studies that we released. Just been a couple of months since they've been released. That's the automatic support and resistance tools, as well as the trend flare suite, which is, and again, quite a cohesive and comprehensive suite. So today is all about diving into these newer tools and of course touching on the very important ATM RMO system. So without further ado, let's dive into first understanding what is the core RMO, the inbuilt RMO which you have inside of every Metastock that you own. What exactly is the inbuilt RMO trying to do? The inbuilt RMO, the RMO stands for the Rahul Mohindar oscillator. And the whole idea is to gauge the long-term trend or the primary trend, if I may call it. If the primary trend is up, we want to try and find opportunities to go long on that symbol. If the primary trend is down, we're going to try and find where can we go short. So in essence, the RMO, if I had to put it in one sentence, one very easy sentence, the RMO detects the long-term trend so that we can trade in the direction of the major trend, right? So it's important to understand the crux of the RMO is long-term trend detection and giving you trading opportunities in the direction of that long-term trend. The reason I developed the RMO was actually just for my personal trading to start with. When I used to trade, I used to look at age-old indicators. There's nothing wrong with the MACD and the RSIs and the stochastics. They're still excellent tools. One needs to understand how to use them well. This, for example, is the RSI on the second scale. The upper window shows you the MACD or the MACD as you call it. And often what I found was there was too much of crisscross. There would be a sell, then a buy, then another sell over here, another buy, another sell. And I got tired of too much of signaling. I got tired of too much of divergence. For example, when this market was going up, prices kept making newer highs, the RSI kept giving a negative divergence. You would say it's overbought and keep on looking at a divergence. And that would scare you from buying and shy away from the long-term trend. So I kind of moved out from that because what we need to understand in things like the RSI is that just because something's overbought doesn't mean that you can't buy it. Just because it's overbought doesn't necessarily mean it's a sell. Overbought could be because it is actually that solid a stock or symbol where you need to go long. So the whole idea is I wanted to take out the whole judgment or subjectivity involved with the RSI and look at it from a practical perspective as a trader to a trader. Today I speak to you as a trader to a trader. I'm not someone that runs a brokerage. I'm not an advisor. I'm not someone who's going to try and give you recommendations or newsletters. My goal is to kind of help you understand the tools within the system so that you yourself can frame up trades based on your trading style and time frame. So what's important is we need to become independent. We need to understand the tools. That, in my opinion, is trading freedom, right? If you're going to get locked down to someone else's trade, today there are all kinds of things going on, newsletters, copy trading. And I somehow believe let's understand the core, let's understand how it all works, the engines, and that's the goal of today. So every time the market would make newer high, for example, I'm taking really old data. This is back around the COVID time. This is a chart of Apple, 2019, 2020, that area. Market kept making newer highs, and each time it made a newer high, you could see the RSI gave falling tops, which means a negative divergence, overbought regions. So each time you're kind of scared that it's still overbought, it's still overbought. And my point is, if you looked at the RMO is this green histogram that you see. Is it above a value of zero? It is, right from this point here where my mouse is. So I'm above zero, and it continuously stayed above zero from mid 2016 all the way through 21. And you can see those 4 or 5 years, there was not a single reason why you want to go into any sell. What you're going to focus on is where to buy if my primary trend is up. So the essence is, can I look at one oscillator? Can I look at one indicator in the RMO and, convince myself that that's something I'm going to be using to go long or short in terms of primary direction? So primary direction can be assessed by very quickly applying the RMO trade model template, which is available to each one of you in Metastock. This is not even part of the ATM add-on. But just to run you through it very quickly, if the primary trend is established correctly, I think it gives us three very important advantages. A, the odds of winning significantly increase, because what's happening is you're trading in the direction of the major trend or the stronger force, right? In other words, if the river is going upstream, you don't try and go against that tide, you move upstream. So it's important to understand that we are trying to increase our odds by winning by trading in direction of the stronger force, trading in the direction of the big picture or the long-term picture. Now, there are several elements when you look at the RMO. There are bar colors that you see, which are the medium-term trend, and there are arrows which come up on the price chart. That signifies the short-term trend. So friends, the whole idea is, can we have an alignment of short-term, medium-term, and long-term? Because when I used to look at charts, I used to be like, I'm doing too much of cross-checking various indicators. In fact, I saw users that had more indicators on the chart that it was hard to even see the price bars. So again, the whole idea is, can I have one system rather than me changing time frames? Use a short-term time frame, a medium time frame, a long-term time frame, confirm all of it. So can I do it all in one plate, one template? The arrows are the short term, therefore you get the signal the quickest. So that's the buy arrow. Then you have the blue bars that come up, the medium term trend changes. And then you have the RMO that goes from a negative to positive, giving you an indication of long term trend change. So when you see the alignment, which is where I've drawn that vertical line, when you see that alignment, that's where you want to try and consider taking a long position, because you've seen a short term, medium term. Now, again, if I had to make these rules, I'd say blue bar, buy arrow, the RMO is up, continue trading in the long direction. But this is a second signal, a third signal, a fourth signal, or fifth signal. These are what we call add-on trades. What about these red arrows? These red arrows are basically short term. You may see some rotation if the bar's low breaks, but again, nothing meaningful, because for us, that's just very short term. And the longer term trend is up, so the rotation is more seen as an opportunity maybe to get in at lower levels. So, unless you're very worked up about the very near term, those sell arrows can just be ignored. So the three rules which I briskly would tell you is buy arrow, blue bar, and the RMO or the oscillator being above zero. So when you're going long, that's what you're looking for. And it's a very visual experience. I can shut all my indicators and just say, okay, here's the buy arrow, here's the blue bar. And if I look down at the y-axis, you see RMO bearish and bullish on the ribbon, and that marks it for you. The minute it turned bullish, that's the bar when all three turned. That's the first breakout point. And this is subsequently an add-on, or you could call it a confirmation, where it gives you what we call the 3D buy. A 3D buy is where you have the blue bar, the buy arrow, and a positive RMO. Similarly, a 3D sell, The first breakout occurs when the RMO shifts from a positive to a negative. That's the point where you have the arrow which has already come. So notice they come in at 3 different points. First comes the arrow, then comes the bar color. It's not necessary that all 3 would occur on the same day, right? In the previous example, you could see that buy arrow came maybe 15 bars ago. Then comes the blue bar. Then 5 bars later comes the bar where the oscillator moves from bearish to bullish. So all of this has been beautifully, docketed in a scan, which is a power screener, and I'll come to that, where you get a red bar, red arrow, negative arrow, and these are all signals where you can go sell. Now, whenever you take a buy or sell, I always say use a trigger. In other words, don't just sell below the low, right? It's the simplest test of weakness. When you get a buy signal, buy above the high of that bar, right? A few ticks above it, not just 1 point above it. You want to buy a few ticks above it, right? Maybe give it 2 or 3 minutes, let it stay above that point or below that point. It's the simplest test of weakness is break the low of that bar, right? Sometimes that's what you see. You get the bar, doesn't qualify, doesn't cross the high. In fact, you could see you don't even need to use this high. You could probably use a previous one and say, okay, let's spend a few minutes above that point before we dive in, right? And that saves you from entering because you may see the buy arrow, but when you look, you've got everything's in line. You got the RMO which went bullish momentarily, but that couldn't fire the high out, right? So this is important. Is it a leading indicator? Do you think this is going to lead? I don't think so because, for example, you get the sell over here, the sell doesn't trigger. The whole idea is this is an indicator which is going to try and help you stay in the direction of the long-term trend. And my point is, look, we're not here to chase leading and lagging indicators. I mean, these are just lovely words that we've coined. But my sense is what matters to us in terms of a balance sheet perspective is this a successful indicator? Is this an indicator where we can have clarity of direction and ease of use? And that's what I see the RMO delivery. So this is the inbuilt RMO, which was done more than a decade ago. And, obviously we've been able to, enhance its functionality in a deep way. For example, here's a point where the RMO went bearish to bullish, and you can iron this out. You probably say, look, I wouldn't buy this over here because I've got a buy which previously came, and that the buy didn't trigger because the RMO was bearish. So you probably say I want to go above that, but it gets a little sticky. You start thinking, is it is this takeable? But even if you do take it, you finally do land up getting a buy signal there, which clearly aligns up, where you see the bar color, the arrow, that whole synchronization comes in, right? And the beauty is with time, with every version of Metastock, there have been so many enhancements. I mean, just from a 17 to an 18 to a 19, there's been so much. I mean, mind you, this was probably done in version 10, if I recall. Imagine the kind of upscaling that one has been able to do internally. So important pointers, you got to stay disciplined with the system. In other words, a lot of us, we just take 1 or 2 arrows and that's it. But it's only when you trade 10 times in a row with the same system that you realize you're 6 out of 10 or 7 out of 10 or 8 out of 10. The point is we're not there for the 10 out of 10 trades. We're shifting stocks. We're changing time frames. So I keep warning a lot of users and traders that the worst thing you can do to yourself is keep switching your time frame or keep switching your system. You're not giving the system a fair chance, and you're not giving yourself or your money a fair chance, because by keeping on twitching, it's going to upset your mindset. It's not going to help you stay disciplined. It's going to confuse you rather than confirm, right? So stay with one indicator which has short-term, medium-term, long-term blended in, rather than keeping on switching time frames, right? So here's the ATM Power Screener scanner. Now this of course comes in when you buy the ATM add-on, which is available to you for purchase. And this scans for you. You can look at the background color being green and red. That tells you if the RMO is above 0 or below 0. It's a lovely way, and you can put in a custom list of stocks. So, let's say you want to put in 20 stocks of your portfolio, or maybe you want to put in a NASDAQ 100, or whatever's your favorite list, right? You could make your own custom list. And you can see within that list is the vast majority, like you can see in my list here. And again, this is not current data. The vast majority is pointing to a bi-direction, right? And of course, this could be ages ago. This screenshot doesn't, again, remind none of the data that I'm using is live or real time or up to date. It's more for our learning. And you can see over here that the 3D buy comes out when all three have aligned. So you don't need to manually scan for an arrow. So if you just want an arrow or you just want where there's a new blue bar, that's one way to look at it. But what you're chasing is the 3D buys. And then you have 3D buys where you've got the two arrow marks on the scanner. And when that comes up, that tells you that that's the first time that's happened. So you pay more attention when you get the arrow stamping over there, right? So that's something which is definitely relevant. So now the scanner runs in real time as well as end of day data. And the beauty is you don't need to even manually run an exploration or scan. It's always running. It gives you voice alerts. It gives you email alerts. It's the first scanner which really talks, right? It actually says RMO 3D buy on BA. So that's how easy it is. So the whole idea was I needed something to be hands-free where I don't need to even touch it to run a scan because I can't remember that the bar is over, run a scanner every 5 minutes or every 15 minutes or every 60 minutes, whatever your time frame is. So you don't have that issue that, oh, I forgot to run the scan. The scan is always running. Then you have intelligent block sorting, and the whole what I mean by block sorting, it creates blocks for you in the sense where do you have new trading signals? It brings them right up on the top. You can just double click on any column and it would auto sort it. And then there would be a block of red and a block of green to help you understand that, for example, in this case, more than 65% of this market is in the buy direction, and there's only a few of them which are in the sell direction, the bar colors. So block sorting tells you how much of your building is green and how much of your building is red. So it's beautiful when you watch it because you understand as this list will expand to the red and maybe that shifts, that 65% becomes red, you kind of start understanding that maybe the trend is shifting, right? So it's a lovely way to do it. Explorers are also there for those of you who've been old users of Metastock and more conversant with the explorers. You can manually run them. But again, if you're using the ATM power screener, it's a step above. You don't need to get into running explorations. So, that's the best part about it. Now let's come into the improvisations made on even the base RMO system and why it can really help us, why the ATM can really help us. What you read in theory is that the market moves in a trend, you can draw a trend line, but in real life, when you look at the market, you feel like, how do I draw that perfect trend line? Right? That copybook situation sometimes is just nowhere to be found. In fact, 7 out of 10 is a safe number at peg at 7 out of 10 charts that you look at, you'd be struggling to draw that trend line perfectly. You'll be twisting, turning, fitting, trying to somehow, pulse it in. It's a hard task. And even after you've drawn it, after some time, you might say, oh, I should have done it like that, and I should have done it like that. So the whole idea is in real world markets, there is no room for subjectivity or fitting. So that's why we need what we call an indicator that's adaptive. And when I say an adaptive indicator, what if I made the RMO work to the tune of the volatility of the symbol that's open? So in this case, it has automatically aligned the RMO to this chart, right? For example, if I used a moving average and I said, look, I'll use a 10-period moving average on all the stocks, it's not going to be as efficient in every single stock because every stock behaves differently. The volatility is different, the behavior, the trend pattern is all different. So maybe for a particular stock, 14 is a better average, or 83 is a better average, or 97 is a better average, right? So it's going to do that cherry picking in terms of what could be a more efficient way to handle it, and then mark out 4 different bar colors: light blue, dark blue, orange, and red. So the bar colors that you see now are what I call the super filter. This template inside of Metastock, you can right click, apply template. It's titled ATM RMO, and that's what I call the super filter technique. Why do I call it the super filter? It filters the already existing RMO system. So for example, here, you've got the RMO that went positive. But look at the bar colors here. Red is bearish, orange is still bearish. Orange is a milder tone, but it's still bearish. It's no way, a sign to buy. Light blue is mildly bullish, dark blue is extremely bullish. So if you see over here, it's filtered out. So here the RMO went from positive to negative, back again positive, back again negative, back again positive, because these were working off static value. But when I looked at the adaptive element or the super filter element or the ATM element coming in, it just ironed it all out. And I said, look, it doesn't matter that the RMO went bullish if the bar colors don't align now. Because so the bar colors have the super filter inbuilt, right? So the whole idea, now you may think that, oh, super filter is basically a slower version. It is a more refined version. It is there to give you more accuracy, and it may be at times late, but it may be at times even early, right? You may get an earlier signal too. Let me explain with the help of another example. For example, you may get a red arrow, a red bar coming in much before the RMO even turns. So over here, for example, I got the red bar that came in, and this is the Indian index called the Nifty 50. If you're following that, the Indian markets went for a toss after October 24. We had a bit of a drop, and that all happened with that. You see the deep red color tells you that even though the RMO is bullish, it's got all factors pointing down. So the tailor-made system suggested that we go down. Now, it's not picture perfect. There was a time I had a red bar over here, and yes, the low broke, and it didn't work out. But again, it was, you can quickly come back in. There's light blue that comes in again, and you're over and done with that bar. You don't need to take that as baggage with you. Besides, I always warn that when you get a signal like that, you don't want it on a very tiny bar, or what I call an inside day, a bar that's tucked inside the previous bar, a low volatility bar, a bar that lacks volume, right? But even if you do get in, remember, it's no baggage. Next 2 bars later, you got blue. You've essentially been long the entire 2024 phase until October. And the beauty is you've been rocking that trend pretty well. So the whole idea is there's a lot of alignment. So here when the RMO went bullish over here, this stayed orange and saved you from going long, right? So the beauty is that the ATM RMO super filter is definitely way ahead of just using a static indicator. You've really upped the game. So it sounds very simple. It feels and looks very simple, but let me tell you, the engines that go into refining them is quite deep, to find what value is going to work for this stock, to get that adaptability. And therefore it's one of the add-ons that you have, which not only is amongst the most popular add-ons out there, but at the same time, I'd say is also a very heavy add-on on your system. In other words, it does crunch resources a little deeper. Like, I would not recommend using it without 16 gigs of RAM. It's not the average add-on, which just works very quickly. That's because it crunches data like no other. And it would be safe to say that, even the results speak for themselves. These are charts that I don't manufacture. These are real signals which actually come to you. And I'm going to come across to you with more and more examples. Here's a space where you've got a lot of red to blue. This is the old system. A lot of movement here. Refined, just orange. No need to go through that. So if you're using the ATM RMO super filter, you've already crossed a bridge. You're already in a refined. I keep giving the example is you can always buy a suit off the rack, and it may work for you sometimes, but you can always have a tailor-made suit which will work perfectly for you, or at least much better than what you get off the rack. So if you're someone who's uh, you know who's particular about giving yourself the best shot, giving yourself the best tools, you are going to use the super filter, right? This is a chart of the euro. And again, I've taken here a 10-minute chart. I've just taken an extract somewhere towards the end of February where you can see I've marked 3 vertical lines. These are the 3 points where a signal came. For example, that's a point where I got a buy. But what happened? The high didn't cross. What happened over here? The low didn't break, right? So why I'm highlighting this is these are areas where you get the signal, but mind you, you won't be buying because the high is not crossed. You won't be selling because the low is not broken, right? So if you're someone who's chasing, uh, even if you want to sell over here, another problem that you see over here is the RMO is bullish, right? In a perfect world, you'd like to be negative, unless you are in a deep color. For example, here I've got a deep red color. Here too, it's deep red. The low didn't break, so definitely won't do it because even the RMO is bullish. Here the RMO is bullish, but the low did break, and that's what kind of led you into the drop there. So you can see that a lot of the crisscross that happens above and below zero, that too is massively smoothened out, and the ATM RMO is scales ahead. For example, I said it could be faster. Look at the dark blue that comes much before the RMO goes bullish. So this is what the beauty of having something adaptive is. It can be faster and it can be slow. So right on the same chart, it's faster in giving you the buy and it's slower in giving you the sell. In other words, there was volatility. So what happens as the volatility increases, the indicator, the super filter starts becoming more accommodative, right? And that's what's helping us try and stay in a better place in terms of direction. So you move from dark blue to light blue, and then you taper off into a red. And when you see that red, the low is taken, you got the arm more negative. So look at the clarity, the sense of clarity of direction is amazing. I mean, just comparing two charts, I hate doing this because I'm kind of running over one with the other. But that's it. I have to accept that today technology does that to you. It often makes you, give up something old for something new logically, right? And that's exactly what I'm doing. I want to get rid of the red space here. I want to get rid of the little cells that came here and just look at one clean chart, which is more efficient, right? So often I would be getting the red much earlier over here and I could action it. That's very important to me because if I get the sell normally over here, I could still manage with it. But by the time I'm going to sell below that low, I've lost 3 bars, which could be a substantial move. So the clarity that comes in is definitely fantastic. And again, sometimes in the journey, when you see a light blue, don't get worried. The high is not crossed. Even if you cross the high, look at the armor at the bottom is bearish. You're only going to get worked up if it's dark blue and then crosses the high in an RMO bearish zone, right? So tremendous clarity in terms of direction. In fact, how do you use this more efficiently? This is a chart of Meta again with the super filter. You can see wonderful, if you just look at how it's been, all the dark reds, dark red, low not broken, dark red, low not broken, dark red, low not broken, right? So if you really want to understand where this breaks down, of course, this is a phase from I took November 23 right up to February 2025 as an extract of data. And you can see how beautifully it kind of maintained this trend. Mind you, this is no easy phase. There have been big gaps in this phase. There's been a lot of rogering up and down, a lot of peaks and troughs, not the easiest market. There have been a lot of days where it's just been flattish, and you've got to understand that it's no cakewalk. And if the super filter can do this efficiently, it's amazing. Now, everything that I'm talking about has a scanner. Light blue, dark blue, orange, red, those backgrounds will get marked out for you. Upshift, where it's moved from light blue to dark blue. Or down break. Down break means it's the first signal where you've got a cell setup, or downshift where an orange is moving to a red bar. Now, all of this is beautifully documented as well in the manuals that I've written, and we recently updated the manuals too, just a couple of months back when we released the support resistance and the trend flare suite. So you must go through those manuals, and of course we back you up with one-to-one learning as well. And we can always help you in terms of learning it. But the whole name is Automated Trend Modules, ATM. The whole idea is to automate the analysis so that you focus on the trading, right? It's all about getting you there. And block sorting is something I'm a great fan of. And over time, when you use it over a list, so for example, if this list is 40 symbols and you can see a good 60% is either light blue or dark blue, it just helps you engage and understand what the market trend is. The orange and the red are really a minority. And if of course that list expands with more oranges and reds, we know that that shift is coming. So keeping a list like this is, and watching it continuously, I can't repeat, but uh, one, you have to experience it. You got to, you get a pulse of it. As you see that the list expands, you really understand that the market's shifting. Now, I talked about volume. How am I going to use volume? So we've got one great study with the super filter, which is a price breakout tool. The SWI is an indicator which is strength weakness index. And basically, this indicator is only using volume. It is the most important indicator from a volume perspective, in my opinion. And the reason that is that we have this statement where we say, if price goes up with volume, that's a confirmation of the uptrend. Similarly, if price goes up but the volume is not going up, that is not a very solid uptrend. So this whole equation is price going up or down with volume or not? That is married into the SWI, and that balance of volume is being beautifully checked through the SWI indicator. And this is marked out by just a red line that you see. It dissects the chart into bullish and bearish. So the bars have been painted by the expert advisor here. If they're blue colored bars, it means I'm above the SWI line. If they're red colored bars, below the SWI line. And that is telling you just on a volume perspective. Mind you, you need an indicator which is price driven, which is the super filter, which is beautiful. It's giving you those price breakouts. If I could blend in a volume based parameter as well, that because volume is money, it's telling you where's money driving the stock, and if it's driving the stock down because there's not enough money on the uptrend and you got that sell, well, that's another very important perspective. So I need a perspective of price. I need a perspective of volume. And that's what I'm doing beautifully. So you can see over here that even on a 30-minute chart like this over here on the QQQs, you can see over here how beautifully it's telling you just one volume alone, mind you, nothing else, just volume alone, how you got the red, you got the drop down, you got the blue color bars where the SWI is crossed, and you get the uptrend. So, these are more charts, 30-minute chart of Tesla, again, somewhere between, the whole month of Jan to Feb, end Jan to end Feb. It's actually the whole month of February that's in front of you, a 30-minute chart where you can see on volume alone how it's performing. Now, can you use this on daily? Of course you can. I mean, no doubt. There are expert advisors which give you commentary. So if you're someone who's struggling with understanding it, you can just read the commentary. It'll write it for you. The SWI senses a bearish pulse. What does the RMO sense? The zone detector, all of that comes in. This is a more up-to-date chart. Well, maybe not perfectly up-to-date, but you can see this is Meta, for example, on the daily. And what I did was I put the super filter and the SWI. I know it may look complicated at first, but interesting take. Even though you've got, the market broke the SWI over here, it was still light blue. So, don't waste your time trying to sell it because you just have the volume piece coming in. But here, for example, you got light blue and you've broken the SWI. When you move to orange, that's a big red flag. That's where you want to get out. You want to make sure you're no more in the stock, right? So the alignment of the two is beautiful. This is the SPYs. Again, this is an hourly chart of the SPYs, and you can see that again, this is almost up to date, I think, till yesterday. You probably see how beautifully it's doing this job. You get a buy on the SWI. It's also light blue, fantastic price and volume confirmation. Could have changed today. You got the orange over here, which rotated it down, right? And it broke the SWI. So beautiful alignment. Now look at this buy here. The buy that came in around the 9th or 10th of March, or around that area of 9th to 11th, is all orange. I'm not going to be attempting to buy this. The dark blue comes in, the high is not crossed. So you really don't land up buying and getting trapped on that, right? So the alignment is beautiful. For example, here you SWI got crossed, but the super filter. So price and volume, that marry is very magical. Can I have something which is a price-based trend detector? That's the ATM super filter. And I have something which is just volume based, because no system is complete if you're just chasing a price driven breakout, right? That's the mistake a lot of us make. We're all chasing price. And again, I speak to you as a trader to a trader, someone who trades the US markets extremely actively, someone who trades the Asian markets as well. I've had the good fortune of being part of various markets, including Forex, including commodities, and I'm still an active trader because the whole idea is for me, that's what excites me. That's what I want to live off. And the whole idea is to connect with you, not just as someone who's trying to educate you at a theoretical level, but at a practical level. And that's where I keep suggesting that, look, you got to try this stuff 10 times in a row, whatever technique you get on the same stock, the same quantity, to even feel that you're 7 out of 10 correct. It's very important. But this is just a very simple combo I gave you, a super filter with the SWI. I mean, I have about 7 or 8 different templates which you'd get within the ATM suite. There are about 40 indicators, but we kind of crisp them up into just 7 templates. And that gives you 7 different systems. And that's the power of the ATM. Let's talk to you now a little bit about the newer stuff, the Trend Flare suite. The ATM Trend Flare, it looks complicated, but don't worry, this is actually very, very simple. I'd like you to just look at the upper window first. The little orange flame that you see up or down, that's a flare up, right? Or a flare down. So in other words, if you see an orange flame burning upwards, a cone pointing upwards, that's a flare up, or what I call a sweet spot, or SS plus. Why plus? Because sweet spot for the positive side. And then you have what we call an SS minus, sweet spot for the negative side. So every time you have a flare down. So where did the market flare down for the first time? Over here, right? So it was up over here, now it's down over here. And then you kind of stayed within a trend down. So now let's look at another concept. You have a green baseline. I call this the baseline. A baseline is what dissects positive and negative territory, just from a slightly broader trend perspective. Mind you, this is not the RMO at work. It's a totally different concept, and I'm coming to it. No, the whole idea is now if I'm below the baseline and my flares are down, obviously there's weakness, right? But the first sign of, the first red flag for me would be even if the market was above the baseline, you look at that flare down. So that's also marked, every flare is marked with a little diamond. An orange diamond signifies a flare down. Similarly, a blue diamond signifies a flare up. So what I'm looking for is here I've got an orange diamond, the low is not broken. Orange diamond, the low is broken. This time the low is broken as well as the baseline is breaking, right? That's a change in trend, right? Now let's understand the flare are those flames which are also corresponding to the diamonds. What do you see in the ribbon? That is based on the baseline. Am I above the baseline, below the baseline? It doesn't matter if the first cell will always come counter trend. In other words, right at the base. So over here, when you get a buy over here, you may not always be above baseline. In this case, it is, right? But the first cell, for example, often does come when you're below. Now, for example, here's another interesting, I mean, this is a chart of the Bitcoin ETF. It's again a phase of November, which I picked up, a 30-minute November phase, where you can see you had various flares up, okay? And the flare up happened, around 42, and you had the huge move, which comes in just 4 days. Of course, this is a different beast on its own. Crypto is a very different market if you trade stocks, but for those of you who do, you can understand how below the baseline, above the baseline, and you have flare ups which come. Now you may be wondering, what are the circles? The circles are basically what we call TSLs, or trailing stop losses. So if you are getting a circle, it tells you that if you are long on the flare, use this bar's low as a trailing stop. If you don't want to, if you want to be a little more protective, look for the immediate low wherever the circle is. If you can find, maybe you want to use this low, or whatever this low is. So it just tells you start locking in a trailing stop. You can run for scanners. In other words, you may want to look for where do I have a new flare up or flare down, or where you have a BL upshift. BL upshift means baseline upshift, where the price has just crossed the baseline, right? And that's a very interesting signal. SS plus means you got a new flare and you've crossed the baseline. That's an interesting one. Here BL downshift means You've just broken the baseline. The price has gone below. A TSL is just, TSL stands for trailing stop loss. In other words, if you're already short, you'll get TSL minus. If you're already long, you'll get TSL plus. Okay, so don't get too confused by it. Just remember what you want to use is these flares up and downs. These are significantly visible through the diamond stamps that you see over here. In fact, let's show you a more up-to-date example. This is the NASDAQ, and I'm showing you an hourly chart here of the NASDAQ, which is .NDX is a symbol. Where did the market turn? You had a flare up over here and a baseline cross, right? After that, you had diamonds which came in, but they were above the baseline, and neither did they significantly break the lows of that. Notice where low is not broken. Here you got it. Low was just temporarily broken. I mean, even then you could get a flare back up here. So primarily you've just been long in this entire phase. Similarly, where did you get the sell when the Nasdaq had a drop? You got a flare down over here. You can see the little cone shape there. Low broke, right? Then when the baseline broke, that's what kind of catalyzed the entire move. So that's a beautiful way to look at it. This, for example, is another version of it, because in trend flare, I have two versions available to you. You can apply a template of what we call the normal mode. For those of you who are an active trader and want sharper, earlier signals, so it can give you as good as a counter trend sell there and a new buy as early as that. And if you're someone who says, no, I don't want so many triangles and circles, I can go for what we call the slow mode. A slow mode, as the name suggests, is going to be slower, but at the same time may give you fewer signals. You may feel that it's safer, but in my opinion, I would recommend using the regular or the normal mode. The normal mode is what it was originally built. The fast mode was something I built based on user feedback, because a lot of users felt that, look, it's too active for my style of trading. And that's where I tried to evolve it and say, okay, here's something where it could be. So you can see over here the flare first sign. So is the baseline something that's mandatory? No, you can straight away start by seeing the flare. And the beauty is you can keep a risk which is very small. You could just use, a 2-bar risk. So for example, if I wanted to go short over here, I'm going to take 2 bars back and say, okay, can I use this stop? If I can afford that stop, that's perfect. But that's what gives you, for example, if you were long, we had a TSL here. TSL is the circle. A TSL stands for trailing stop. So you want to stop out any long positions if that level breaches, right? So the beauty of the trend flare is it's very automated, and I would recommend kind of first working with the normal mode, because that's the original form. It's a sharpshooter. It's going to give you those buys and sells much before a lot of other indicators, right? So if you're someone that's looking for a very snappy, very responsive indicator, you won't be disappointed with the trend flare, I can tell you. Another fantastic tool that we built is the automatic support and resistance. This came out through an expert advisor exactly a year ago, I reckon. And the reason we launched this was I realized that a lot of us are using support resistance based on previous pivot highs and lows. We're all using a previous peak or a previous trough and trying to call that a support or resistance. And in my opinion, the way I look at support or resistance is which is the point above which most indicators would turn positive, which is the point below which most indicators would turn negative. Very different perspective. So support for me was the point below which most indicators turn negative. Resistance for me is a level above which most indicators would turn positive. And when I say most indicators, I mean ATM indicators, right? So very solid suite. So when you look at this chart here, the blue is what we call resistance and the purple is what we call support. So you can see over here, the market took support here, and these are automatically marked for you on the chart. As soon as you closed above that, you've crossed resistance. So every time the market drops and you get support, if the support's not broken, you're still holding up, right? Where does the support breach? There. That's resistance. Resistance held. So that's the turn of events. And then you have another support, right? In fact, you'd understand this again. Let's show it to you on a NASDAQ chart. and you can relate to it probably more efficiently. This is, I think, data up till May 2nd. You'll be able to understand we held that support, we crossed a beautiful resistance over there, had a huge rally breaking that out, and every dip that came, that support held, right? So what I want to see is, can I close below this level? So you have one bar that may have closed below it, didn't break the low of that bar. I always use the break of the low as an important pointer. So as that level comes up, so here's a bigger chart of Apple, and this time I'm using a daily chart. So in case you're someone who's end of day, you can certainly use that end of day as well. You can see Apple in these attempts of going up couldn't cross the resistances over there. And what you see over here are two baselines. One is the baseline slow and one is the baseline normal. So the green one is the regular or normal. And I just add these baselines because it gives you a beautiful indication of where the market is. For example, the market went down, it held the lower baseline, rested on support, broke out of both the baselines, across the resistance here. It speaks volumes to you. Here you've broken both the baselines, broken a key support. So tectonic shift happening, right? So you need to understand very important level here, for example, couldn't cross 215, very big red flag because you couldn't cross the two baselines, couldn't stay above that, right? So that's important. So understanding the concept of support resistance as a concept where, remember, it's a level below which, so it's once we cross this level, once I have a bar that closes above the resistance level, takes the high out of that, that I expect traction up, right? Similarly here, if I break that support over here, I'm going to, if I close below that and I puncture that bar's low, that's where you're going to have a rotation down. So here, for example, you may see that I've crossed the blue level, but that's not good enough. I've got one bar that closed above it. The high is not crossed. So it's as good as the resistance held. So it's a beautiful study. In fact, I'd say it's one of the dark horses within the ATM suite. And let me give you a big hint. If you can understand to use the support resistance tool, you probably wouldn't want to use anything else. My hunch is, because this does a beautiful job of blending in various ATM studies and finding out the point above which the vast majority of these studies are going to be bullish or bearish, right? So the fact that this level is breaching and not closing and that low is breaking means majority of your ATM studies are negative. Like here, you closed above this high, majority of your ATM studies are positive. So if you can understand this, for example, is the chart of the euro, and this is a euro chart up to date, almost up to date, I would say till yesterday, with the end of day data. And you can understand over here, where did the euro folly? It resisted here, broke this support, closed below both baselines, most importantly, closed below the support, bang, went down. Where did things change for the euro? As soon as we closed above, every time there was a resistance, it could never cross it, never cross it. That's the bar where it closed above both baselines, crossed the resistance. And these are real charts. These signals, the beauty is none of the ATM signals that appear change. For example, if it marks a support somewhere, or if it marks an arrow somewhere, or a bar color somewhere, it never changes. I use programs which often go back and muck up the data and say, oh, we optimize it. The beauty is it's very reliable. So friends, my suggestion to you is, whether you use an SWI, remember, or any indicator, you've seen this rule that I keep saying: if you get a red bar, sell below the low. You get a blue bar, buy above the high, right? You get a blue bar, buy above the high. It's very important that you understand. Now imagine if you blended the support resistance tool with the SWI. The SWI is a volume driven indicator, just to remind you, and support resistance is price driven. So here's another case in point where you can see that the moment I broke this level, I broke a major support, the SWI was negative. So imagine having a tool of both price and volume working to you. So here's another classic example of how price and volume blend so beautifully. So the whole idea is, when you make a trading plan, let's have a plan which, you know, inculcates both, price driven indicators, volume driven indicators, and gives you a ready list, a scanner, which can help you weight your trade. In other words, you'd be able to gauge it at a different level when you see a list, when you see that building. And the whole idea is, can we become more rule-based, focused, and effective. And why I say this is, the moment you have a trend line, you can shift and turn it, or a manual support resistance, you'll fit it. You'll try and make it look like, okay, this is at this level. We'll always find some past referencing point. The ATM is all about taking out the subjectivity and making the indicator tailor-made to that stock or symbol or chart that you're looking at. So, friends, the whole idea is if you want something adaptive, you want something which is really tailor-made for that symbol that you're trading. If you want to take a more progressive step, this is a great way to kind of move. And I can tell you this, there are a lot of add-ons out there. There are very few add-ons which do the kind of work that this does. So that's solid about it. I wouldn't have users renewing the add-on for 10 years and more if the indicators didn't work for them. So I think the greatest pleasure I get is when I hear from users all over the world, no matter what asset class you trade. And, that's what matters to me, that it eases it out for you. The whole idea is once you start out with a program, it's very easy to understand and use. In terms of power screener fields, there are over 40 power screener fields. Today was not a day I wanted to show you the power screener, but you could scan on literally anything like a candlestick pattern or a MACD or an RSI or all the ATM studies. So there's a lot going on. So if you want to learn more, feel free to watch the videos available. Feel free to connect with someone at the Metastock team or veertechindia.com. We'll be happy to kind of help you through any questions that you may have. I'm going to hand it over to Jeff for questions and probably explaining pricing and sign up processes.
For sure. Has it really? We've had it out for 10 years, Rahul. You just blew my mind.
Absolutely. Yeah, probably more.
Time flies. We're getting older. All right, here, let me do this. Thank you very much, Rahul. I do want to talk a little bit about the offer and kind of what's there. Power Screener is cool. Okay. Before I kind of get off into this, Rahul, I do want to say thanks for being here. Thanks for talking about it. It's good to see you, man. Always good.
Appreciate it. Thanks, Jeff.
You bet. So the Power Screener is an app that kind of keeps track of all those indicators, variables for you. RMO, I guess we are on version 4, which means we've made more iterations of the RMO ATM than any other product. But with it, you get the Power Screener app that'll keep track of kind of the indicators. It'll give you alerts in real time. It's like a very, very, actually, I think I have a picture of it. It's like a very nice quote screen. So you get that right here. You also get all of the methods included: the breakout catcher, the strength weakness indicator, the super filter, the trend decider suite, RMO 2, counter trend indicator, and then new with floor, you get the flare, normal and slow, and then the support and resistance finders. So those are all included as part of the add-on. Very, very comprehensive add-on, to say the least. Here's again what's included: Power Screener app, all of those methodologies. I just said them. I'm not going to say it again. Quite a number of different methodologies that are available. One of the things I like about this particular package is after we kind of released it, we sat down and we recorded 2 sessions live. In the first session, Rahul did a breakout core models. With that, he talks about the flare strategies, the picking refined strategies using the super filter. Reading momentum, you can read the bullets. So there was 2 sessions. The first was the core breakout methods. The second was about trade detection and integration. And all of that's available. What we're going to do, the ATM is normally a subscription of $129. That training that we do with the masterclass is normally $499. So the total price of everything would be $886 for 3 months. What we're going to do is if you buy a month and you buy the training, we'll have you pay $499. Okay. With that, you'll get 3 months. You'll get the masterclass. There's no commitment to keep the subscription. If it doesn't work for you, you can cancel it anytime. And you also are going to get that lifetime discount price of $129 instead of $149 for the ATM. So again, the offer price is $499. That's going to include 3 months of RMO ATM. You're going to get a permanent discount of RMO ATM instead of $149. That'll be $129 forever. You're going to get 2 live training class or 2 recorded training classes. They were recorded live with Rahul. And to do that, you can go to metastock.com/ATM. You can give us a call at 800-882-3040. And you can also go to metastock.com/sales chat. So there you go. I do want to, as we kind of get into the next one, I want to talk about CMT. Want to say thank you to CMT Association for supporting the events that we do and all that kind of stuff. CMT is a very, probably the only organization of its kind that offers accreditation in technical analysis. And it's a fairly tough process. They're going to come in a little bit later in the week to talk a little bit about how CMT accreditation can help you if you're looking to manage money, if you're looking to have assets under management and you want to increase it, if you work for a bank and want to have more responsibilities for the bank. All those things they can actually prove a CMT designation will help with. So you can find more about the CMT Association at cmtassociation.org. You can also give them a call at 646-652-3300. So our next presenter is actually a CMT, Martha Stokes. Martha is a good friend of Metastock. She's been running, we've been working with her, gosh, I think it's been a couple decades now. I love Martha. She's going to talk a little bit about how you should not panic in the markets today, how to trade the downtrend, all that kind of stuff. I'm really interested to see what she has to say because we are in fairly interesting markets. So Martha, let's go ahead and get you started. How are you doing today?
I'm good. How are you doing? I'm trying to get myself visible. Show my screen. No one can see my screen. Can you see my screen now?
Yeah, I should have just asked you to share your screen.
Very good. Can you see it?
I can see it.
Okay, and then I'll share my webcam. And can you
All
see
right.
me?
Yeah, there you are.
Right. Okay, all right. We have some fun things to do today. So we're talking about swing short and smart, trading the downtrend without the panic. I'm an educator, strictly an educator. We have assets that we have added to Metastock that benefit our students. And so this is not advisory or recommendations or anything like that. I am a chartered market technician. I have been a very long member of the CMT Association, and I help CMTs affiliates that want to become a CMT do their work. I'm the CEO and co-founder of TechnoTrader. We've been in business for 27 years, starting this month, and educating professionals and retail traders around the world. I'm author of 2 doctoral theses under the CMT status, author of Evolutionary Theory, How to Identify Evolutionary Cycle Deviations, and I'm told I'm one of the top cycle theorists in the nation. That's what people tell me. Relational Technical Analysis is my 2nd thesis. It talks about how you relate different aspects to technical analysis to make it stronger. So this is what we're going to talk about a little bit today. We have a really nice gift for you if you follow all the way through my arduous presentation. So over the past several weeks, the market has become more volatile than it has been since March of 2020. Volatility is everywhere, intraday, day over day, and in most stocks. This has made it more challenging for some traders, but especially day traders. It's tough. Swing trading offers a solution to the problem of high volatility minute-by-minute scale. Swing traders can easily shift from buying long to selling short and should learn to do so. It is the smart trading style for these volatile times. And we have a lot of volatility, a day over day, and even in intraday. I watch the intraday and I go, boy, the retail traders are getting wiped out because minute by minute, it's just changing up and down, up and down, up and down. So you have to follow the trends and learn the new things that are going on as our markets constantly are changing. How to make huge profits in a volatile market using Metastock charting software with TechnoTrader's trading process, which includes hybrid leading indicators. You have a decided advantage. Hybrid leading indicators warn of a shift of the daily trend up or down 1 to 2 days before the shift occurs. This gives you the 1 to 2 days ahead of what normally would be a surprise change of direction for most of you. Void of buyers is a term you may not know yet, but you need to understand and learn about voids because what you're being told on retail news is not factual. Today's training on volatility and how to adjust and modify and how to trade to make the most money during these huge swings from up to down trends is very important. Most of you can trade stocks when the market is trending up and you do very well, but can you sell short? Selling short is far more profitable in a volatile market. The most important thing you should know is that volatility comes from the market shifting from an uptrending to a downtrending, whether it's on a daily pattern or a monthly pattern or a weekly pattern. When there's volatility, you're going to see that shift. Volatile markets equal downtrend usually, because it'll be going up and up. And we had several days last week that's up and it was up and then all of a sudden, boom, it's down today. Volatility. Dark pools begin their hidden slow rotation selling of stocks to lower inventory of that stock. When you're lowering inventory of a stock, what they're trying to do is get some extra cash flow to buy some other stock. They're not moving money out of the market. They're moving it from one stock or one ETF to another. Okay, so that's very important to understand. Dark pools sell stocks in large lots as speculators drive prices higher and higher. They use a TWAP order. They can set it. It pings on a penny spread. Ping, ping. Time weighted at price. Dark pools create minor down days, sometimes when there is a void of buyers. The shift of large lots from buying to selling alters the balance of power to large lots. So when they're shifting, when they're accumulating, it shifts to them. When they're rotating, it shifts to them. Retail traders often buy on the dip as speculation goes to the extreme. Everybody goes, oh, it's going, we got to buy NVIDIA, let's buy it, up, 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 and then all of a sudden it crashes. The trend becomes more volatile as the stock price starts to form a top, usually a flat top these days. Why would we have a flat top rather than peaks and valleys or head and shoulders? Because as it hits that high, they're selling and controlling that penny spread. Pros are controlling it also. This creates a huge opportunity for those who can sell short successfully. Volatility is your signal to be ready for downside runs. Although stocks will bounce up, fake rallies will make it seem as if the market is going to continue up, but it is not. Volatile price action is the shift of power and dominance from uptrend to downtrend. There is usually plenty of volatile day-over-day activity as the shift of power overwhelms the smaller lots at some point. Professional traders quickly switch from swing trading to the upside or to selling short. This sudden shift by the professional traders and floor traders triggers HFT gap downs at market open. If we have a huge gap down at market open, it is always the HFTs. I'll explain a little bit later. You can learn to trade with the professionals. You should be piggybacking off of the professionals, hugging them like a kid on a dad's back, because they are where all the action is and they can do it. So we have up and down warning. Now this is a flat top and it is going to go down. We have below average volume. We have all sorts of things telling us, bells and whistles that they're telling us that it's going to go down. Why you should learn to sell short, learning about how the market moves in a downtrend and is as important not only for day traders and swing traders, but also for you who trade options. It's also vitally important for long-term investors and pension fund management. You have to manage not only your trading, but your 401k or IRA, whatever you have. When you understand the downside trend, you are able to make money in the stock market, no matter what is happening with the economy, jobs, recession, or other investments and stocks. If you learn about the downtrend of the stock market, you will be able to make profits no matter what happens. No more worrying about a recession. The stock market is recession proof because you can trade both sides of the market and make money. So forget about the recession. Okay, I talk about this often, and we do have some more of this ad that we're going to offer later in the thing. But right now, I'm just going to go through it very quickly because this is the bull market. This can be daily, this can be weekly, this can be monthly, this can be annually. 80% of all the market activity is on the professional side. 80%. It's in dark pools and areas that you can't see. Some people say, oh, there's a big whale. I found a big whale. And I said, well, how large was the lot? Oh, 100,000 shares. I'm going, no, they're trading 1 million to 5 million share lots, 10 million share lots. Okay, so you haven't found them yet. 20% is on the retail side. The professional side is hidden. You can't see their activity at all. High frequency traders are professionals, but they trade on the retail side against you or ahead of you. So all of these are the retail side. All of these are the professional side of the market. In 2020, 300 billion shares traded hands every single day in the US stock market. How much do you think that is today? Less? More? $1 trillion exchanges hands every day in the US stock market today. We have grown exponentially, and it has changed. It's not the same market as it was before the pandemic. And you need to learn and understand this stuff. That's why I teach in my retirement, because I love to teach and I love to share my knowledge. But you have to be aware that the dark pools are trading much larger lots than they did in the 90s. The bear cycle is the opposite. The buy-side institutions know ahead of time that there's going to be somebody's going to slow down, Apple or anybody, anything in particular. So they'll slowly rotate out of that stock, and you can see it from the percentage of shares held by institutions on NASDAQ. And it slowly rotates out. Well, when they do that, the trend starts doing peaks and valleys. It rounds. Why? Because they're using penny spreads and TWAP orders. Ping, ping, ping. And you can't even see it because the price change is so small. So sell-side institutions are short-term traders, professional independent traders, huge group growing. I have a lot of students that are becoming professional traders or semi-professional traders because we do trading as a business and teach you how to do that. They get in and they place orders to sell short. Okay, they place them. Then they place a buy to cover way down here. You wait to get in on the sell short down here, but the buy side institutions are slowing the trend of the run down as they start to buy as the stock falls below its fundamental values, and they start buying bargain price stocks and buying into which forms the bottom formation. So you have to understand this. You need to get in sooner, and you need to not rush in as the stock is starting to develop a bottom, and that's what a lot of you do. So market condition analysis is my professional thesis, and I say, who is in control of price? Which of these 12 market participant groups is controlling price, or maybe a couple are? What technical patterns are prevalent and reliable based on the market condition? How price will behave at resistance and support levels. It changes based on the market condition analysis. There's 6 primary market conditions, and then there's 2 that are to the downside. What trading style works best in that particular market condition? Which indicators should you be using? And you have to modify your indicators slightly, period settings and such, for the downside because it falls faster. The inherent risk in trading a specific style in that market condition. You always have to say, what is the risk? What is the risk? What trend line patterns are common? I'm not talking about uptrend, downtrend, or sideways trend. I'm talking about the trend line patterns within the trend. What are common? You want to trade the common ones. Which entry and exit signals are most reliable? We have a whole new group of candlestick patterns that have developed in the last few years, 5 years. It's like, oh, that's a new pattern. That's a pro trader. And so I teach those. The strength of price and volume patterns. You have to include volume. A lot of you make the mistake of just looking at price. It's not enough anymore. You have to look at the volume patterns as well. Market condition analysis tells you how and when to trade, who is controlling price, what to expect in near-term price action, where to find excellent picks, how to enter, and when to exit. Market condition analysis is a roadmap of which market participants are actively trading, which are sidelined and waiting. Who's waiting right now? Retail. And where we are in the overall long-term, intermediate term, or short-term trends. This provides what I call relational technical analysis needed to navigate the complex marketplace of today and make something that is complex, simple, and easy to understand. Okay, so we're going to talk about the individuals that are primary here. I have talked a lot about dark pools before. We have an offer that will help you with that. But we're going to talk about professional traders because you should be on their piggyback. Professional floor traders, proprietary desk traders, independent professional traders are the professionals. A professional trader trades differently from a retail trader. They are aware of the entire body of market participants, all 12, what each is doing, and how that market participant impacts price action. They are aware of who they are trading with and who they are trading against, usually you and smaller funds. Professionals use special order types and commonly trade 1 to 5 million shares in a single transaction and can have as many as 5 to 10 legs on that one single order, spreading their risk and their profits across several financial markets. They use special indicators designed to identify which side of the transactions the large lots triggered. And that's what I have in the Metastock charting software with our hybrid leading indicators. We have hybrid leading indicators that tell you what side the large lot transacted on, because that's where the money is going. Independent professional traders hunt for dark pool buy zones or sell zones and then trade with or after the dark pool has acquired or rotated out. They create candlestick patterns called nudges, which is the most important pattern to learn, which trigger HFT's automated orders that gap the market down and open. High-frequency trader firms. High-frequency trading system firms have been around for over 22 years, with fully automated algorithms that function without human intervention. And yes, they are the ones using all the AI. And AI makes a lot of mistakes, and they're learning. AI, all huge gap downs at market open are caused by the HFTs. HFTs fill the queues with thousands of small lot orders milliseconds ahead of the market open. How many times can they trade in a millisecond? 60,000 orders. Woo. The computers of the market then adjust the stock price up or down based on the number of buyers versus sellers. HFTs are maker-takers of liquidity and earn rebates, which are commissions on the liquidity they provide using small lot orders. Not all of their orders are filled. Tons of them are canceled. HFTs also use AI to find anomalies in order flow and AI to track what you're doing in social media and public chat rooms and chat groups. What news are you watching there? And then when they see what you're doing, because you all want to be in groups and you're public and you're telling everybody what you're going to buy, or your guru is telling you what you're going to buy, they go, all right, we'll front run this, and they have milliseconds to do it, and they do it all the time. Sell-side institutions, the giant money center banks and giant financial services such as Goldman Sachs are the sell-side institutions. They trade short-term. They're not allowed to trade long-term unless they do it in their investment division. The floor traders of the sell side are the most talented and experienced traders in the world. Sell-side, floor, and proprietary desk traders trade in all financial markets. They use multi-leg orders that fill on the millisecond and route on the millisecond. The sell side and buy side have a hidden war that has been going on for many years now, since 2008. Sell side institutions got money went to the government and got down on their knees and pleaded, oh, we're so sorry, we're stupid. And we sold mortgage-backed securities that were going to default, and our credit default swaps are way in excess of what we can pay. The buy side institutions, no, the government said, oh, that's okay, banks, we'll bail you out. Mutual funds went to the government also and said, we need help too. And they said, tough cookies, you're on your own. So the mutual fund industries dumped the sell side. They never buy from the buy side anymore. The giant ones do, small funds do. And they started doing ETFs, and they saved themselves. So there's a war going on. The buy side is all about increasing the wealth of the middle class via pension funds, and they make a lot of money doing that. So they're not the good guys, but they do worry about protecting the wealth of the middle class. Sell side is all about profit for the bank. So they're completely contrarian. Small funds managers. The small funds management companies are firms with less than 3 billion. It will soon be 5 billion in assets under management. Giant buy sides have trillions of assets under management by comparison. How many billions are needed to make 1 trillion? 1,000. Okay, so it's hugely different. Small funds companies, also known as asset management firms, do not have the experience, expertise, or skill of the giant buy or sell side. A lot of times they're self-taught salespeople. Smaller funds managers are a big group of 10,000 to 15,000 companies and are often franchises. The franchises are like Edward Jones and that type of thing. And they're in your neighborhood. They're just salespeople. They're told what products to sell, and they just sell you that product. You're 55 years old. Okay, this is the product you're supposed to buy. Their limited experience and lack of formal financial services degree puts them at a disadvantage. Then there's the little, really teeny tiny ones that are mom and pop operations that are small funds managers managing family or friends, and they really do a bad job. They often are on the wrong side of the trade, and they're selling when they should be buying, and they have no clue what's going on in the market. They follow retail news and are very emotional. The downtrend is not the opposite of an uptrend. When stocks drop in price, they tend to fall 2 to 3 times faster than a stock rises in price. This is because the falling stock doesn't need more sellers to fall down to the first tier of support where buy to cover orders are waiting. As buying by retail groups evaporates, pro traders take profits before the stock starts to fall in price. Oh, we have a run up, and oh, things are getting smaller and weaker and weaker, and pros are going, okay, time to sell for profit, and we'll just kind of get in here and we'll do a little nudge right here, and we'll wait. And the stock collapses and they make huge profits. Then pros immediately sell short orders with a pending buy to cover orders well below the current price. And I can assure you they're way down here at the support levels. Momentum to the upside requires more and more buyers. Momentum to the downside accelerates as fewer buyers purchase a stock. If there are far more people wanting to sell a stock and no buyers, the price plummets rapidly because there's no buyers. So, how a top downtrend begins. Dark pools begin the hidden slow rotation to lower inventory of a stock before the company revenues start to decline. Typically, the stock continues to move upward and speculation starts as the stock reaches new all-time highs, and you're going, oh, let's get into this stock. It's going up, it's going up, it's going to keep going up forever. It's like a rocket, folks. Rotation is the slow and steady selling of stocks before a downtrend begins. They're moving stock money out of one stock into another stock. Dark pools use special time-weighted at price, average price orders that trigger on a specific penny and do not alert or cause huge waves of volume. Dark pools are selling into a new high or speculative run that are created by retail groups and smaller funds buying at higher and higher risk. When you're buying and the stock is an extreme angle of ascent and it's going up like a rocket, who is selling? The dark pools. The shift of large lots from buying to selling alters the balance of power. It shifts it to the buy side. So now, since the dark pools are moving from buying stocks to selling stocks, what's going to happen? It's like a domino effect. At some point, it goes down fast. It also triggers heavier than normal HFT selling and pro trader selling because the pro traders are after the dark pools. They know that if they stay with the dark pools, they'll always be on the right side of the trade. HFTs follow pro traders. So it's a piggyback effect. As selling increases with a speculative buying, volatility begins to alter the trend. Volatility signals the top is underway and that the smaller lots are trading against the giant lots without realizing what is going on. So we have a nice bottom that the slowing down occurs early. They start buying in before the final low and they pause the stock and then it starts to move up. Pro traders nudge right here, nudge, 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 up it goes. Nudge, 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 up it goes. Hold on, gaps up. Okay, now it's time to sell. And then we have a flat top and it trends down, but a little support in here kicks up. So, oh, it's a better buy. We're going to buy this stock. Blah, blah, blah. And there's the sell short nudges right here. And they're not worried about that at all. And it gaps up and runs down. And then more buyers say, oh, let's buy on the dip. And then there's the little nudges, selling, selling, selling. And then boom, down it goes. And boom, down it goes. Like a rocket with no fuel. And the indicators we have that I'm not showing here warn of that before it happens. Void of buyers. Contrary to popular retail traders' myths, the downtrend is not an inversion of the uptrend. Get that out of your mind. Put a yellow sticky notepad on your mirror or your desktop and say, it's not. The two are totally different. Uptrend requires propulsion, more and more buyers as the stock runs up. Like a rocket, propulsion drives price upward so long as there is fuel, aka buyer demand. When buyers evaporate, the stock files like a rocket because there's already downside selling in there. The downside runs do not require more and more sellers. Sellers do not drive prices down until the smaller funds and the retail sell shorters get in there. Then they start driving. In the early days, it is a free fall. Sell-side institutions, pro-traders, and HFTs do not drive price down. Hedge funds do not drive price down. Stock prices free fall because there is a void of buyers and everybody's going, what's happening? The market's going down. I thought it was going to go up. And they don't do anything. All of the short sellers' orders have buy to cover orders placed far below the sell short price level. Why would they place it high? They can make a lot of money buying to cover when it hits the buys areas. Thus, upside price gains require buying momentum. Downside price action falls faster without seller impetus until the selling is getting toward the bottom where the buy-side institutions are waiting to buy. So you have a fast-moving stock up, it tops, it forms another top, it has a run down, then it has a buy on the dips and runs up, but it runs down. Now we're getting into support level. Okay, now the pro traders are way too smart to do stupid and try to sell short into the buy zone. And we have a buy zone right here because that's where fundamental values are, right in this area. And if you learn to read the charts like I teach my students, you will always know where the buy zone is. So that's important. Swing style selling short. Why selling short is legal? I'm always asked this question. The stock market is obligated by law and statute to fill all orders on a timely basis by 1 minute. So selling short is the selling of a stock you do not own and must return to your broker. You borrow the stock, paying interest until it is returned. If everyone is selling stocks, then someone must buy the stock. Professionally used sell short orders sent to queues before the market opens, and then a buy to cover is placed much lower as at a technical support level where they know that there will be support. Why selling short is a necessary and important part of the stock market. Without sell shorters, markets would go into an extreme, severe, deep free fall without any buy to cover orders, as no buyers are going to buy a stock that is in a free fall. Why would you do that? It would not happen. Why you need to learn to sell short successfully. Selling short gives swing traders more trading opportunities. Selling short actually has higher profit potential as stocks tend to gap and run down even faster than when they move up. This is due to HFTs gapping the stock down at market open. Small funds VWAP orders, volume weighted at price, rush in after the gap down and run down. They start selling and pushing price down because they're selling in panic. Then smaller funds orders trigger and accelerate the selling order, volume increases. So at that point, volume is increasing and the smaller funds VWAP orders are driving the stock market down further. Fortunately, we have curbs and buffers. So that's how it works. Sell short terms, you need to know. HFT spikes. Sudden huge black candles or gap ups or huge gaps with extreme high volume are the result of HFT pre-market filling of the queues with sell orders. Bounce, a temporary move up caused by buy to cover action by professionals or buying on the dip, retail investors. I'm buying on the dip into a downtrend because they don't read charts. They don't know what they're looking at. They have no idea what's going on. They read the news. Reversal signal, a candle that reverses the trend, ending the correction. We have support the market activity by the buy side. They create these huge, this is the only time their candles are huge, when they see that they need to support the market and keep those 401k owners from panicking and running and getting their 401ks out of stocks. They will come in and support the market. I teach all about that. Shift of sentiment, dark pools accumulation, ending the uptrend or downtrend. Buy to cover, closes the sell short position. Buy on the dip, candle formation that creates small run-ups that can cause whipsaw trades for sell shorters, especially day traders. Rebound or bounce up, temporary upside price action within a downtrend. Sell zones are the dark pools, slow rotation before topping action. Angle of ascent or descent, the steepness of the up or down trend toward support. So if it's angling at a 90 degrees, it's not going to sustain. If it's angling at a 90 degrees, it's not going to sustain. It can't. Downtrending patterns you need to learn. Indicators need to be adjusted for a faster sell-side activity, usually the period settings. Typically, indicator periods need to be shorter. Do not truncate your volume bars and pay attention to fading volume patterns, exhaustion volume patterns, and void volume. Volume tells you when the buyers are running out of steam. There are specific candle patterns that are unique to the sell side that are not taught in the regular Japanese candlestick books or seminars because they are new. They've just started to happen in this modern market that we have after the pandemic. These are a few of them. Downside pro trader nudges, nesting downside, sandwich candle downside, resting day candle downside, inverted reversal. That's just a few. I have a whole candlestick course on the new candlestick books because there are so many. The new candlestick patterns are due to the changes in market structure over the past 2 decades, but particularly after the pandemic. Not every rundown is tradable. Low risk entries must be used. You need at least, when you're on the upside, you can do a 2-to-1 or a 3-to-1 or a 4-to-1. But when you're on the downside, you need to do a 4 to 5-to-1 profit to risk ratio. And if you don't know what that is, you need to take my classes. Use technical support levels for stop losses, not percentages, unless you want to donate your trading capital to a pro trader in HFT. If you're using percentage stop losses or you have used them and you're going, gosh darn it, stop losses just don't work. I'm not going to use them. Bad idea. Stop donating your money to the professionals and the HFTs by using percentages. Why? Because your retail broker has to light your order before sending it to payment for order flow market makers, because brokers don't fill your orders anymore. They haven't in a long time because they can't afford to keep that kind of inventory on hand to fill your orders timely, because they're giving you trading for free. Now, where do you think they're going to get their money to stay open? They're not nonprofit, they're for profit. They get payments for sending your orders to the market makers, and the market makers take your orders and fill your orders within a minute. It's all done on the millisecond scale. So you're typing in your order or your percentage stop loss, and everybody's seeing that you're doing that, and they're going, okay, let's front run this, and they're on in the millisecond. You're on the minute scale. Stop doing that. Your professionals are going to have their stop losses at support levels. You should too. Common sell short mistakes. Retail traders often make common mistakes. Using retail market news for stock picks. We have AI algos from HFTs. What do you think they do before the market? They look at the news. They look at how people are reacting. They look at social media. They can see everything you're thinking or talking if it's public. Everything on the Technotrader side is private. Nobody can see what my students are talking about or seeing, and our chat rooms are full of interesting information because we have a lot of professionals talking about the market. Chasing HFT runs and gaps. These usually are one-day events. So HFT gaps a stock down and then it runs down. And so if you're chasing it, they're buying the cover. So you're going to get whipsawed. Trading against the pro traders rather than with them. This is the most common mistake. You are trading against them. Stop doing this. Not identifying dark pool sell zones as the stock is still running upward due to euphoric speculation. So you're buying in this euphoric speculation, and then you get whipsawed and you have a big loss. And you go, oh, the market isn't fair. The market makers are taking me out of there. Oh, it's so unfair. No, it's not. You just don't know what you're doing. You got to fix this, because You matter. You are important. When you keep losing money, it hurts the market. That's why in my retirement, I'm not traveling all over the world and seeing everything. I've already done that. I'm trying to help you get better at trading. You need this information. I'm a professional. I come from the buy side. I know what they're thinking. Not recognizing dark pool buy zones, which indicate bottom has begun and you should stop selling short immediately and buy the cover and get ready for the bottoms and the big, huge pro trader the nudges that cause these big runs out of a bottom. You see those and you go, what happened? And you take even bigger losses on your sell shorts. Using a trading strategy rather than a complete trading process. You have to have a complete trading process. And folks, strategies alone don't work. If you're a swing trader, there's going to be about 20 different strategies you can use. Option traders, 50 different strategies you can use. There's all kinds of things that you can use. So a strategy is applied to a trading style, which is applied to a trading process. You have to have do you think this pro trader doesn't have a process? He has a process. Actually, he has an AI image, but I think they're so cute. Trading both sides of the market. Technotrader students succeed during uptrending and downtrending markets because they have learned to trade both for the short term. Students are taught to simulate trade to hone their skills. You must simulate trade until you have a 70% success rate at a minimum. And you should always be using a simulator, no matter how long you've been trading. I use a simulator whenever I see new candlestick patterns, or I've tweaked an indicator, or I've done something else. I practice to see how it's going to work in the live market. Back testing doesn't work. Back testing doesn't work. You have to forward test. That's what all the pros do. Selling short can be a high income generating tool. However, you need to first be successful at trading the uptrend or bull market. Then you can learn to sell short. That's why selling short training comes at the back end of my courses. When you learn to trade the Technotrader way using our methodology and processes for consistent success, it no longer matters whether the market is in a bull or bear cycle, or an uptrend or a correction, or whatever is going on. You can even trade volatile market conditions. You have all these opportunities to trade. You have all the opportunities in the world. You can make money in both. No more recession worries. No more global tariff worries. No more trade war worries. No more worries. The only place that you can be sure of always being able to make money, if you know how, is the stock market. Use MetaStock charting software. It is awesome. It has everything in it that you could possibly want. I'm not right for everybody. I'm not right for everybody. I'm right for a certain group of people who want to trade as a business, who want to make lots of money, who want to be semi-professionals. During volatile markets, as we've had recently, you should be able to quickly adapt for that trading week from buying and long, or which is what you do. Buying long is the term for trading upside, and for an upside run profits, and selling short is for downside markets. So I would say, are you buying long or are you selling short? And you're a swing trader or a day trader or an options trader. Are you buying long or are you selling short? Those are important terms. Those are professional terms. At any time, there are stocks trending down versus stocks trending up. There is at no time when all stocks are moving in the same direction. Even during a pandemic or even during a trade war scare, there are always some stocks that are moving up because they're in bottoms and they're well below their fundamental values. Or if we're in an exponential moving market upward, there are always stocks that are in their downward cycle that are still trending down. There is no absolute harmony. It's statistically impossible. So let's summarize. Selling short is a way for you to make money continuously in the stock market, regardless of whether the market is trending up or down or sideways. Platform position trading is a great way to do trading when the market is going sideways for long periods of time. This probably will happen after all this volatility, and it's a great way to make money. But my position traders make a lot of money. There are always opportunities to make money in the stock market. There are always opportunities to make money in the stock market. This is why trading stocks can be so lucrative all the time. Swing trading stocks is recession proof. Don't worry about it. There are always opportunities to make profits trading stocks. It is simply a matter of learning the subtle nuances of the downside. And when you learn them, you can trade. So we have these, you can see the nudge, and you can see the nudge, and then it runs down. And you just need to learn this. And this is a top. This is a flat top. I teach these flat tops. And the power is to the downside. And so it gaps, and you're already in the stock. So it gaps, and you make a lot of money, and you hold on, and gaps, and makes a lot of money, and you're going, wow, this is fun, and this is easy, and I'm not sweating bullets anymore. I'm having a grand time. And I love my MetaStock charting software. To be successful as a sell shorter, you must have consistency in your profits. You must. The point gain potential for a sell short trade is significantly higher than a swing style buy long trade. Why? Because the stock falls faster and it falls deeper. And when there's a bounce up, it can be a significant size bounce up and take out a lot. You can't do little penny gains and say, okay, I'm going to take 5-cent profit and I'm going to be happy for the day because I made $200. It's like, raise your expectations, folks. Hello. $200? That doesn't even cover your expenses. Why even bother? Come on, raise your expectations. You expect so little for so much effort. I mean, come on. Raise your expectations. However, there is one aspect of selling short that is often overlooked. The majority of the investors, traders, and institutions trading stocks want the market to go up. Therefore, you must always, always be alert that the underlying sentiment is there. When panic ends, dark pools begin their quiet accumulation, buying stocks at bargain prices, which create the bottoms. And they start buying up in here, and they slow the sell down, they slow it down because they're buying heavy. And then all of a sudden it starts moving up. You have to know that and understand these. These are chart patterns that I teach. So I'm very vocal about what I feel, but I'm very passionate about it. Never sell short into a buy zone. Never, never, never sell short into a buy zone. You'll get whacked really big. Swing short and smart. Market condition analysis is important, and relational technical analysis is something. These are things that I have developed and I teach to everyone that is a student. Trade management planner is an important thing that you should plan every month. Daily trading journal, if you want to trade as a business or really get into trading and really make a ton of money and be able to take that spouse out and she can be smiling all the way to a huge expensive dinner. Yes, MetaStock charting software that includes the scans and sorts that we have created and all their other great software that they have. Hybrid leading indicators that we have embedded in MetaStock that have been designed specifically for MetaStock charting software only, that have all of the hybrid leading indicators that I have designed and developed, and a programmer wrote for me to put in there. Controlled bracketed order types. Howard Johnson. One day I came home. Used to do swing trading, and then I'd leave because I didn't have to watch the markets all day, and I made a ton of money. I would come back, and I was ice skating at the time. And I come back and I walk into Howard's office and I go, who are you talking to? Because he's laughing and talking, and he says, the market maker, Herzog, he just loves my order type. And I'm going, my jaw drops to the floor. You're talking to a market maker from New York Stock Exchange, one of the biggest at that time. It's like, what are you doing? He says, I want to make sure my order type was good. He loves it. Now I let him talk on. When he hangs up I said, what the heck are you doing? Market makers don't talk to people like us. He says, well, he did, and he loves my order, and he's going to use it on his floor because he asked permission. He asked permission to use my order type. And so the professional side has been using Howard Johnson's order type for all these years, 27 years, and they've modified it and changed it a little bit. And you get that controlled bracketed order when you become a student. And it is magnificent because it keeps you out of whipsaws. It keeps you out of all kinds of trouble. Buy entry signals, sell short entry signals are an imperative. The new entry signals, you need to learn them. Yes, you have the Japanese candlestick books and you have all of the great candlestick trainers that teach through Metastock, but you don't know the new ones. Because I am the one who searches for the new ones and tries to understand. Now, why did that move up? Oh, that's a sandwich pattern. That's a nudge. That's a nesting downside. That's going to continue the downtrend. And then you learn that. Exit signals or trailing profit stops for trading profits. You must either exit the stock precisely as you choose, or you must use a trailing profit stop. And you must know where to place them in terms of your trading style, risk tolerance, and the chart support levels intraday or day. Run gain potential calculation. None of you do this. It's like, please. How many points can the stock run? Do you know? When you buy a stock, do you know how many points you can have a high probability of gaining? Because if you don't know this, then you're just gambling. Trade calculator for accurate risk analysis, stop loss placement, entry, price, share, lots, size, price, range, risk, profit ratio, estimated hold time, and exits. We have a trade calculator that Howard Johnson created. It is awesome. He did it for his own trading. And I said, we need this for our students. So we share it with our students. It is amazing. And no, you can't get it by itself because you need the education that comes with it. So TechniTrader selling short technical analysis. TechniTrader is the only educational company that teaches a complete process for selling short. What market condition is present at that time? Where are the technical support levels for that where it's going to bounce up? Which market participant or participants is controlling price at that time? That tells you how price is going to behave. Sell short candlestick entry signals that were not taught in the Japanese because they're brand new. Hybrid leading indicators and the variables of selling short indicator settings that are in the Metastock charting software. I designed them. Sell short risk analysis, run gain potential, point potential, and profit versus risk all has to be calculated using your trade calculator. Where to place stop losses using professional side support levels. Exit signals and exit strategies. You need to know when you want to go. You're not going to just go, well, maybe I should get out because I'm losing money. How to select the lowest risk stocks using the TechniTrader Trade Evaluator tool. We want to make it easy for you. We don't want, trading should be fun. It should be exciting. It should be, you do the little jig at the end of the day or whenever you do it, and you're happy because you're making money and you don't need to worry anymore about all the stuff that's going on in the world. Trade management planner for monthly income without the hassle. We have a trade management planner. Howard developed it, and I say, our students need that. And he goes, really? And I said, well, they can plan their monthly income. And you know what's so surprising to me is that when they fill out the trade management planner, which only takes a few seconds, a few minutes for the whole entire month, they go, Martha, I don't need to trade as many stocks as I thought I did. And I thought, zip. You trade too much and then you lose money instead of trading selectively and making the highest profits with a limited amount of orders. You don't need to trade so much. If you trade less, you make more money. Yeah. And I love these tools because it saves me a lot of heartache. Trading tools and resources. The final missing pieces for trading success are your trading journal, as this provides the written evidence of your activity as trading as a business. I know there are some of you out there that want to do this. And also historical data to consider and compare over time. Your personal trade management planner that provides a monthly plan for your monthly trading goals and number of trades, capital required, stock price range, risk assessment, profit potential. It's all in there. You just plug the numbers in and it spits it out for you. Trade calculators and other tools that streamline it. You plug the numbers in and it spits out all the answers for you. Scan, sorts, and layouts and parameters for your trading style. We can customize them in Metastock for you. Trade simulator. You must have a trade simulator that isn't a game. Market condition analysis scans that are provided in Metastock. Controlled bracketed order type that's taught in our courses. A semi-broker account for selling short if you're going to be a business and take a full advantage of the IRS and other nations' opportunities to trade all your expenses. Your meta stock, your courses are all expenses, but you can't do that unless you're a semi-professional. Daily market educator discussion. I have the morning market reports I write every day at 4 o'clock in the morning. I publish them for all my professionals, internationals. It tells you how the day is going to start and what to expect in market conditions and how to trade for the day, and a couple of stocks to look at and study. Daily market educator discussion groups and commentaries, communities within the TechnoTrader hidden canvas. It is closed only, student only. Fabulous. We have professionals, we have retail. Everybody just loves it. There's lots of discussions. It's super fun. So market analysis trading style scans are embedded in Metastock. These scans give me the momentum for the upside every day and for the momentum to the sell side every day. And I want to compare the momentum to the upside versus the downside. So where is the bias? Is it biased to the upside or the downside? In volatile markets, it's critical because you can't always tell where the bias of the market is. Market open and the futures tell you how the market's going to open. It doesn't tell you how the market's going to go the rest of the day. And a lot of you should be going, yeah, you're right. Yeah, you're right. Because the stocks start down and then they go up, and the indexes start up and then they go down. Yeah. So you can't really, futures tell you how the market is going to open. It doesn't tell you how it's going to do. My scans that are embedded in Metastock and designed for Metastock specifically tell you by how much momentum to either side. And I teach how to read this very technical thing I developed 28 years ago because I wanted to know what it was. Then I say, how many stocks are being accumulated by buy-side institutions, the large lots, what's going on with the large lots. Then I say, how many stocks are in bottoms, what's going on in the bottoming market, because I know that bottoms where the buy sides are starting and the pro trader nudges are going to be. And that tells me how active the buy side institutions dark pools are, and also how strong the bottoms are developing, and provide some ideas for students. Then I say, how many stocks are in consolidation mode? Because the pro traders create consolidations. They trade on the pennies, little tiny pennies. Since we got away from fractions in 2002 and we started chasing decimals, the market's become too efficient. Wouldn't you guess that? That's very weird, but it has. So we want to know where the consolidations are and where the pro traders are setting up nudges, because it'll go up or down from there. Then I want to say how many stocks are in turning trading ranges, and see what's going on there. And then I want to know how many stocks are overbought or were sold versus stocks that have price improvement. I have I took RSI versus RSI and I made it into a really cool indicator, and I set it into the scans. So it compares current price back so many days, and it can tell you whether the price improvement or not. It's really, really cool. And we have leading indicators embedded in Metastock. Simply awesome, hybrid leading indicators. I designed them and had a professional put them into Metastock for me. They're awesome. So we have a 24 hours to claim your gift. Now, I wasn't able to talk about a lot of things in this, but if you register, you can find out more that I wasn't able to include because I only had an hour, and I could talk for 5 hours. I have sometimes on my student mentoring sessions. And it's a free starter course. And it's free to you. It's a $99 value. And this is full of information, just like this was full of information. You get to choose a topic to learn. You can apply the code. Jeff can put in the code and put in the link, or you can use your phone and tap on this little icon here. And it's free access for 1 week for one course per person. And this will be an added addition to what I've already taught you today. There's no requirements, like I said. I'm looking for people who really want to be successful in the market, who want to trade and not have to trade 8 hours a day, want to really understand the professional side of the market, want to become semi-professionals or trade as a business and be able to take off all those expenses and have higher income. I'm looking for those people who know they can succeed if they get the right education. Because my education is totally different than everybody else's. I can guarantee it because I've had thousands of students tell me, I wished I'd found you a long time ago because it really would have made a huge difference. I don't know why I took so many courses. And the courses are designed to be affordable for everyone. We even have module courses and things. But you do not, nobody appreciates something that's free as much as something they have to earn. Think about the kids that go to college on a free ride. College is just an extension of high school, and they don't take it seriously. But that kid that has to pay his way through college and earns it really digs into the education and really appreciates it and becomes hugely successful. Where the kids who just had a free ride complain because they can't get a good job. So this is the same thing here. You want to be part of a community of people who are same as you, extremely interested in being successful and knowing that if they get the right education, they can do it. Okay, I have about 5 minutes to take questions or answer anything that you might be interested in hearing about.
We have some questions, and we have a question and a couple of comments. So I'm gonna go with the question first. In the past, Nicholas says, in the past, you've spoken about the importance of time. Could you elaborate on the techniques you use to time the price of a chart movement?
Okay, there's timing that's on the millisecond, and that flow, you can't see that. There's timing on the 1 minute, 5 minute, 10 minute, and all the way through hours to day, week, monthly, quarterly. I study all the time frames. Right now, I can tell you that the cycle that we're in right now, caused by the trade wars and tariffs, because it was an anomaly. It's the closest thing I can come to what we have, the event we had right now, is actually the pandemic. The chart cycle pattern is almost identical, and we haven't troughed yet. So that tells me that unless some miracle happens, we're going to have a cycle trough more. So we're going to have more downside. Whether it goes below the 2022 support level is not likely, because the buy side institutions want the 401k money to stay where it is and not have 401k panic. So they will support the market at that level, but we will have this impending down. That's why I chose this topic to talk about. So I study all the different time frames. When you're on, if you're a day trader, you have to study the minute scale, but what you're missing is, and that's the whipsaws. And I looked at the other day, I looked at this and I thought, everybody who day traded lost money, because if 1 minute up, 1 minute down, 1 minute up, 1 minute down, pause, pause, pause. They were slowing the market down with their curves and buffers, and the computers automatically, if it starts selling too fast, they'll halt the trading of that stock. And I'm seeing that. And I'm also seeing total voids. Here we are in a big name company, and there's dashes. That means nobody was trading this huge company with all those outstanding shares. Nobody, unheard of. I mean, this is really weird stuff that's going on the minute scale. So I'm trying to get more people to get away from day trading, because it's just too hard, and do swing trading, which is on a daily scale. And you can usually do an enter and either trade one day over to the next day and then sell, which is not a day trading. If you buy one day and sell the next day, it's not day trading. Or if you buy and hold, because the run gain potential up or down says it's got 5 points, 10 points, 20 points before you have reached that resistance or support level, then you would hold for 4 or 5 or 6 days. The average for a swing trade is 3 to 5 days now on the upside. It's 4 to 6 days on the downside.
Cool. Jay out of YouTube wants to know if you have a Metastock add-on.
I'm sorry, say again.
Jay wants to know from YouTube if you have a Metastock add-on.
If I have a Metastock add-on, everything's embedded in Metastock. So as you become a student, then you have access to all those things. The problem is what I teach is complex, but I've simplified it. So if you just get the stuff without the training, then you're going to be struggling. You won't be able to figure out how to use it because it's very subtle and it takes quite a bit of education. The tools and the scans and everything are worth twice as much as what you pay for the course, right? So if somebody wanted to buy it individually, they'd be on their own or have to buy a support package. So the better deal is to get the course because you really get a good deal.
Yeah. So it's fair to say that the tools that you've developed, and you've done a really good job with them, are included with the courses you provide.
All of the things that I mentioned today in this webinar are in your student course. They're part of that. They come with the package. There's a package of training, and then all these tools, market and trade management planner, and all these things are included in that course. Yeah. There's no add-ons. You buy, and all the stuff you need is in that course.
Correct. Yeah. Reg says, I really appreciate the education Martha provides. Now, as an old guy, I wish I could remember it better.
Well, I do believe that these are posted on YouTube and the Metastock YouTube channel, and you can watch them over and over and over again.
Oh, I think he's actually got access to your courses too. Reg says you're fantastic, both the knowledge and the style of education you provide.
Yeah, well, I'm always here to remind you. I'm always here. I mean, one thing about being a teacher is you have to think of 10,000 ways to say the same thing. And then all of a sudden, you'll get it. And I take ballroom as my activity, and I'm learning some really, really difficult moves. And I know that my teacher and my instructor has told me this many, many times. And then all of a sudden she says it in a different way, and I'm going, I get it. So I'm constantly taking classes to remind me of what it's like to be a student, so that I will always think, how can I rephrase this so that suddenly the light bulb comes on? And when the light bulb comes on, then you'll be able to remember it.
Right on. That's the questions. That's the feedback. I have a little bit of feedback. I think you did amazing.
Thanks.
All right. Thank you very much for joining us, Martha.
Bye.
The links are in the chat. Go ahead and click on them. Claim your free lesson. And you're going to want to do more lessons. That's the only downside to getting a free lesson from Martha. You're going to want to do more of them. Great job today, Martha. Appreciate you.
Thanks.
All right. Very cool. We go ahead and do this. We're going to kind of move things along a little bit here. And let me go ahead and make me the presenter real quick as we get going here. Let me make sure we've got the correct screen sharing. Yeah, okay. All right. Great job. Really appreciate that. As always, if you have questions as we go along today, make sure you ask them in the chat. I do want to say thank you to Stocks and Commodities Magazine for sponsoring the event. Stocks and Commodities Magazine is a great magazine. I get it delivered. I've had it delivered to the office here 27 years now, every month. And you know, you're here, you're in the middle of a conference that's lasts all week long. You know the importance of kind of keeping up to date in terms of the new technical indicators and that kind of stuff, learning, growing. I think you're either moving forward or you're moving backwards. Stocks and Commodities Magazine is a great article that kind of keeps you up to date on the latest technical analysis. And you can find out more if you want to go to traders.com. When you subscribe, I think it's like $80 a year. It'll give you access to all 17,000 trade articles. So I want to say thank you to Stocks and Commodities for helping support and sponsor the event. They've been doing it forever. So we're going to kind of go over here. One of the things I will remind you as we kind of get through this, if you're watching us on YouTube, at the top of the chat, there's a pinned comment that says to be eligible to win prizes, make sure to register and a link off to our registration site. Make sure you do that. We're about to give away a prize. And in fact, let's see, Kelly, our next speaker is up here. I'm going to have him give me a hand with it. Kelly, do you mind?
Hey, man, if I get to help give away a prize, I'm excited.
I'm going to give away
Actually, the only reason I'm here.
I'm going to give this book. It's called Candlestick Profits, Eliminating Emotions. This by Steve Bigelow. Steve Bigelow, big friend of Metastock, huge part of the Metastock partner, good friend, passed away a couple of years ago. One of the biggest mentors I've had in the market. And we're going to give away a free copy of his Profits Eliminating Emotions book. So let's go ahead and do that. Kelly, you know what I'm going to need from you is just a number. Let me go ahead and I've got it all ready to go.
Is that all I am to you as a number, Jeff?
No, that's all I need from you. That's what the number that I need from you is anywhere between 1 and 5181.
3666.
Yeah, I don't think you used a random number generator to get that.
I did not. No, well, this one.
Milo. Okay, the winner is Milo C with a Yahoo address in the US of A.
Awesome.
So,
Congratulations, Milo.
Milo, I don't know that there's many registrations under Milo, so if you're watching now and you just won this book, next week I'm going to send you an email. I'm going to be like, hey, you won a book. It's legitimate. Make sure you respond to it and make sure I have a good address so that when I go to the post office, drop these all off, one gets sent to you, Milo. So, Kelly's going to talk a little bit about Metastock. I want to remind you, Metastock's been rated the best software program in its price category for 32 years in a row. I love the ability to do scans. I've ran a scan already. I looked at some stocks. I bought one. You can use it to scan the market. That I think is one of the things that's, even after 27 years, super, super helpful for me. Can help you test trading ideas. Use a forecaster we have a patented forecast that can help you predict probable price movements, give real-time commentary alerts. We have really a delayed version of Metastock. We call it Metastock DC. It gives you daily charts, weekly charts, monthly charts, but all of those charts update during the day. Usually it's on a 15 to 20 minute delay, depending on the exchange. That's only 75 bucks. We have a full real-time version that's powered by LSEG. It has Reuters news in there. It's really an institutional quality service. It starts at about $265 a month. What we're doing as part of the promotion is if you buy a month, you'll get the second and third month for free. Kelly, I'm not too good at math this early in the day, but I think that's about $25 a month. 75.
The end of day? Yes, sir. That's right.
So,
Excuse me, the daily charts. It's not in today. It used to be in today. It's not in today anymore.
And that's a huge upgrade. Like, it's such a nice thing because everybody wants to be able to go in right before the close and find those trades. So, Kelly, I lost your camera, I think. Anyway, you can do that at metastock.com/conf promo. You go to metastock.com/sales chat, and you can also call 800-882-3040. Did you drop off real quick?
I closed the blind behind me, and so I turned off the camera because it was making my lights flash in here. So, sorry.
Here's a big picture of Kelly. This is actually a pretty recent one. Look, he's got a suit on. Kelly is actually technically my boss. He's worked with me for a number of years. Great friend. A very, very good boss, actually. And he's going to talk to you about finding the right strategy in 2025. So, Kelly, I'm going to go ahead and kind of get things moved over to you.
Awesome. Well, I think that's about the only time I ever wear a suit is when I take my picture.
Yeah. You have to have one, funerals stuff.
Yeah. All right. Let's see. Clean. Just getting there. All right. You see me? You got it? All right. Okay, well, hello everyone. Welcome again to the conference. Thanks for being here. We love the conference. It is such a great opportunity to gather traders together and talk about the market, what's going on. I mean, obviously, we all know there's a lot going on in the market right now. There's a lot of volatility. There's a lot of things going on. And what I want to do today is just talk about ways that we can really use tools that are available to us to identify good, strong trade opportunities. And that's what this presentation is all about. Okay, and that's really hopefully what we're looking for, good, strong opportunities. So I'll start with my disclaimer that this demonstration today is designed to instruct you in using Metastock and accompanying software plugins. It's not a recommendation to buy or sell, or rather guidelines to interpreting and using the specific indicators and features within the software. The information, software, and techniques presented today should only be used by investors who are aware of the risk inherent in trading. Metastock and its employees shall have no liability for any investment decisions based on the use of their software, any trading strategies, or any information provided in connection with the company. Metastock and its employees do not endorse the purchase of any security, nor is it paid for the promotion of any security. No information contained in this presentation should be construed as an investment advice or solicitation to buy any security. So I'm not here to tell you to buy or sell anything. That's not what I'm here to do. I'm just here to show you how Metastock works. Also talk to you about the markets and some of the emotions in the market. So that's kind of where we want to start. Jeff just gave a great overview of Metastock, some of the tools in it. So I'm not going to spend a lot of time here. I want to talk about the emotions of the market and what's kind of happening in the market. But I mean, obviously, really quickly, we've been around for 40 plus years here, trading, selling Metastock, helping traders around the world. And we really do have a large regiment of traders around the world using Metastock to find the best trading opportunities. So let's talk about this for just a moment. And again, Jeff just talked about this, so I'm not going to talk about this either. I mean, Jeff did say he's been getting his copies for 27 years. I've only been getting mine for 23, so I feel I'm a little shortchanged. I'll make that up. Let's talk about the emotions in trading, okay? When we're trading, this is how we want to feel right here. We want this elation in trading. Yes, things are going my way. I am making money. All my trades are working. It is just, it's elation, right? And that's how we feel a lot of the times, right? When we are trading and trades are going our way, we are like, yes, this is what trading is all about right here. But what we also face is this emotion right here. That why is that trade doing what it's doing? Why is it going against me? Why is it starting to make me, I'm starting to go crazy? And we will feel this emotion as well. And this emotion at the end of it leads to this, just that dejection of what just went wrong in my trades, what just happened. And really, when we talk about emotions in trading, there's really a lot of two main words that we talk about with it. One is fear, and the other is greed. And those are the things that get in our way of trading. When we start to get into this emotional roller coaster of yeah to no to that gets in our way. And we do want to feel confident in our trades. We want that elation when things go right. But we don't want that to be the reasons why we make the trades that we do, or or how we actually do them. Okay, we want systematic approaches to our trading. We can step back and take that emotion out of the trade. I mean, eventually we all want to feel like this, and that's what we want to feel like. But taking the emotion out of it in the trade is how we get there. Okay, so Jeff actually did a survey yesterday. If you were here yesterday, you know the results of that survey. And it's kind of a survey about what profession is the best trader. And the answer to that from Jeff's quiz yesterday, and if you go to another one of Jeff's presentations, he asked the same thing, you'll know the answer. It's a pilot. Okay, and why would a pilot be a good trader? Well, the reason behind it is a pilot is someone who is very systematic. They're very rule-based people. If you have a pilot sitting in the cockpit up at the front of that plane and you're getting ready to take off, what do you want those pilots doing? Do you want them up there chatting about their day, how things are going, talking about their previous night in whatever city they're in? No. What you want them doing is sitting down and going through that checklist. Hey, is this working correctly? Is this working correctly? Is this set up? Is this done? And if that checklist is done correctly, then you are, odds are, going to have a good flight, right? That's what you want your pilots doing. One of the things I actually like to do is I watch a show that's called Airplane Disasters. I mean, I do travel a lot, and people always ask me, why do you like airplane disasters when you're on a plane a lot? Well, the reason why I like it is because what they do is when they're actually looking at the scene of a disaster of an aircraft, and these investigators come in, what they do is they go through and they will actually look at, well, what happened? What caused this crash? And they will work their way backwards and look through everything they can to identify the cause of that crash. Okay, so there's a couple of things that I find interesting here. Is one, when they go backwards, if it's not a mechanical issue, often what it comes back to is a pilot issue. And if that pilot issue goes back to not following their checklist, not going through what they were supposed to do before that plane took off. Okay, and that's where you kind of get this. And that's why I love that show, is because they really go through and they dive into it. And we can equate wrong. What caused me to be there? Did I not follow my checklist? Did I not follow my rules when I was trading? And that is a critical part of the whole universe of trading, is making sure that we are following our rules, no matter what they are. Do I have a set percentage when I'm getting out of a stop? Do I have a specific target of where I'm going? Okay, those are parts of trading. Okay, so I have a little survey here really quick that I'd like some answers to. So if you were, would you take a trade that works A, 15% of the time, B, 38% of the time, C, 66% of the time, or D, 83% of the time? So if you were sitting down to make a trade today, which would be your preference? Would you rather take a trade that works 83% of the time, 66% of the time, 38% of the time, or 15% of the time? So if you could put your answer into chat, I'd be really curious to know which one you would prefer to take. Okay, I'm just going to give you a second to put that into chat. And it's really, it's kind of a basic question, right? And it should be a fairly easy answer which one you would want to take, but I'm curious to hear your take on it. Okay, thank you, Neil. I've got a response from Neil. Oh, everybody's quiet. Come on, I got to get some answers. Which one would you prefer to take? The 15, 38, 66, or 83% of the time? Okay, I'll let everybody be quiet. I won't force you. Okay, so I'm with Neil. Neil said 83% of the time, and I'd agree with that. I mean, the one I would rather take is actually option E, which would be 100% of the time. That's the one I would love, and I think that's the one we would all love. But if I was sitting down and I was taking a trade, I would prefer to take one that worked 83% of the time versus 66, 38, or 15. I mean, if I could have a better representation of my trades and knowing that it's worked 83% of the time, then yeah, that's what I would prefer to do. Okay, so let's talk about maybe some ways that we can get there. How do we find that option D when I'm going through it? I mean, again, we all know we're not going to find option E, but let's see how we can figure out how to get to D. Okay, so here's what I want to talk about today. Trade identification. So finding that trade that gets us there is one of the big challenges that we face in a very non-emotional way, right? We've heard from some great presenters this morning. Rahul walked us through some great ways we can identify trades. Martha is just incredible in the way that she talks about the markets and way to find trades. So I'm going to show you some other ways that we can do this as well. One is I'm going to talk to you about how to find those best stocks, when you should get in and out, how to test your system before you spend your first dollar. Okay, so this is how we can find out if what we're looking at is in that 83%, or if it's in that 66%, or if it's in the 15%, because that way we know which trade is going to be the best one. If we talk about, hey, that option D is the one I want to take, let's find out how to get there. And then finally, how to add clarity to your trading decisions. Okay, so this is what we're going to talk about today. Now, first, how do we find trades? How do we identify trades? So what we start with is talking about indicator types, because indicator types are going to vary based off of the way you want to trade. Martha talked about, well, I prefer that day in, day out. I'm more of a swing trader. She doesn't really like the real-time trading. Are you more of a real-time trader? Are you more of a swing? Are you a position? Different indicators will let you trade in different ways. So first we need to identify that. So let's talk about that a little bit. So there's four main types of indicators that we can kind of group things into. So we talk about trending indicators as being a first one, momentum indicators as our second one, volatility, and then volume. Okay, so those are our breakdowns. So let's talk about some examples. So if we're talking about trend, we talk about things like moving averages, MACDs. These are very, very popular indicators. A lot of traders will have moving averages on their charts just to see what the trend is. They may not trade based off of those. You know, Jeff talked about Steve Bigelow. He would have moving averages on his chart that he didn't use to trade, but he had them on his chart because everybody else uses them, and because he wanted to see what other traders were looking at. So that's an important part of it too. Okay, MACD is a very popular indicator. Momentum, when we get into momentum indicators, we're talking about things like stochastic and RSI. With volatility, Bollinger Bands, average true range. And then volume, I mean, obviously we have volume as a volume indicator, but we also have things like on balance volume and the Chaikin money flow. Okay, so these are some of the different examples. Now, when we're sitting down and we're looking at a chart, we may think to ourselves, let's see, sorry, somebody's asking, where do you provide questions and answers? I got bumped off. And I can't scroll that down, Jeff. Oh, yeah, actually, Thetis, you're right in the right spot. This is where you type in questions and then we'll provide answers back to them. So you're in the right spot there. Okay, so when we're looking at a chart, we may get confused. Well, which of these indicators should I be using on my specific chart? What should I focus on when I'm looking at this chart? And if I look at this chart, this is just an example. This is Best Buy, taking a screenshot last year. And if I look at this chart, I may go, okay, well, you know, it is trending down right now, but it's also pretty volatile. You know, over the last kind of while, we've had some trading ranges, we've had some momentum, we have a little bit of everything going on. So what indicators should I use here? Should I use that trend? Should I use the momentum? Should I use volatility? Should I use volume? Or where should I focus? And that's kind of where we get into the whole thing of, well, what do I do here? So if I were to talk to each one of you individually, you may say, hey, I've got, I like this system right here, and that's the only way I trade. And that's fantastic because you're used to a system, you like the way that it works. So we're going to find ways to help you use that preferred indicator to find trading opportunities and see if we can find that high probability trade, because that's our goal. The other way we could do this is if you have specific instruments or specific symbols that you like to trade, maybe you trade the euro, maybe you trade the Dow, maybe you trade commodities, whatever it may be. If you have specific things, we can take a group of systems and put them against that specific symbol that you trade and identify the best systems that work. Okay, so that's kind of what we're going to do today. So let's talk about first. Let's just talk about examples of the ways that we could look at charts, okay? So now I have a chart open here. I have the Dow open, the DIA, the diamonds. And let's take a look at this and just say, okay, for example, if I were to take and put on the MACD, well, let's just focus on that today since it's such a popular indicator. We'll just take the MACD and we're going to put it on our chart. Now, Metastock will just say, okay, well, this is where it goes. It puts in its own window for us. And the MACD, if you're not familiar with it, very simple indicator. Basically, all we're doing is we're looking for a crossing of the signal line to give us a trade opportunity. So this would be a trade opportunity right here because we had a crossing of the signal line. Now, if you're not familiar with how this works, let's just take a moment or two. So this would be a sell. Here's a buy. Here's a sell. Here's a buy. So you can see these crossing of the signal lines. Now, the great thing kind of in Metastock, just to show you one or two quick things here, is if you're not familiar with something and you want to know a little bit more about it, you can actually right-click on anything and go to help. And it's going to give you a bunch of information about how that particular indicator or charting style or whatever it is that you are interested in learning about works. Hey, good morning, Maverick, over in YouTube. Good to see you. Okay, so if I was looking at the MACD here, I could click on overview and it gives me an overview, how to interpret it, how to look at the different parameters and what it's all doing, and going through some trading tips on it. Okay, so some great guidance here. Now, a lot of people that I talk to, you know, when you get into the math of different indicators, can be fairly complex, and a lot of people don't like to get into the weeds that way. So what I like to do is talk about our expert advisor for just a moment. Our expert advisor is a great tool that does just that. It gives you expert advice. So if I put on this expert advisor, you'll see it will actually show me those buy and sell signals that I had highlighted with my bar automatically for me. So it'll put them right on my chart and then show me where those buy and sells are. And then I can take it a step further and go into what we call the expert commentary window. So we'll just pop this open, and then I can take this window and I can dock it wherever I want to, and we can resize it out so it's just the way I want to see it. Okay? And then this will walk me through the trade, actually what I'm seeing on the trade and what I should be doing with it. So right now it's bullish, and it has been for 9 periods. Since it gave its signal, it's increased 3.5%. Okay, if I were to go back, you'll see that it'll also, when I get to it, it says 0 periods ago. That means it's in a current signal. Now, other ways that the MACD can also give you buy and sells is it can be overbought or oversold, and it'll tell you if it's overbought or oversold based off of the indicator right in this commentary window. It'll also tell you if there's been any divergences. So there's 3 ways that we can really get good signals out of the MACD: overbought, oversold, MACD crossings, and divergences. Okay, so we can get a little bit of that. Now, there's a lot of experts in here. I'm not going to spend time on this, but I do want to just show you some examples here. So if you're interested in candlesticks, you could put on our candlestick expert, and it'll walk you through what you should be doing based off of the candlestick pattern that's on your chart. So no matter how you trade, you can get advice on how to use it. Okay, so if you wanted RSI, I could go in and get the relative strength index. I could put that on, and it's going to tell me what exactly is happening based off of the RSI. So lots of great information that you can get out of here, okay? But let's go back to our MACD here for just a moment. So if I pull up the MACD again and put it on, and I was sitting down and I was getting ready to trade, well, let's actually maybe do this. Instead of looking at this particular symbol, let's actually find a current opportunity. Let's do that instead. So what I'm going to do here is I'm going to go into our market scanner. This is our Explorer tool. And what the Explorer tool will do is it'll let me select a system here, and it'll let me put it against a strategy and identify current symbols. So Jeff was talking earlier, hey, I've already run a scan, I've already bought something today. This is the tool he was talking about. He was using the Explorer to identify an opportunity. So I'm going to use the MACD here, and I'm going to put it against, you can see all these different lists. No matter what market you trade, we're going to have different lists in here. You can build your own list to scan against, whatever you want to do. So what I'm going to do here is the S&P 500. I'm going to just look at a daily chart. Now, Jeff talked about some of the differences in Metastock. We have our Metastock RT, which is like 1 minute, 5 minute, 30 minute, 60 minute tick, whatever time frame you want, intraday, plus daily, weekly, monthly, yearly, quarterly. Or we have our daily charts version, which gives you delayed market data during the day that you can look at on a daily, weekly, monthly, yearly, quarterly. Okay, so I'm running RT here, so you can see I've got the intraday time frames, or I can create my own. But I'm just going to stick with the daily. Okay, so let's go ahead and do that. So it's going to go through, and it's going to, let me pull this over here. It's going to go ahead and scan through that list of 500 for me, and then show me opportunities that are happening right now. I mean, I am using delayed data in this, so this is 15-minute delay. But this is, if you had real-time exchanges, it would be doing this real time and looking at it up to the second. But it's going to look through and find opportunities that are happening right now based off of that criteria that I've chosen. Okay, so you can see it's rejected out 90. So I'll have 50 results here, and rejects 453. So these are ones that I don't have to look at. I've just got these current signals that I can review. Now, if I come down here, I'm going to have some different options here. I can rank by buy. So if I click on the buy one and then click on it again, it will give me the current buy opportunities. Okay, so I've got 4 buy opportunities right now. If I rank by sell, let's see, I've got 14 sell opportunities right now. And then we've got a lot of OBs, which is overbought, 28 overboughts. And then for oversold. Okay, so let's come back up here. Let's go to our buy signals right now. And I'm just going to highlight them. I just hold down my shift key and select all of them. And let's open up these charts. Okay, so you'll see that they open up in this tab view in Metastock. So you can actually look at things in tab view, and you can scroll through the tabs to look at them, or you can click on these different highlights up here and it'll tile them or put them into different formats for you if you want them side by side, however you want. So let's look at them this way right here. So I've got these 4 opportunities right here for a buy, if that's what I was interested in. Okay, so I've got AWK, I've got WTW, XOM, and I've got Duke Energy. Okay, so I've got 4 opportunities giving me a MACD buy. Now, if I was going short, I could also pull up the 16 shorts and look at what's going on with those. And I could look at these and go, okay, well, if I look at this one, hey, this one does seem to be trending a little bit more than this one. It's got a little volatility in it. This one's had some big volatility in it recently. This one as well. Well, which one is going to be the best one of these for me to take? And that goes back to our question of, well, do I want to take one that's worked 16% of the time, 33% of the time, 66, 83, whichever one it is? How do I figure out which one of these is that trade? Okay, so let's talk about that for just a second. Oh, I'm going to go back to my PowerPoint. Okay, so we've talked about market scanning here because that's what we did. We just found opportunity. Okay, so let's talk about how we find that high probability trade. And to do that, we use a tool that's called backtesting. Okay, what is backtesting? Now, I know probably a good portion of you in here know what backtesting is. If you've ever backtested something, give me a yes in the chat. I'd love to know if we have or say no if you've never backtested. Just say why for yes, I've backtested, no for I haven't backtested. Okay, so while you're doing that, I'm going to talk about what backtesting is. So backtesting is a method of evaluating a strategy or model's performance by applying it to historical data. It's commonly used in finance to assess the viability of trading strategies. It's used by levels of all traders from beginning to institutional level to identify the best opportunities. Okay, so when I talk about this, okay, these are tools that from the most basic trader up to the most advanced institutional traders use. Okay, so we've got versions of Metastock that we sell to retail traders, but we also have a version of Metastock that we sell to institutional traders that are, using big institutional money and trading that. And the thing that they want to do is they want to make sure that their strategy works. And the way that they do that is through backtesting. Okay, so it's actually a very big tool in institutional trading. So it's something to keep in the back of your mind. So why use backtesting? So backtesting can help you do a couple of things. One, it can help you identify strength and weakness in your trading. So when we talk about that, hey, it's worked 15% or it's worked 83%, strength and weakness, right? You can make more informed decisions. Backtesting can help you make more informed decisions by providing an objective analysis based off the strategy's performance. So what backtesting does, let's talk about what backtesting does for just a second, because this gets into the weeds a little bit. So backtesting is basically a way to say, hey, I've got the MACD and I've got 50 stocks that I'm interested in. So what backtesting can do is it can take and go through and take every trade across all those 50 stocks for you, do a bunch of math in the background, and then say, hey, over the course of the last who knows how long, 5 years or 1 year or 30 days, how has this trading system performed against that stock? And that can give you such a great reference to give you that high probability trade that we keep talking about. Okay, so think of it like a personality test. Okay, so we're putting the MACD and we're sending it on some dates with a bunch of stocks, and we want to see which ones are compatible. Okay, so that's what we're kind of doing. We're trying to match and line these guys up because we want them to be happy and we want them to be working together. Okay, so it can also help you manage your risk, which is what we've talked about a lot. Understand how volatile your asset class is. improve your confidence, and put your confidence in your strategy to see how it would have played out over time. And this is the Google AI overview about why I should use backtesting. The one that really stands out here to me, and the one that I like the most, is that one right there. Improve confidence. When I'm stepping into a trade, if I have more confidence in that trade and the way that it works, then I am going to be a less emotional trader, right? When we go back to that beginning, taking the emotions out of trading, that's what we're after. So, kind of looking at the chat here, we've got a mix of people who have backtested, who haven't backtested. So we're going to show you some examples. And in a little bit, looks like I'll have some time. We'll talk about some of the symbols that you're trading. So think about some symbols that you may want to look at with backtesting here in a little bit, and we will look at those. Okay, so let's go back here. Okay, so we've got these 4 charts, but we also had 50 that had some kind of available opportunity today. Now, if I was sitting down and I wanted to try and figure out which one was the best one to take, well, looking at 50 stocks, it's going to take me a while to go through all those charts and try to analyze them and figure it out. So let's use our back tester to do that for us. I'll go down here to the system tester. And first up, what I want to do in the system tester is tell it my strategy that I want to backtest. So again, we found MACD buy signals. So let's test the MACD. In Metastock, it'll always in this list, all these lists that you have that you can scan and backtest and do things with. Well, we always have one at the bottom here that says last exploration results. And I can just select that, and that'll put all 50 stocks into my backtest. Now, I'm not going to spend a lot of time in the weeds talking about all the different details of backtesting, but there's a few things that we need to set very quickly to help us kind of get ready for our backtest. And the first thing we need to do is tell the system tester a little bit about us and how we trade, because each one of you is going to trade a little differently, and that's fine, and that's great. But you want to tell it a little bit about you and how you're trading and what you want to look at before you can do a good backtest. One, you want to tell it, hey, am I taking long trades only? So if you were just looking at those buy signals and that's all you wanted to test, you would just say, hey, I'm taking long trades only. If you're doing both, if you're just going short, just looking at those 16 shorts, shorts only. Or you can do both here. So we're going to look across that whole list of 50 stocks to see which ones traded best. Okay. Now I can say, well, how long do you want to look back for? So in my case, we have a buy signal here on a daily bar. So I'm looking at a daily interval. And I like to look at personally over the last 5 years. How is this traded in different markets? We had COVID in there in the last 5 years. Well, we're just coming out of that time, but we've had other volatile markets. Well, so how does it trade overall? How does it do? So I like to look at the last 5 years. Okay. So I'm going to put that against that. And then there's a few other things that we're just going to kind of get quickly into. One is account. So you can tell the system tester, I like to trade 100 units at a time, or 1,000 units at a time, or 1,000,000 shares at a time, whatever it is. So you could say, hey, I only trade 100,000 stocks, or 5 stocks, or 1 stock at a time. You can test it that way to determine what works best for you. You can say, hey, I only spend 5,000 per trade. So only put 5,000 in any trade at any given time. You can do that as well. The one I like to use is percentage of available equity. The reason I like to do this one here in this presentation is because I can kind of give you some math on how this works, okay? The initial equity that I have in my account here is $100,000, okay? And risk-wise here, I have 20%. 20% is big. I wouldn't say ever recommend putting 20% into any given trade. What I want to say here is the math's easy, just to show you this example. Okay, so if I have 100,000 and I put 20% in, well, I'm risking $20,000. If my money goes up to 200,000, well, now I'm risking $40,000. Okay, so that's kind of how that math works. If you're trading futures or Forex, you don't want to do this points only test. A broker, if you trade on margin, you can put all that in, or interest rates. If you pay for commission to trade, I know here in the US on equities, we don't pay any commissions for the most part anymore. but other markets do. So you can put that in as part of your real cost of trading. And then finally, we have this trade execution. Okay, trade execution is just a way of saying when you're getting in and out of the trades. So realistic market prices is the default. Well, what does realistic market prices mean when I'm backtesting? So I have a current signal on all these charts back here today. Now, when would I typically get into that trade? Okay, so if I get a buy signal today, as it goes through the day, it may change. It may not be a fully formed signal during the day. You may want to wait for the end of the day to get a signal for the next day. Depends on how you like to trade. Okay, but if I choose realistic market prices, what that means is that it's going to wait until the bar of the next day to get me into that trade. Okay, that's all realistic market prices means. And you can change that here if you want to. These are all customizable. Then you can also account for slippage. So say you want to do a market on open the next day. Well, it may move just a little bit before you get into that trade, so you can put that in as part of your system testing as well. Okay, so those are the only things we really need to customize. Let's go in and let's run our test. Now that we've set our parameters here, we've got our answers, let's go ahead and test and see what we're getting here. Okay, so it is taking all those trades for me. Let's go ahead and view our report. And this is the system tester report window. Now, if I look at this, I can kind of bump all these out if I want to. So what I'm looking at is I'm looking at a graphical representation of how my trades did over time. Okay, so I can see that some work very, very well here and some work very poorly. Okay, so if I rank this by net profit, I can see that Uber has been the best performing stock out of those 50 on the MACD over the last 5 years. Okay, so let's look a little bit more at this just to understand what's going on. So I'm going to go through a few details and then I'm going to just show you my quick path to this. Okay, we'll take the shortcut here in a second. But I want to talk about it for a moment because there's a lot going on here. Okay, so the Uber's our top performing one. It had a 35,000 profit, a 35% gain almost, 212 trades, 97 were winners, 115 were losers. Okay, so we had more losers than we had winners in this specific case, but it's our best performing one. Okay, so when we get into that, hey, it's worked best 83% of the time. Well, this one's only worked maybe 46% of the time, but it's our best performing one. Well, what that tells me by looking at this is that my winners were probably fairly big and my losers were probably or on the smaller side. Okay, and we can validate that. Let's go in. Okay, if I look at this now, I can see, let's look at our trades. Okay, so we had 97 profitable trades. My average profit was 1,245. My highest profit was 6,700, and lowest profit was $7. Okay, so my average loss 751. My highest loss 3,200. My lowest loss was 0. Okay, so I can see here my average profit 1,245. My average loss 751. Now, when I back tested this, what I was doing is I was checking to see when it said buy, buy, and when it says sell, sell. Now you may say, well, there's an element missing there. What about stops? Well, stops are very important, and I agree, and you should be trading with stops. And you can put stops into the system tester. That is another aspect of system testing that you can do. We're not going through that part in this video. So all I'm doing here is I am checking to see how it reacts on its own 2 legs, basically. Does it perform well on its own? Okay. So let's just show you a few things and then we'll go into the things that I deem the most important to me. Okay. So here's my orders. You can see all the orders. You can see all the positions and how they were taken and what happened with them. This is where I like to spend my time analyzing. Okay. And what this is called an equity line. Now the equity line is basically a representation of how my money has done over time. So if I look at this, this is the last 5 years and what it would have done. So 100,000 initial equity, and this is my 5 years right here. Okay, so if I look at this, you can see it for the first year, 250 records in a trading year. First year, it lost money. So if I came into it and had tested it that first year right there, let's see. As I'm going through, I'll just answer questions. Linda is asking, I assume the MACD settings were the default. Do you have the ability to change this and setting and run a similar test? Absolutely, you do. And I'll show you a quick example of that just a second, Linda. Great question. Thank you. So as I wouldn't have traded it here, but look what this has done since. As I look at this equity line, I see this smooth, consistent equity line. So that means that my trades are consistent and I get consistent returns out of it. So if I'm seeing that, and if I wanted to see that in my trading portfolio, is this the type of trade I would want to take? Something that has consistently worked. That's an answer, that's a question for you, but the answer from me is yes, I would want something that's consistently works. So when we talk about that 83% number, we have a higher confidence level in this trade than we do in maybe some of the others. So if I were to look at, this has performed well over here, but say I went down to service now, and this one is lost 20%, and my equity line looks like this, so my 100,000 has just consistently lost and consistently lost and consistently lost. Which one is the preferable one? Okay, so that's where we're starting to get our confidence. Let's go back up to these top ones really quickly. So if I look at Uber, let's go down to American Waterworks. Okay, and I open up that one. I'm just going to go right to the equity line. That's where I like to look to get my confidence level, is in that equity line. Now, same thing. We see that smooth, consistent equity. Okay, we like that. Eli Lilly, let's look at that one. Okay, not as solid. I mean, it's still got some good equity kind of moving through here, but not as solid. Maybe not. So I like the first two. We'll go to Arista. We'll go to equity. Okay, so again, this is one of our top performers, but look where the growth was. It's been in the past. It hasn't been trading well. And this is why looking at the equity line, even though this has performed well historically, it's not a current setup that I would take, that I'd be interested in. Okay, this equity line, kind of flat, kind of just bleh, it's kind of just lost its thing there. So as you kind of start to see some of these, you start to go, ooh, I like that. Oh, I don't like that. Oh, take that one out. Okay, so if I'm coming in again and I'm looking at an equity line, do I want to take a trade that looks like this for a high probability, or let's just go down and look at something that looks like this for equity? High confidence trades. That's what we want. Okay, now is this right here, is this equity line right here, does that mean it's going to happen on the next trade? Absolutely not. It has, the market does what the market does. But if I have confidence that it has worked well historically, it gives me a better confidence level that it may work on the next trade. Not a guarantee, it's a confidence level, right? That's part of our mentality shift that we're trying to put in here, is that we don't want that emotional trade of, well, oh, hey, I've got all these great signals. Well, yeah, I've got a great signal, but has it worked? And here I can see that it has worked. So as we start to think, hey, I would have taken an 83% trade. Well, hey, I've got a higher confidence level in this right here. Okay. Okay, so that's an example there. Let me go and show Linda her question here. So right here, I've got the MACD expert system. If I wanted to tweak the parameters, what I could do is I could right click on this and make a copy of it. And then what I could do is I could actually go in and double click on it, and you can see all the settings in here. Okay, so you can see this is based off of 9-period exponential moving average or the oversold condition. And let's say I wanted that to be a 12-period. I can just change that to a 12 period, or whatever you wanted it to be. So there's a lot of customization in here. You can write your own systems and strategies to build them out and test them out. So if you wanted to combine a MACD and an RSI together, you could do that. You could build those things and actually do that. Okay, so let's now, okay, so we spent 25 minutes going through that. Let me show you how quickly you can actually do this once you kind of have a workflow. So let's maybe do the RSI. So I'm going to do the RSI itself. Let's go up and do the S&P 500 again. So let me go up to market scan. So we're going to do the MACD against the S&P, not the MACD. We've already done the MACD. Let's do the RSI. Let's do something different. Okay, so we're going to do the RSI against the S&P 500. Okay, so what we're going to do, we're just going to have it go through. We're going to have it scan for us and identify a few opportunities here. And you can see how fast this goes through. We're rejecting out 100% on the RSI. Okay, we're getting a couple signals in here. Great. So then I can show you this quick workflow. Okay, now as we reject them out, it makes it easy for us first. We don't have to look at a bunch of charts. We can just look at the ones that are going here. Okay, so we have 1 buy signal and 4 sell signals here. Okay, so let's now go. We're not even going to open the charts. We're just going to go to the system tester. We've got the RSI selected. We're going to do the last results. I've already set my customizations here, so I don't need to do that again. And I'll just run that. It's already done. Let's bring this up. Okay, so I have 4 stocks that have not performed well. So we only want that top one, which was Huntington Ingalls. Well, so 30% gain, 17 trades, 13 winners, 4 losers. Okay, so that's worked well, very well over time. And let's see what our equity line looks like. Okay, so there we can quickly look at that and say, okay, well, this one, it has been fairly flat for the majority of the time, some slow growth, but look what it's doing in recent market. Okay, we're going to again run up, and that's something that we'd like to see as well. Okay, so that's how quickly you can go through and identify opportunities. Now I want to take a quick flip on this and look at some examples of a system versus a group of systems versus a stock. So if you could give me, somebody throw a quick couple of symbols in there, we'll do it. We'll take a round turn on this. Okay, so what I'm going to do is I'm going to get myself set up here while you're putting in symbols. What I'm going to do here, instead of running a scan first, I want to take a group of strategies. So I'm going to take these 80 performance strategies with some Ichimoku trading systems in here, so 85 strategies, and put them against a specific stock this time. Okay, so if anybody has a stock, we'll throw it in there. Oh, got a couple. Raju, thank you. So we got MO. We'll start there. Okay, so we're going to put MO in here, and I'm going to put MO against these 50 stock, these 84 systems. Okay, so this time I don't know if there's an opportunity today, but I just want to see which strategy works best on MO. So if I go view, and this can help me determine what kind of movement that MO is doing. So if I rank this, okay, so I've got this bull power, bear power 3 system that's won 48 trades and 27 losers. Okay, pretty good. Go to equity, and then I can see that I've got my best equity line there. So I can identify opportunities that way and actually find ones that are matching the personality of the stock. So what I can do there, now that I know it's the bull power, bear power 3, I could come up here and go to my chart, go to MO. Okay, and let me just tab these out here so we can look at MO. Okay, and then I could put on my expert, put on that MO, put on the bear power 3, just search for bear power. Put that on. Okay, and then you can see the buy and sell signals for it, and then you can wait for the next opportunity. Okay, so that's kind of how you can use that workflow. Let's look at 1 or 2 more. We'll do MPC from the Thetis. Okay, let's do the same thing, MPC. Just make sure got that. Okay, start system test. Good, so it's going to do the same thing. It's just going to run through, and it's connection. Jeff, did I lose connection? Am I still there?
You broke up a little bit, but you're still here.
Okay. All right, let me get this all set back up here. Okay, and let's see if we got our result here. Sorry about that. Okay, so here's my report. And then I can look at this one and see how this one is actually trading. Let's move this out of the way as well. Okay, so I can rank on my percent gain. And then this one, I can see that the annual strength weakness system 1 was the best performing one. Now you could do this against MACD, you could do this against RSI, or let's say that you wanted to know, okay, which stock on the NASDAQ 100 does the MACD work best on? You could also do that kind of workflow. So if I said, okay, let's actually take and uncheck this, uncheck these, and then let's just say we take the MACD once again, and we put it on every stock on the NASDAQ 100 or the S&P 100. Okay, so I can run that test and find that out. Okay, so the system tester has a multitude of ways that you can actually go through and identify trade opportunities and find the way that works for you. Now, backtesting can be as easy or as complex as you want it to be. Okay, there's a lot of different things that you can do. Okay, so here's just that view. If I do net profit here, we can see that Tesla is the best performing stock using the MACD over time, with AMD being next and Ford, then Adobe. And you can go in again, look at those equity lines, and that's a great equity line, okay? So that's the kind of thing that we like to look for. So if you're using these types of strategies to help identify that, hey, I want which symbol it is, you can do that. Now, hey, for all the ones that I didn't get a chance to backtest for you, if you want a view of what it looks like with that particular symbol, just go ahead and chat into our sales department at metastock.com/sales chat and say, hey, I would love to see this stock back tested against this list of strategies, and they can send you a result of what that looks like. Or if you have Metastock and you need help doing that, contact our support. It's free support. They can show you how to run that back test and actually show you how to actually use it. Okay, so let's go back to the PowerPoint, and I apologize, I'd do more, but I am almost out of time. So again, I would take a trade that works. And that's what we're trying to do again, is instill that confidence level in what trade you would want to take. And hopefully I've shown you a way to feel more confident in that trade and say, hey, yeah, I do want that trade that works 83% of the time. And how do I get there? And that's what we're trying to determine with you today. Now, again, nothing I showed you today was a recommendation to buy or sell. It was just samples of what you can do in Metastock to help you identify opportunities. Now, Metastock, again, Reader's Choice Award for over 30 years. It has won its best software in its price category for those 30 years, something we are immensely proud of, and something that our users over and over again keep ranking us. So we're thankful to our users for voting and saying that how much they love Metastock, because it is a truly great software. We have been helping traders for over 40 years find the best opportunities, and that's what we do best. So how can you get Metastock and try it out? Well, Jeff talked about there's two different versions. We have our Metastock DC, which is daily charts, which will give you delayed snapshots throughout the day of the data, so you can scan the market during the day, do your back tests. It runs $74.95 a month. It includes global data, so you can actually access stocks, futures, Forex, whatever it is that you want to see. Runs $74.95 a month, and lets you do just about everything I showed you here today, except the 1 minute, 5 minute, 30 minute time frames. Okay, amazing stuff and what Metastock can do. We also have our Metastock RT, which lets you do everything I showed you here, except in a 1 minute, 5 minute, 30 minute, those intraday time frames. Okay, that runs $265 a month, but also includes our Metastock Zenith real-time market market data and news package, which gives you Reuters news, which helps you track what is breaking in the market. News that breaks the market is so important, and having that from a source like Reuters is absolutely critical, and that's what comes with our Metastock Zenith package that powers Metastock RT. Okay, so you can try either of those on a buy 1 month, get 2 free trial. So it's a great way to try it. With that, you get free white glove setup and installation, free unlimited support, and our recorded training. So 3-month trial again, you get our latest version of Metastock, the data region, it doesn't matter, you get the whole globe with it. White glove installation support, or support will call you, spend up to 2 hours with you or more, helping you get Metastock set up, showing you how to use it, showing you how to backtest scan, whatever it is you want to do, get the chart set up the way you want to. And all you have to do is call us at 800-882-3040, go to metastock.com/sales chat, or go to metastock.com/comp promo, and you can take the trial there. But any way that you decide to try it, Metastock DC or Metastock RT, it's up to you, but you get that 3-month buy 1, get 2 free trial. Hope you'll try it out, and I think you'll enjoy it and you'll love it. And Jeff, well, I'm 30 seconds over, Jeff. Sorry about that.
Fine, Kelly. I want you to help me though before you go.
Okay.
So, oh here, let me turn my camera. We are going to. Ooh, I need to get ready for this though. Just a sec. I thought I had my spreadsheet open, but I just had to reopen it. I was pulling some numbers, looking at some things, and I had to close down the numbers. But we are going to give away. You know, I'm running out of these.
Uh-oh.
I only have I think I've got 3 left. So we're gonna give
Those
away.
you can't get those anymore. So
Yeah, they're out of print. So it's Around the Horn by Adrian Mantz. Adrian Mantz does a lot of pattern stuff. I'm really just trying to get my Excel sheet open right now. He does a lot of pattern stuff. I love this book actually because it has all the visual patterns. Very well written. It's out of print. So I know they're doing another version. It's a $95 book. Let's go ahead and give away a copy. Are you ready, Kelly?
I'm ready. Let's roll.
I know the real question is, am I ready? Okay, so here we go. Let's see, what I need from you is a number between 1 and 5,181.
Well, let's go low today. Let's go low this time. Let's go down 879.
I actually went way higher than that. I mistyped. I fat fingered it. Okay, this is a Kathy T. Kathy T. with a Hotmail address in USA. Kelly, I haven't doxed anyone yet. Are you
Hey, attaboy. I like it. It's good.
Congratulations, Kathy T. with a Hotmail address. If you get an email from me next week asking you to confirm your address, I'm not a Nigerian. It's not a spam email. It's not something like that. It's legitimate. Just send it to me. Okay. You can get the free trial, the extended trial if you go to metastock.com/salespchat, metastock.com/comp promo, or 800-882-3040. Kelly, thank you very much. Appreciate it.
Thank you. Thanks for having me here. Great. Thanks for all your hard work on this, Jeff.
Of course. Yeah. Let me go ahead and kind of turn this back over here. Yes. I'll go ahead and show my screen. Thank you again, Kelly. All right, you can get that extended trial if you buy a month, get the 2nd and 3rd month for free. Metastock.com/comp promo, metastock.com/salespchat, or 800-882-3040. As we move on, I want to also mention our community site. You can join it at metastock.com, or I'm sorry, at thetradersforum.com. Lots of information up there about how you can chat with other traders. You learn about the markets. There's a growing library of technical analysis resources, a great place. None of that'll cost you a thing. Thetradersforum.com. Thanks, Maverick. All right. Cool. Our next presenter is Barry Burns. Barry is a good friend of mine, partner of Metastock for a long time. He's going to talk about his 5 energy methods for finding the right trades. And we're going to turn the time right over to him. How you doing today, Barry?
I am doing well, Jeff. Thank you. How are you doing?
I'm great. Yeah, I'm doing really, really well.
All right, let me make sure I'm showing what I need to show.
I can see your screen.
You can? Okay, great.
Oh yeah, it's coming through really well.
Good. Let me see if I can share my webcam as well.
There you are.
There I am. Wow. All right. I'm going to look
Looking
at
great.
the screen to see myself. All right.
I'm gonna get out of the way. Your turn. Go.
Okay, so technology is A-okay.
Everything's checking out.
All right. Thank you, Jeff. Yeah, Jeff's right. He and I have known each other for many, many, many years. And sorry, I'm looking to the side here. I'm just moving windows around. And I want to make this interactive. So I'm actually pulling out the questions box so that we all can talk back and forth a little bit instead of making this a monologue, make it a dialogue. And I really want to help you with what you need. So obviously, I've got some slides here, as you can see, PowerPoint slides. But as we go through this, I'll be asking you some questions as well so that I can modify things or focus on certain things that you, as the participants out there, the audience, are most interested in, maybe some things you're struggling with. And so I can customize the presentation based on the things that you really need. All right, so please, I invite you to participate fully. And you can just do that by typing into the questions box, and I'll be watching this. Like I said, I've got it on the side here for me, right next to my slides. And yeah, I've been using Metastock for, I don't even know how long. It's the very first charting platform I ever used. So still using it, and it's, you know, it's adapted with the years, and it's just amazing how far it's come. And so I've seen the whole evolution of it, and it's just been amazing. So anyway, today my focus is going to be on timing trade timing strategies for entries and entries, as you can see on the slide there. A little bit here. First, we want to just cover a little bit about who I am so that you know that you're not just listening to some Yahoo from Nigeria. I'm glad to hear that you moved out of Nigeria, Jeff. That was good move. Good move. I was worried about you there for a little while. But now I've got some decent credentials underneath my belt. Wiley & Sons actually approached me. They're one of the largest publishers in the world, as you might know. And they approached me. I didn't even want to write a book. Never thought of it. And one of my mentors actually told me, he said, Barry, I'm not going to die until you write a book. You need to write a book. And I didn't want to write a book because it's a lot of work. And just out of the blue, one day, Wiley & Sons approached me, and they came to me. They said, we want you to write a book for us. So they talked me into it, and you can see it on the screen there, Trend Trading for Dummies, part of the famous Dummy series of books. And you can get that wherever better trading books are sold. And check it out on Amazon if you want to. You can see all the reviews there. It's gotten really, really good reviews. Very proud of that. Stocks and Commodities Magazine, one of the, maybe the largest, I'm going to say it's probably the largest print magazine on trading in the world. And I've been receiving Reader's Choice Awards from them for many, many, many years. And what I'm most proud about that is not only is the magazine fantastic, which it is, but also the Reader's Choice Award means that it's their subscribers who vote on software, trading courses, things like that. And so we keep getting the Reader's Choice Awards every year from their readers. So I like that because it's from real traders who are using our stuff. And I'm not going to go through all of this step by step here. You could just see, let's zip through all of this pretty quickly. So I've done education for different exchanges. I've helped other authors with their books. We've got to make our lawyers happy. So even though you've seen the legal disclaimer, again, I won't spend too much time on this, but I know with a multi-presenter seminar like this, people come and go, and especially since it's multi-day. So there it is. I'm not going to read through it word for word, but very important that you understand these legal disclaimers. They are not just legalese. Understand that your education really begins with these legal disclaimers. This is the anti-hype. And unfortunately, there is some hype in trading and you need to avoid that, obviously. And one of the best ways to do that is to read these legal disclaimers. They might not be very entertaining. I'll grant you that. Might not be the most, entertaining concepts or language, but grasp these concepts and really, really keep them in mind as you do any kind of trading or trading education. So they're there to serve us, and they're serving us very well. And by that, I mean the regulators. All right, so let's ask a little bit about you. As I said, I want to make this a dialogue, get to know a little bit about you, and find out how I can help you in your trading. So in the questions box here with webinar, with what are we using here today? We got GoToWebinar. Oh, that's a good one. All right, so who are you? Type in, if you would please, what are some of your most common trading problems, struggles, or frustrations? Go ahead and type that in right now. And I want to see what those are so that I can keep these in mind as I'm going through the presentation. And then I will address these issues, as I said earlier, to make this more personal for you, help you with your trading, help you overcome some of the problems, some of those struggles, those frustrations. And by the way, please don't be shy about typing that in, because if you're having that problem, I'm going to guess we got a lot of people in the webinar here today. I'm going to guess there's at least 10, 20, 50 other people have the same problem you do. It's actually very important to tap into a trading community, because you'll find that your problems are not unique to you. Almost, the majority of traders are having the same issues you are. So if you type in something and someone else is shy, they might not type it in, you're going to help them too. And you'll be the bold one, you'll be the strong one, you'll be the courageous one who will type it in when somebody else is too shy to do it. And not only will you be helping yourself, you'll help other people's as well. So here's Neil. Thank you, Neil. Appreciate it, brother. Swings against the midterm trend. Ah, yes. Very good one. So this is, again, one of those very common problems. And I will address that very directly today. So you're at the right place. I will show you very clearly how to avoid that, and when it does happen, how to deal with it. All right, but mostly how to avoid it. All right, so good. That's a great one. And then we got Evelina. Hi, Evelina. And she writes, price retrace or bounce without any daily, weekly, monthly resistance or support. How can we know it's time to retrace? Yes, another great one. So you're not seeing any support or resistance there, but the market turns, retraces, or bounces. Oh, that's excellent. Yep, that's another common problem. And we will address that today, again, very directly. And I like that you use the word time. How could you know it's time to retrace? We're going to talk about timing a lot today. And a lot of people never learn how to time their entries or exits. And that's exactly what this is about. So today we're going to talk about time. So thank you, Evelina, for that. I already created a few here, bullet points. These are some of the most common answers that I've received in the past. So let me know if some of these are connecting with your brain cells as well. So some people in the past have said, well, I'll enter the market. Let's say they go long, they buy. And then right after they buy, the market goes against them and they get stopped out. And then right after they get stopped out, the market turns back and goes back up in their original direction. How many of you had that experience? Just type in yes if you've had that experience. It just seems like the market knows what you're doing, and people are taking out your stops. This is often people, that's what they say. They say, oh, market knows where I'm placing my stops. They're taking them out, and then they go back in the original direction. In fact, one of my mentors, who was a floor trader at the Chicago Mercantile Exchange, I remember day one of my mentorship, as he said, Barry, retail traders are often right, but at the wrong time. Here's that issue of time again. This is exactly what he was talking about. So you're right on the direction, but you get in at the wrong time, so you get stopped out, and then it goes back in your original direction. Here's another one that people have typed in the past: getting out of big moves too soon, so not making the huge profits. Again, you catch the move, it's a big move maybe. Let's just use long as an example here. So the market's going up and up and up and up, and then you exit. But then after you get out, the market keeps going up and up and up and up and up and up and up. You're like, man, I could have made so much more money. So how do you avoid getting out of big moves too soon? Another question that is the most common, by the way, what I've got here is a bullet list of the 5 most common responses over years of doing this presentation. Getting stopped out too often. Okay, so it's the opposite of the previous one. Not knowing the best place to exit. And the 5th one was trading a trend that doesn't follow through. So you see a trend, it starts to move in your direction, but then it doesn't follow through, and you're like, oh, dang it, what the heck? What's going on? And again, people usually blame market makers, specialists, algos, quants, AI, whatever. And none of that is really to blame, by the way. Okay, so we're going to look at all these today, but we're going to focus on especially these 2 that Neil and Evelina typed in. So here is the here's the big picture that will help you with all of these things. So my trading methodology, as actually Jeff already mentioned briefly, is about measuring 5 energies in the market. And what do I mean by energies? I actually mean the energy of money flowing in, the energy of money flowing out of the market. So that's what my methodology is all based on. That's the foundation. You could call it supply demand. That would be appropriate as well. But I like to see money flow, the actual money moving in real time. It's an energy. And so now these energies are 5. So let's just get the list of 5 on here first, and then we'll deep dive into each of the 5. And by the way, we look at these energies in this order. So I call this my trading methodology because it is very methodical. And there's nothing subjective about this. It's very objective. So the first thing we look at is trend. So we look at that first because, well, we want to know which direction should we trade, long or short. Binary decision. And if there is no trend, well, then we don't trade because there's no direction to trade, so you wouldn't want to buy or sell. So that's step 1. All right, after we decide the trend, then we look at energy number 2, momentum. Now, this is the strength of the trend. A lot of people never learn about the second energy, and they never include it in their trading. So one of those problems that you saw in the last slide was people saying they buy a trend that doesn't follow through. The answer to that problem is that they've never been taught to learn the distinction between a strong trend or a weak trend. That's the answer to that question. So we've got to add energy number 2. Trend is not enough. Trend is just the direction at this snapshot in time. But is there strength behind that trend? If there is strength, then it's most likely to follow through. Energy number 3 is cycles. Now we come back to that word timing. This will help us determine the time to get in. So we're not getting in too late and chasing the market. We're not getting in too early where we would be potentially stopped out. We're going to get into the details on each one of these 5 here. Right now, I just want to give you the overview so you see the big picture first. And if you want to take notes, you can make a little outline here and then fill in as we go through. Number 4 is support resistance. Now, these are levels of blockages of energy. And these, oh gosh, this could be myriad different types of techniques. It could be Fibonacci levels, could be major previous swing highs and lows. It could be floor trader pivots. There's all different types of support resistance. But these are levels where when the market comes into them, when the price action comes into them, the people who are participating in the market look at that and they say, ooh, not sure if the market's going to continue to go through that, so they may start taking some profits. Or if the market comes down to it and bounces off, then they say, oh, that's a good level, price level, to buy. And the fifth and the final energy of my 5 energy methodology is what I call the fractal energy. And here we are trading multidimensionally. That's a fancy way of just saying we're looking at multiple time frames, and we're always using a higher time frame to confirm the trade on the lower time frame. And I'll show you how I do that. All right, so those are the 5 energies. Now, in order to make this, as I already said, objective instead of subjective, we need instruments for measuring these energies. We need objective mathematical instruments for measuring these 5 energies. So what are the instruments we use? For trend, I simply use a moving average. And by the way, everything I do is very simple. I'm not going to say trading is easy, because trading is not easy, but it is simple, and it should be simple. If you're overcomplicating it, you're probably going to lose money. For momentum, energy number 2, I use, guess what? Momentum indicator, shocker. Okay. For cycles, I use an oscillator, and I'm going to show you charts with all of this on it. So we're going to get super specific. For support resistance, as I measured, previous swing highs and lows, floor trader pivots, Fibonacci levels, etc. And now this is very important. For the fractal energy, the ratio between the short-term and the longer-term chart is critical. And the best ratio is 1 to 3. So that means if you're a day trader and using a 1-minute chart to trade on, you'd want to confirm with a 3-minute chart. If you're using a 5-minute chart, you'd want to use a 15-minute chart to confirm with. If you're using anything longer than that, like a 1 to 4 ratio, 1 to 5 ratio, 1 to 6, like some people will say, well, I'm going to use a 5-minute chart to trade, but I'm going to confirm it with a 60-minute chart. That is pretty useless, because the 60-minute chart is moving so slow. It is so uncorrelated to the 5-minute chart. So you want 2 time frames that are very tightly correlated, and 1 to 3 ratio is the one that works out the best. Now, we're doing all of this for one purpose, and that is to determine a probability scenario. By the way, there are no certainties in trading. We never really know what the market's going to do. So we're not predicting. This is a common misunderstanding. People ask me all the time, because everybody knows I'm a trader. They're like, well, what do you think the market's going to do tomorrow? Like, I don't know. Do I look like Kreskin? That's such an old reference. I don't know. Can't think of a modern reference because I'm old. But I can't predict what the market's going to do, because to predict what the market's going to do, I'm going to have to guess, what traders in China are going to be doing in Japan and Europe and United States and all over the world. And by the way, all the different time intervals that people are trading. And by the way, all the different indicators that people are using. And by the way, all dark pools. And by the way, high frequency trading. And by the way, Trump coming out with a new executive order. Oh, and by the way, Trump announcing a new tariff, or that there's not going to be a new tariff, or whatever it is. You see, it's so complex. There's so many moving parts. None of us can predict all of that. So none of us know what the market's going to do tomorrow. That's similar to what's going to happen in the next 5 minutes. So we don't know anything. And that's one of the mental adjustments we all have to make as traders, is that we don't know anything. And the operative word there is no. So we don't know anything, but we can establish a probability scenario. And then we manage our risk around that. So how do we determine a probability scenario? Of course, is the next logical question. And here it is. Based on my 5 energy methodology, I simply ask it, and at each entry point or potential entry point, how many of those 5 energies are aligned all being bullish or bearish? And I give each setup a score of 1 to 5. The higher the score, the higher probability of success. It's kind of like taking each trade to court. I need 5 independent witnesses to establish a preponderance of the evidence. Court term there, preponderance of the evidence. Now, again, Dollars are in the details. So you cannot just do not mistake this for just taking any 5 indicators and throwing them on a chart and saying, oh, well, these 5 indicators aligned and therefore I'm going to buy. No, you have to make a decision as to which energies you're using, because another operative word there is the word independent witnesses. So these 5 energies, the reason this approach works is that each one of these 5 energies is uncorrelated to the other 4. So using our legal term here, preponderance of the evidence. So let's say a guy's put on the stand and he's accused of stealing bananas. Right? Use a very easy, simple, and innocent example. So a guy is accused of stealing bananas, and they put 5 witnesses on the stand, and they ask them, did you see him steal bananas? Did he steal bananas? And they put 5 witnesses on there, and they all say no. But one is his best friend, one's his girlfriend, one's his brother, one's his cousin, and the 5th one is his mommy. Well, are those independent witnesses? No, they're all related to him. So with trading, same thing. If you put 5 trend indicators on your chart, it's worthless, because you're only measuring one energy with 5 different indicators. It's redundant. 5 momentum indicators, 5 oscillators. No. So back to our chord example. Now, if you put 5 independent witnesses, so that means none of the 5 people they put on there on the stand, none of them know each other, and none of them have ever met the accused before. And they all say, oh yeah, I saw this dude steal the bananas. Okay, now that's preponderance of the evidence. Most likely the jury or the judge will say, yep, he's guilty of stealing bananas. So that's the same kind of thing we're looking for here. These 5 energies are very strategically chosen because they're independent from each other. So when they all align bullish or bearish, that's what gives us high probability that the market will move up or down. So I promised to give you some examples, very specific examples. So let's take a look-see here. Here is a chart, and I'm using, and I'll show you different examples, different markets, different time frames, things like that. So in this particular one, we have Starbucks, and we got Metastock charts, of course. 10-minute chart on the left, 30-minute chart on the right. Remember, the key ratio between your 2 time frames must be 1 to 3. That keeps them tightly correlated enough that the longer term chart actually means something in relation to the shorter term chart. So let's count our 5 energies on a chart. Just show you exactly how it works. So what do we do? First one is, what's the trend? Because we want to know if we should be long or short. So step 1, that's our 50-period simple moving average we use for trend, and it's sloping up. All right, so we've got a uptrend. Now, here's another distinction in top dog trading that we use. It's not just the trend. We also count waves on that trend. By the way, these are not Elliott waves, so I've got nothing against Elliott wave, but for me, I have my own proprietary algorithm that counts waves in trends, and it's very objective. So an Elliott wave, you always get 5 waves, and if it goes longer than 5 waves, then they, change the count on it, and I get it, and I understand it quite well. I actually traded it for 3 years. So what I decided was, I said, I want an objective mathematical way of the market telling me what the wave count is, rather than me imposing externally a wave count because of a theory that I have. And the purpose of this, very, very important. I'm sure a lot of you have heard the slogan, the trend is your friend until the end. Now, what does that really mean, and what's the practical application of that? What that really means is, the longer the trend continues, the less likely it is to continue. Or we can substitute the word likely for probable. And remember, we're trading probabilities. So to have a high probability trend trade, we want to trade early in a new trend. So it's not just, energy number one is not just about trading in the trend, but you'll notice the first word is starting. Starting a new trend. And the way that we determine that objectively and mathematically is we do our wave counts. Wave one, wave two. That is what we call the first retrace in a new trend. And that's the earliest signal to get into a new trend. It just so happens that the average trend count, even based on my methodology, is 5 waves. So same as Elliott wave. But because we're measuring this objectively with an algorithm and the market tells us what the wave count is, with my methodology, you can get more wave counts. You can get 7, you can get 9, you can get 11, but we don't trade those in the direction of the trend because now we are what? Late in the trend. And therefore the trend is no longer a friend. And therefore, when we get to a wave 9 or 11, we're actually looking for trend reversal trades. So now the counter trend is our trend. All right. So that covers energy number one. Energy number two, momentum. Remember, that means, is the trend strong or weak? If it's a weak trend, if there's no strength behind it, then it's probably not going to follow through and it'll probably fail. On the other hand, if there is strength, strong buying behind it, then it'll probably follow through, meaning it'll probably make a higher high, which now we're making money. So our momentum indicators down here, you see at the top dog momentum indicator, and it is angling up. So boom, it has gone bullish. Step number 3, cycle. So now that we've got early in a new trend, early in a new strong trend, the third question is, what time should we get in? When should we get in? And as I said earlier, timing is super important and very few people actually talk about it, but think about this. On a chart, we have 2 axes, right? It's a two-dimensional chart. So this two-dimensional object has price on the y-axis. Everybody in their parakeet talks about trading price action, trading price levels. But very few people talk about the other axis, the x-axis down here, which is time. So think about that for a moment. In the chart, we only have 2 dimensions. So if you leave out one of those dimensions, you are missing out on 50% of the information on the chart. Timing. And this is why a lot of people get stopped out of their trades. Even when they get the trend right, they get stopped out because they didn't wait for the first cycle low, or that first cycle low to end. Because, well, they don't know how. They've never been taught. It's not their fault. It's not taught very often. Okay? We teach that here at Top Dog Trading, so you can nail the cycle low. And also, back to the other question about how to know when to get out when there's no support or resistance levels. Again, we're looking at cycle. Cycle means timing. So it not only shows us when to get in, but also helps us to get out. All right, so now that's a cycle low. Now, this also says cycle low with a mini divergence. So again, another little extra detail here. One of my favorite sayings about trading is the dollars are in the details. So what is a mini divergence? You'll notice that the cycle indicator, and by the way, it's a modified stochastic. You can see that here in the label. So it can go up and down and up and down and up and down. All right, and that doesn't always mean a lot. That could be noise. So what we wait for is what I call a mini divergence. So the black line here, which is %K, again, modified, not the standard settings, we look for a higher low on K and a lower low on the prices, just right there at the very, very bottom. This is your precision indicator, by the way. This is the one we use to trigger us into trades with accuracy. And so that's why I call it a mini divergence. It's not a big divergence between major swing lows. It's within one swing low. We're looking for that little mini divergence, and it's a little mini momentum shift pattern. The momentum indicator, that measures, long-term momentum. Whoops, I really screwed that up. See, you don't have to be a good technology person or even a good PowerPoint person to be a good trader. So a little higher low, that shows a mini, what I call mini momentum shift pattern or mini divergence. And that's how we determine the end of this move down. Otherwise, we could be buying here. Where do we know? Do we buy back in here? Do we buy at that moving average? No, we've got to wait for the little mini momentum shift pattern. Boom, comes back on up, and boy, does it go up. Nice big parabolic move. All right, step 4 is we want some support to buy off of, and that's the support of the 50 MA in this case. And then number 5, we go to our fractal chart, our multiple time frame, our longer term chart. And there, we're going to look at 2 things. Number 1, first of all, a lot of people teach you to trade in the direction of trend on the longer term time frame, and that is not optimal. The reason it's not optimal because trend is always, by definition, a lagging indicator. If you want to ask me about that later, feel free. I'll be happy to tell you why that is always a lagging indicator and has to be a lagging indicator. So if you're going to look for confirming on the longer term time frame the energy of trend, you're actually using a lagging indicator on a 3 times slower chart to confirm your trade. And that is going to be way too late. So instead, we use our cycle indicator and our momentum indicator. And of the 2, the momentum indicator is the most important. So that on both time frames, we have strength up. And that's what we want. And that's what we've got here. And so that's it. 1, 2, 3, 4, 5. Literally, in my course that I have and in Metastock, everything comes in Metastock as well. And you can literally just have a half sheet of paper and have these 5 steps on there and just boop, check them off. 1, 2, 3, 4, 5, done. Okay, it's a 5 out of 5 trade. Remember, we talked before about keeping score, how many of the 5 energies are aligned. So all 5 of these uncorrelated energies are bullish. Boom, we take the trade. And that's it. Simple checklist. 1, 2, 3, 4, 5. It all comes down as simple as that. So my favorite trading technique for pinpointing market highs and lows for entries and exits, the solution for a good cycle indicator. So now let's focus a little bit on that, what I call the cycle indicator, which again is a modified stochastic. I'm going to write this down because you can recreate this on your own charts. I'm giving you this stuff for free. Okay, this is my gift to you. So you go into your stochastic indicator, and I'm showing you on Metastock, obviously. You can do this on other charting platforms as well. So the first thing we want to do is go into the stochastic indicator on your charting platform, and we want to change the parameters, or your platform might call it inputs. And these are the numbers that we're going to use. We're going to use a time period of 5, a slowing of 2, now that's for %K, and then under %D, the time period is going to be 3, and the method is going to be simple. I'll leave that up for a second so you can write that down if you want to. And if you remember, I mentioned earlier that we use a modified stochastic indicator. So we're still using the good old-fashioned stochastic indicator that's available on every chart platform I've ever seen, but we're not using the standard inputs. So when I say modified, all I really mean is I'm modifying the inputs. And then we are looking for patterns on that indicator, such as the mini divergence that I already showed you. They were trading those patterns, but those patterns are powerful with these inputs, these settings, these parameters. All right, so now you might, by the way, if you're using another charting platform, the terms might be a little slightly different, but it should be pretty obvious. Now, the only other thing that we need to do is we want to put some horizontal lines on there, and we're going to put them at 20, 50, and 80. And this is also very, very important because we want to buy when K gets down to around 20. We want to sell when K gets up to about 80. I'm sorry, 20 we want to buy, 80 we want to sell or exit. 50, if the indicator is just hovering around 50, that means there's really nothing to do. Nothing to do. Okay, that is, by the way, this is another answer to a question of how do I stay out of choppy markets. If this modified stochastic indicator is just hovering around 50, then don't trade. You're in a choppy market at that point. Okay, so now we've got the cycle indicator set up, the modified stochastic, but remember, very, very important because I get so many people who forget about this, even though I've gone over it a lot. So please, please, please really pay attention to this. Even this indicator, as good as it is meaningless by itself because it's measuring one energy, cycles, timing. And so we must use it strategically with the other energies. So we're going to trade cycle highs and lows in the direction of the trend early in the trend. We're only going to trade cycles that are in the direction of the trend early in the trend. We're only going to trade cycle highs and lows that have the long-term momentum in their direction. So if it's a cycle low, we're only going to buy bullish long-term momentum. If it's a cycle high, we're only going to short bearish long-term momentum. And we're only going to trade when the fractal energy is aligned that longer-term time frame. Otherwise, we're not going to take the trade. And finally, remember, we're not trading just when K gets below 20 or above 80. We're not going to trade just when K crosses D, up or down. We are looking for the mini divergence, or actually I have 6 what I call second chance indicator patterns. So I showed you one today, the mini divergence, that's the one that is the most obvious, so I showed you that today. I actually have 6 of these mini momentum shift patterns where K will form a pattern that shows that, oh, okay, K has gone down, 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 and now, ooh, just within 5 bars. Now remember, this is key. We change %K to 5. And what that literally means is it is measuring momentum within 5 bars. So it's just measuring as we come down, down, down where within 5 bars does the momentum shift at the bottom of a cycle low or shift at the top of a cycle high. Now, as I said, the second chance indicator patterns momentum indicate a momentum shift at the top or the bottom of the cycle. So mini divergence I've showed you. There's 5 others that I can teach you as well. Now let's look at some more examples because this can be traded many, many different ways. I gave you like the super simple example to get started with. All right, so now here we got Agilent Technologies, and here's what we want to avoid. We want to avoid trend is down. That part's fine, whatever. Trend is down. All right, so we're looking to be bearish. Price comes down, comes up, hits the moving average, comes down again, does not make a lower low, and then goes up and makes a higher high. So we don't want to short this because if we did, we would get stopped out. And that is because we're not using all 5 of the energies in this example. You cannot just depend on the cycle indicator. You cannot just depend on the 50 MA. So here's what we actually do want to do. Here, we've got trend going up, 50 MA going up. On the cycle indicator down here, stochastic oscillator modified, we've got a higher low on the indicator and a lower low on price bars. There's your mini divergence, a little mini momentum shift for trend continuation trade. So that's where we buy. That's the time we buy. We don't buy at this time, we buy at that time. In fact, what's interesting about this one especially is, I don't know if you could see it based on the size of how it's coming through here, but if you would have bought this and you put a stop just 1 penny below this cycle low, you would have gotten just stopped out, and then the market would go back in the direction of your trade. Great example of what my mentor said about traders being right, but at the wrong time. And it works for trend reversal trades as well. Remember, we at Top Dog Trading, we don't only trade trends, we'll trade trend reversals, because after 5 waves, then the trend, if it continues up, the trend is no longer your friend. So now the counter trend is your friend, and this is when we start looking for trend reversal trades. So this trend's been going down for a long time. So now we're not going to go short anymore. Now we're going to look to go long, because trend is no longer our friend, counter trend is our friend, but we got to wait for the right time. So we're not going to buy it here. We're going to wait for a lower low on price and a higher low on our modified stochastic oscillator. And that tells us, momentum is shifted here within 5 bars, boom, time to go long. And up she goes, and the trend reverses. Remember how I said trend is a lagging indicator? See, the trend indicator was still going down, and now it finally starts going up. So remember, indicators do what they promise. They indicate. They don't tell anything. They indicate something. And this is why we can only use them as a piece of evidence and put everything together. But based on the Top Dog Trading methodology, because we had a 7-wave downtrend, it actually was telling us, oh, we're late in the trend, therefore the trend is no longer our friend, we want to trade in the opposite direction. This will also work in consolidating markets. So here we see that our moving averages are, kind of coiled together, moving sideways, and we get a little higher high on price. We get a lower low on the stochastic oscillator. That is, again, another mini divergence. And we're looking for a breakout now. When the markets consolidate, when volatility gets low, it's followed by a period of time of high volatility. So another principle in Top Dog Trading is we look for volatility cycles to expand and contract like an accordion. So similar to Bollinger Band squeezes, triangles, pennants, wedges, those kind of things. Those are all contraction patterns. But the problem that most people have trading those is when to enter. How do you know that now it's time to enter this? If you enter it too soon, you get chopped up. If you enter too late, you miss the big move. So this is as simple as it gets. Boom, look for that. And then sure enough, move into a big downtrend. So let's do a little summary here. And then I got some other cool stuff to show you with regard to the Metastock platform specifically. The summary of high probability trading is simply waiting for the alignment of the 5 uncorrelated energies to put the odds on your side. And here it is. I'd encourage you to write this sentence down. This is my whole trading methodology in one sentence. So remember I told you you can create a checklist of 5 things. Could be that simple. That could be even more simple. One sentence. We're looking to get early into a new trend. So that's trend, energy number 1. That is strong. That's energy number 2, momentum. At the right time, that's energy number 3 with our cycle indicator. With support at your back, support or resistance levels, and then confirmed by the bigger scale, the next higher time frame. And remember, we're not using trend to confirm on the higher time frame. We're using the momentum indicator primarily and the cycle indicator secondarily, because those are faster indicators and they help tighten the connection between those 2 time intervals. Very important. And by the way, I'll also say the last one there, scale or fractal energy, I actually consider that a filter in my trading methodology, meaning that without that, I will not take a trade. So that is, I would say, of all the 5 energies, the most important one is the fractal energy. if momentum on the larger time frame is not in direction of the trade on the short-term time frame, I don't take the trade. That is immediately a deal breaker. It's black and white. Never, 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 never take that trade. So that's why it's the most important of the 5 energies. So this methodology is very adaptable, very robust. It works for really any market. I've traded it personally on stocks, commodities, options, cryptos, futures. And the reason it works on any market is because, again, all these markets are based on money flow. Money flowing in, money flowing out, buying, selling, supply, demand. So that's their commonality. So if we measure that, we can trade any market. And it works for a variety of time frames. So whatever your favorite time frame is, this is adaptable. You can use it for that. I would only say that you want to make sure if you go down to really short time frames and you're doing day trading, that you want to make sure there's enough liquidity at that time frame. Because we're measuring the supply demand, because we're measuring the energy money flow, you want to make sure that at that scale or that time interval, there's significant amount of money going through the market. And it's not just, some little retailers or people throwing in a couple hundred shares here, 10 shares there, 5 shares there. That's not significant. That's not significant enough. All right, so investing, swing trading, day trading, it's simple, it's objective, and God dang it, we're counting to 5. So we can all do that. Now, getting over to what we have special in Metastock that you cannot get anywhere else is the Top Dog Trading add-on. And this is so darn cool because it does many things. Number one, what it does is you get the indicators. So you get the modified stochastic already programmed into your charts, so you don't have to make any changes to it. And you get the wave counts. See these wave counts? These are automatically plotted on your chart. Automatically plotted in real time. So you don't have to guess, oh, what's the wave count here? What's the wave count there? It just shows you, pops it up on your chart. It's automated. And then you get this commentary over here, which again is super cool that you can't get anywhere else. So it'll tell you, like, for example, right here, if you can see that little dot there, that little triangle thing there, that's referring to this wave 9 reversal short. So it's recognizing that, oh, right there, that's a short signal based on the Top Dog Trading methodology. And it tells you what it is, wave 9 reversal, short. This pops up automatically. And it even gives you the education right ingrained into the software. It tells you what the basic setup is in red. So what is a wave 9 reversal short? Oh, well, it's this. And then it gives you commentary. Okay, the setup, the confirmation on the higher time frame, your entry, the exact entry to the penny, pip, or tick, where your initial stop goes, specifically to the penny, the pip, the tick, and what your targets are. I mean, god dang, what more do you want? It's all right there. It's awesome. And this commentary is exclusive to Metastock. No other software provides this. And I got to hand it to them. Their programmers somehow did this. I wouldn't have the first clue on how to program all this in there. I worked with them to provide the guidance since I know the setups, but then they did all the wizardry, all the programming behind it. So, and by the way, also it comes with a scanner. This is also very unusual. I don't think there's any other charting platform that does this either, where it will scan for the specific Top Dog Trading setups because it can identify waves 5 and 7 and 9 and 1 and 2. Because it can identify those with its algos automatically behind the scenes in the programming, it can also identify those in the scanner. So you can scan for a first retrace in the trend, which is an early trend entry. And all these different Top Dog Trading setups, you can just boop, say, I want this one. Show me all the stocks that have this setup right now, this snapshot in time, in real time, that is worth its weight in gold. And the Metastock add-on has that. So this is my last slide. I'll turn it over to Jeff after this. He might want to talk a little bit more about the Metastock add-on. If you have any questions, feel free to reach out to me. It's barry@topdogtrading.com. Very simple. And that'll come directly to me. I'm happy to answer any questions you might have. Happy to help you with your trading. Also, I'm going to give everybody a freebie today, and that is one of my favorite trade strategies. It's called the rubber band trade. And I'm going to give you the complete rules for exactly where to enter and exit. It comes inside of a little mini course called How Pros Trade Differently Than Amateurs. And I'll go into a little more detail about my cycle indicator for precision entries and triggers. There's a little follow-up webinar that's recorded, so you can go and watch that tutorial. It's about 45 minutes long, but it goes into details on how to set up my cycle indicator, how to trade it, etc. And again, all the stuff on this slide is for free. Just go to, well, topdogtrading.com/free. Oh, dang, that's actually makes logical sense in that URL. All right, so that's it for me. Jeff, my main man, Jeff, I'll turn it back over to you. I think you have a few other things you want to share about this.
I do. While you're here, though, I want you to I want you to help me out if you don't mind.
I'll do anything for you, Jeff.
All right, I'm just gonna give away this book, High Profit Candlestick Patterns, Steve Bigelow.
Yes, that's a great one. That's a great book.
What I need from you, I'm running. Greg got a little tummy ache today, so he isn't helping me. So I need help with the giveaways. I just need a number between 1 and 5181.
Between 1 and 5181, I will choose the auspicious number of 2.
Woo! The second. That's probably the test. No, actually, it is not. It's Juan O with a first name Juan, last initial O, with a Yahoo address in the USA. You just won this book. Congratulations.
Hey, congratulations.
If you're watching live, you don't have to be here to win, but if you're watching live and you just won, you are obligated to go, yay, I won, in the chat. Barry, I'm going to show a little bit more about how to use this. Thanks for the assist. I appreciate it. And it's good to see you. You look great.
My pleasure. You look great too, brother.
All right. I'm going to go ahead and take over.
All right. Thank you so much.
You bet. We're going to make me the presenter. I'm going to show this screen here. I wanted to show a little bit because this is actually really cool in terms of the way that this is designed. When we wrote this, we were really pushing the envelope of the Metastock platform, and it really, one of the things that's really cool is it works really, really well in the new chart engine that we released just a couple versions ago. So I want to kind of just talk a little bit about it. I've got a chart. It's just a chart of gold. I pulled it up randomly for the purpose of this one, but I want to point out that it does all the wave counts for you. Those are all automatic. Every time you get a signal right here, you got that wave 7 reversal. It's going to give you the arrow on the chart. It's going to draw this the automatic Fibonacci lines. You can see where it's got. If I scroll up a little bit, you can see where it's kind of drawing in the Fibonacci levels for you. It's going to have the momentum lines. It looks for divergence in the stochastics. You can see where it's drawing little mini divergences right here. You've got your momentum. It has wave counts in it. Really, really cool add-on. Everything's designed well and put together in the commentary as well. So if I go to view, I'll go to expert commentary. If I wanted to know why I'm getting a signal right here, this 7, right next to this 7, I can just move over to that. And it's going to say right now we've got a wave 7 reversal short. Here's your entry, here's your initial stop, here's the targets, and it'll actually give you a link to a full definition of that pattern, what to do with it and that kind of stuff. That was we ran into a limit in terms of how much we could fit in the commentary. We still wanted to say more, and so any of these, it'll just have a clickable link right here that you can click on. It'll take you to the file that kind of gives you a full explanation. It's pretty cool. So in terms of scanning, there's a number of different patterns that you can scan for. I'm just going to open up the Power Console real quick, just show you what those are. We won't run any right now, but you can look for confirmations to go long, confirmations to go short. You can look for the DAD trades. rubber band trades, triangles, reversal trades, whatever it is that you want. There's a number of patterns that are in here that are part of the education that Barry provides and offers, and all of them can be identified here. Great add-on, very, very full-featured. Again, we put so much in it that we were really stressing out the old chart engine. Man, it's amazing how well it works in the new chart engine. So it does use all of Barry's 5 energy method. So it'll look at trend, momentum, cycles, the support and resistance in the scale to help you identify these trades. And those are all automatically get in there. In terms of patterns that it looks for new trends, momentum trends, long trends, reversion to the means, triangle patterns, all of those are included as well. And this add-on is very, very inexpensive. I actually think it's underpriced for the amount of stuff in it. But it's normally $4.99 here at the conference. It's $3.99. If you don't have access to Metastock, you might have heard us talk about how much we like Metastock, how it's been rated the #1 software program in its price category for 32 years in a row. We'll throw in a free trial to Metastock. We'll throw in a money-back guarantee. You can do this. You can get it at metastock.com/topdog. I'm going to go ahead and put that in the chat real quick here. And I'm going to put it in the YouTube chat, which is actually typed in and ready to go. I just have to go over here and hit go. If you have any questions, you can call us 800-882-3040 or metastock.com/saleschat. Such a cool add-on. If you haven't tried it before, you should. We back it with a money-back guarantee. It's only $399. That doesn't even that many good trades for me. So $399, 30-day money-back guarantee, free trial to Metastock that's been rated #1 for so many years. Metastock.com/topdog or 800-882-3040 or metastock.com/saleschat. So there you go. Before we move on to our next speaker, I want to say thank you to Stocks and Commodities Stocks and Commodities Magazine again for sponsoring the event. Great supporters, great magazine. One of the, as Barry just said, one of the probably the biggest out there around technical analysis. You can subscribe if you're interested in subscribing. Go to www.traders.com. All of the offers that we're talking about, including the extended trial, you can find at metastock.com/conf-promo. So there you go. Our next guest is Fausto Pugliese. Fausto is a longtime guest of Metastock, always an honored guest. One of the only ones that really talks about order flow and how to see that on the level 3. Also, and this is just something that you might find interesting, but I understand that he was rated the best looking man on a cruise he went on one time back a few years ago. So with that introduction, Fausto, I don't know what more you could ask for.
Yeah, I don't know what kind of better introduction you could do than that, but Jeff, great to see you. It's awesome to be on Metastock again, as always. How's it going over there where you are?
It's great. We're having a good time watching the markets, watching really smart people come in and talk, and that's going to be you now.
Yeah. Let me share my screen here. Make sure I get the right one. Hold on a second. And there we go. Yeah, Jeff, let me tell you, it's been a crazy market, but the order flow is going to be fun. I think your listeners are going to enjoy what we have to cover, and I'm going to show them exactly, with being a very big earnings session in the market, there's been a lot going on in certain stocks, especially what happened with Palantir yesterday. You had Amazon, you had Tesla, all them, and then you have a bunch of them coming out this week. So with that said, just a quick little audio check. I want to see if everybody's still awake. All right. Can I just get a little chat back? Everybody can hear me loud and clear. Just give me a yes. Just want to see if everyone is still here. Bill, I see you still here. Eric, what about you, Peter? Michael, everybody? Just want to make sure everybody here is loud and clear and still awake. A lot of great presenters that you had here today. And what's really nice that you learn a little bit about everything from everybody. And it's always nice to take something away from somebody. So that's most important. Jeff says, I'm awake. That's good to hear. Good. There you go. All right. So let me show you a little bit more about what Jeff was talking about. Now, just really quick, as always, as a warning announcement, listen, I'm not making any guarantees or promises. It works for everybody. There is a high risk of trading, so please be very careful before you go out there. There's very high risk, so don't go out there and trade what you can't afford to lose. At the bottom line, that's where it comes down to it. Now, what we're going to, like I said, big shout out to Jeff and the Metastock having me again. I think I know Jeff for close to about since they started, maybe like 30 years, I would say. And you know what's nice about it is great traders surround themselves with great traders. And you know what? If we're still around today, that means we're obviously doing something right, and that's why we're here. So what we're going to cover is I'm going to talk about how to follow the big money. I know everyone keeps talking about that, right? Well, I'm going to really show you how to follow the big money because I do a lot of presentations for NASDAQ. I'm hired by NASDAQ to do projects for them, educating their own staff how to trade. I've done speakings all over the world, but it all comes down to, how do I know this? Because I live here in New York. I was trained by some of the best traders in the world, and the way the Wall Street market makers do it is we're going to show you how to follow the algorithms, the high frequency trades, all that by seeing what's happening in pre-market, after market. I mean, especially at earnings announcements, you need to know what's happening after hours. Some of you don't even know you could trade it then. We'll talk a little about that, talk about the best times to trade, worst times to trade, which is obviously a very big plus. How to develop your own system, and like anything else, risk management. Now, I'm not going to change anyone's style, okay? Everybody here is going to be able to still use what everyone's preaching you. I'm just going to teach you something that is called the right of the chart. Now, when I'm done, I'm going to invite all of you here to come to my professional trading room. Let me just show you right now. This is basically our trading room right now that's open. I started this trading room over 35 years ago. These are all instructors that are in there right now. And these are all the traders around the entire world. Here on the left-hand side, there's only about 200 people in there now. Because in the middle of the day, when we get people like to come in the morning, the afternoon, we're broadcasting. Right now, they're looking at a stock called HIMS. And, you know, we have live audio broadcasts. So I'm going to invite all of you here to come here for a whole week, including with a couple other bonuses. I'm going to give you some workshops. I'm going to give you a bunch of stuff. But without wasting your time, let me show you exactly what we cover in that room so you know if it is worth your time to be there. All right. Okay. Now, before I move forward, just as a gift to everybody. Bought it with some other friend that had died already. I think Jeff, I still got to get your mic on.
John Eller's given him.
Oh, 1 second.
Metastock a long time ago. He's like, I could find the CD, but it'll take me a long time. It's here.
All right, Mike. So make sure that Jeff knows he has his mic on. All right. So with that said, everybody, if everybody just takes down my email address, I'm going to give you my book for free. You know, you could buy it through Amazon. You can pay me $47, but as a gift for you to stick around and listening here, if you want to learn how to beat market makers at their own game, it was written up. I wrote Wiley has published it. They came after me and they say, Fausto, we need a book from you. You know, you keep talking about these market makers. You were a market maker. Could you show us a book? Well, it's a color book. So if you guys just have a second or two, just open up your inbox and just type in new email and just type in Fausto and just write book right now. And I will automatically send you my book. And I'll receive an email from you immediately. Just there's my email address, Fausto@ctucorp.com. All right, so let's you guys get that. There we go. All right, so it looks like I got my own email. All right, good. So let's go to the live markets. Let's have some fun here, right? You know, everybody keeps talking about like my style. Let's have some fun. Let's talk about the market. So let me bring up an execution system here. All right, now does anybody here have a stock you want to talk about? Anything you're looking at, anything you own, anything that you're worried about, or anything you're doing great? Any stock out there? Anybody want to talk about? Because what I'm about to show you is how the right of the chart actually works. Now we have a intraday chart up on top. We have a yearly chart in the bottom. We have level 2 quotes down here at the bottom here. Time and sales, a watch list, and a percentage gainers and losers. All right. So a popular stock. Okay. So what's really taking a hit? How about we look at Palantir? Okay. So Palantir, that looks like a pretty good one to talk about, right? So Palantir had earnings yesterday. It went to $25. Obviously, they missed earnings and the phone call, and the thing dropped all the way down to 105. Okay, it had a tough time going past this 112, and then finally it broke that and went all the way down here to 105. Okay, now my question to everyone here is this: what makes a stock go up and down in the market? Anybody here know the answer? What makes a stock go up and down? Exactly. Buyers and sellers, not support and resistance. Because I'll tell you what makes a support and resistance is a buyer that is buying it, that makes that support, and what makes a resistance is a seller out there that's selling it that makes it a resistance. So I want to bring something here that's called level 4. All right. So here's a level 4. And I just want to zoom out here a little bit. And if you see right here, you see these lines, these orange lines right here. Let me blow this up a little bit bigger. So right here, where it's like dark and light, that was 9:30. So that was the open. And you'll notice how the stock dropped, went all the way down and stopped right here specifically at 105. Okay. Then it went up to 110 and it's holding here right around 105, 106. Now, what I want you to look at is right here on the right-hand side. Do you see this where it says COB, current order book? That's the right of the chart. That's all the high frequency trades, the algorithms, the market makers, the brokerage, everybody that in the entire world that's trade Palantir that is looking to buy and sell. That's every order out there. You put a limit order out there, your order is going to be there. It's going to be aggregated with everyone else. And you'll notice that you have close to about 200,000 shares at 105, 128,000 at 106. You got about 90,000 at 109. If I blow this up a little bit bigger, you'll see that a little bit clearer. And then you got, if we get past 109 and 110, then you see the next biggest sellers at 115. If I scroll down a little bit further, you'll see 120 for 128,000. And if I scroll further, you'll see bigger sellers out here for about 200,000 at 130 and then 134. You see how you can make this as a swing trade to a short-term trade? So you're seeing every single order around the entire world that wants to trade the stock. Now, one of you did bring up NVIDIA. Let's look up NVIDIA, okay? So here's NVIDIA. And if you look here at NVIDIA, you'll notice that NVIDIA has a very tough time breaking certain resistance levels, and you could see it clear as day. You got 115, 116, but the real big seller is right here. You got 1.3 million shares looking to sell at 120 and another close to about 1 million shares at 125. If I scroll down further and I look deeper into the future orders out there, you could see that every $5, there is some major resistance levels. Now, when I go to the chart and I look at NVIDIA, you could see right here, those orders are right there, 125, 130. So you could see all the future orders out there. Okay. Now, how do we know they're buyers or sellers? Well, it's very easy. If the stock is going up, you're on the ask side. Those are sellers because you're below that number. If the stock was to go down, the number you see on the bottom, those are buyers. So that's how you know if it's a buyer or seller. Okay. So if you own the stock at 120, you want to sell it, that's who's out there. Does that make sense, Raj? All right. Very good question, though. Okay. Now let's go back to the PowerPoint. Now I'm going to get a little bit more in detail and show you some other stuff. I'm going to show you where to get this stuff. Okay. This ain't the Fausto indicator. I'm not selling you anything. I'm going to show you how to directly get it through the exchange so you can use it towards your Metastock platform. But let me just tell you a little bit about myself, okay? And so you understand where I come from and why I've been here for 35 years. Now, if you see this article up here, Forbes wrote a big article about a bunch of kids tournamenting Wall Street. That I was one of those kids back in, you could see here in the bottom, 1998. I've been doing this since 1995. What's really cool about this photograph is the TV, the monitor. We used to make money on a 15-inch monitor, okay? And if you look at that monitor, what's very important is, do you notice you see numbers? That's what I'm about to show you next. The technology I'm showing you here has been around for 40 years, okay? This is not something that just came out last week. Now, unfortunately, some of you are going to be like, my God, I never heard of this before. You know, it's like AI, okay? I don't know if you know this, but AI has been around for 50, 60 years. Just now, recently, it's been It just got so advanced, it got a lot better at it. So this technology's been around forever, and nothing really has changed. All right. Now, over the years, I started the first school in the industry. I went on my own. I competed against every school, and I beat every school I went up against. And I also surround myself with great traders that taught me how to be better at what I do. Now, I've learned how to become a better swing trader, a better options trader by everything that I was taught as being a market maker. And by learning that is by me surrounding myself by these traders. I am also a regular guest at NASDAQ. If you follow us on YouTube or Instagram, you can watch some of those video shorts. I do projects for NASDAQ, as in helping them how to teach people how to use the exchange. So just to let you guys know that, and I'm going to show everyone here how to do it. Everyone here needs to understand how to trade the market. It's amazing how many people don't know how the market actually works. And I'm going to show you how to keep it very simple so you can apply it towards your marketing. Now, I taught people for the past over 30 years. You could see these people out here are just like you. My goal today is I'm looking to educate all of you to hopefully be part of my team where we all actually work together and trade together. Now, let me explain something to you. This is not about me. This is about you, okay? Now, the biggest and most important thing about being a good trader is not about making money, okay? I'm like, what? No, it's about controlling the losses. That's how you become a very good trader. And being in today's markets and going into this week with earnings, this has been a really, really busy week. Now, if you look over here, there's been a lot of stocks that have earnings from last week. This week, we got a lot of good earnings. We got this afternoon, we got supercomputers, we got AMD. Yesterday, you saw we had Palantir, Uber's coming out, all these stocks. And listen, they all trade exactly the same. They all trade by buyers and sellers. But the thing is, you need to know where the buyers and sellers are, and that's why we have to focus on the right of the chart. Now, let me just give you a quick example. Tesla up, Apple down, Hims up, Eli Lilly down. What do they all have in common besides one had good earnings, one had bad earnings? Like Tesla had good earnings, bad earnings, but it ended up going up, after the phone call. It all starts by the buyers and sellers. So what I want to talk about right now is something that I'm going to tell you everyone where to get it, okay? And you could use it towards your Metastock platform or any brokerage firm. I'm going to show you a very important page where I'm going to send you to the NASDAQ market, and you're going to trade on their exchange. Now, let me explain something to you really quick before we go forward to this. I want you to understand what you're about to learn. So listen carefully, because it's going to be a little disturbing. You have a seat on the exchange. Now, some of you be saying, how's that possible? Don't you have to pay millions of dollars to be on the floor? You used to. The exchanges got rid of that. They wanted the market to be a fair market system. So you're going to have a seat on the exchange. I'm going to show you how to get it and how to do it. I'm going to teach you how to utilize it. All right. So question is, do you have these 4 important windows? And I assume a lot of us have a chart if you got the Metastock platform. I assume a lot of you have a big percentage gainers and losers. But what you probably don't have is something I call level 3 and level 4, okay, which I'm about to teach you right now. Now, listen, fellow traders, as of right now, we are going to get into the most important part of my education. So I really need you to pay attention right now, because I'm going to show you how we find these stocks. I'm going to show you how to trade them. All right. Now, finding them is not very difficult at all. Okay. They're very easy to find. They're all a big percentage gainers and losers. And I'll show you in the next few moments, in the next few slides, I'll show you some big winners that we trade even today. Stocks that are up 300%, 200% on the day, not in the year. Okay. And you're like, oh, I heard about these, or penny stocks. We don't trade penny stocks. I'm going to show you how to trade NASDAQ national stocks. I'm going to show you how to dissect them, but just letting you know, finding them is not very difficult at all, okay? What's difficult is which one that you see on this list is going to give you the least amount of risk with the high amount of reward. That's what we have to look at. So I don't know if anyone here follows us at Cybertrade University, but we are live every single morning at 9 a.m. at 2:30. So we're live on YouTube, Instagram, TikTok, whatever channel you prefer, X, we're on all of them. But I do a live morning broadcast of what's going on in the pre-market for about 15 minutes, and then we trade going into it. But all of you are not only going to have access to that, but you're going to have access to come into the trading room. Just make sure that if you do subscribe to our channel, just like us and friend us, okay? There is a QR code up on the right-hand corner. If you want to attend that free workshop, you could just turn on your phone, scan. Basically, all you need to do is turn on your phone, take your camera, and you can scan it. We can bring you right to that registration page if you want to come and join us. Now, the big thing that we have to understand is being a trader is having a game plan. That's about it. That is the most important thing that you have to learn when it comes to trading. How do you have a game plan? Follow the money, okay? Now, understand something. If you think you're smarter than the people out in the street, you're going to blow up your account, okay? Listen, these people are trading millions and millions and millions of dollars worth, millions of shares, not even millions of dollars, billions. What makes you think you know more than them, okay? Well, guess what? You don't have to. You need to be a leader. You could just be a follower. Remember, we're just trying to make the crumbs. Some of us trying to make a couple $100s a day. These people got to move millions and billions of dollars. And that data is available to you. And it's amazing that 95% of the people don't know that. Now, what I want to do really quick, actually, I want to just do something really quick. I want to have a little fun right here. Hold on one second. Yeah, this is a good one. Okay, hold on. Okay, so anyone here use ChatGTP? Okay, what I'm gonna do is I'm gonna ChatGTP, what is the failed rate of people trading in the market? Okay, look what it just basically told you here. 80 to 90% of the people fail, okay? Only about 10% consistently profitable, of those few than 1% of sustainable of life-changing profits. What are the failure rates? Lack of education, discipline, over trading, excess trading, emotional decisions, all that stuff, underlying competition. So what's the competition? You are against the institutions, the algorithms, and the pros. All right. That is basically what we have to beat. Well, I'm going to show you how to beat them. Does anybody here have NASDAQ Book Viewer? Okay. This is directly from the exchange. You can get it through a brokerage firm. Okay. They do offer it, but just give me a quick yes or no. How do you know? I'm going to show you that, Raj, in the next few moments. Anyone here have it? All right. So by me seeing what you guys are saying, that just shows me about 80, 90% of you don't have it. Now, let me show you the power of what I'm about to show you about NASDAQ Book Viewer. Okay. So let me get my crayons. Hold on. So I can do some drawing here. All right. So here's NASDAQ. This is the actual exchange. And what we're looking at is Snapchat, the stock Snapchat. Now, what we're seeing is every buyer out in the entire world that wants to buy Snapchat and every seller in the world that wants to sell Snapchat. Whoever wants to buy the stock for the most amount of money is up on top. Whoever wants to sell their buy shares for less money is down at the bottom. Whoever wants to sell their shares for the most amount of money is up on top. Whoever wants to sell for more money is down at the bottom. So what you're seeing is a chat room of every single buyer in the entire world, which is including you, where they want to buy it, where they want to sell it. And remember, this is a competition thing. Some people don't want to pay a lot of money for Snapchat. That's okay. You'll just be down at the bottom of the list. There's some people out there that want to sell their Snapchat. That's okay. You're just on a bottom list. But there are people that are pretty desperate, like, no, I really want to buy this stock. And there are people on the offer like, no, I really want to sell this stock. So That's what you're seeing, and that is the power of having access to NASDAQ Book Viewer. Now, let me clear this out. Let me show you how we're going to utilize this data. All right. So let me change it here. All right. So what we got right here is stock Tesla. And you could see how it started right around here on 256, went all the way down and stopped right around this 245 number around 10 o'clock in the morning. And then for some reason, it went up. Why did that stock go up? What made it pick that number? It was that Thetis. If you can't, Thetis, just send me an email if you want my book at faustop@ctucorp.com. All right, just send me an email. There you go. All right. Why did that stock bounce at that 245? It wasn't support. It was buyers. Buyers make support. Support doesn't make buyers, okay? Now, where are the buyers? We look here in the orders. We're going to work our way down, and you'll notice all the way down here, which I know is difficult to see, which is this number right here. There are over 250,000 shares, 350 orders that equal that 200,000 shares to buy it at 245. Now, is that a lot? Well, listen, there are 1,000 share buyers, there are 2,000 share buyers, 200,000? Yeah, I think that's a lot. Because when you work your way down that list, you notice that there's a lot of 3-4 digit numbers, and the real big number is the 6-digit number. Now, how much money is that, you might say, huh? Well, I don't know. Let's go find out. So, hold on. Too many windows open up over here. So we have 200,000 times 245. It's about almost $50 million worth of stock. And by the way, that's not one person. That's 350 people around the entire world. Okay. Now, I don't know about you guys, but I think that's a support level. And how do I know it's a support level? Because it did that. It did exactly what it's supposed to do. It came all the way down, hit that support, and went back up. Now let's bring up another one. Hold on. Let's bring up another one. Let me clear this up. Hold on. Erase and bring it up. Okay. Let's look at our resistance levels. Let's look at Amazon. Stock's at 182. Starts early this morning, goes all the way up to 187.50, and then comes right back down to 181. Why did it stop at 187.50? Why didn't it stop at 190? Why that number? Well, when a stock goes up, what resists this? What resists the stock from going higher? Sellers. We look over here on the level 4. We're going to look for the sellers column, and we'll notice that as we work our way in the bottom, hold on a second, where's my crayon? We can see that the big seller is right here, which is that 100,000 share seller and 11,000 share seller at 187. Oh, what a coincidence. No wonder why the stock didn't want to go past and go to 190. You got 100,000 shares on blocking you from going there. Now, that is what makes a resistance levels. Now, just out of curiosity, did I lose anybody yet? Is anybody following along? Just give me a yes or no. Everybody, that seemed confusing? Simple enough, right? Okay, well, don't worry about it. I'm going to show you some more. Just in case. Just in case. Let me clear this out, and let me change the slide. But before I do that, let me just explain that these big block orders, we call them here at Cybertrade University iceberg orders. An iceberg order is a big block order that's out there. I know you've heard of them. You might even think they're a unicorn because you never seen one before. Well, guess what? Those unicorns are real. Those iceberg orders are real. And that's what makes the stock hitting support and resistance levels. Let's look at Robinhood stock. All right, let's have a little fun here. You're looking at a chart, you own Robinhood, stock's going down. right? What do? Well, you could hope, you can pray, or you could do what most market makers do. Where are the orders out there? Now, the problem with the chart, when you look at the left of the chart, you don't see buyers. You could see support levels, but you don't really see the buyers. So the only way to see the buyers, because a buyer is going to make it stop it from going lower, is we need NASDAQ book viewer. Without looking at any indicator or anything else, let's just look right directly to the exchange. And I'm going to work my way down. I'm going to look, okay, where's some big orders out here? And the only biggest order I see out here right now is this 50,000 share buyer at 47.15. Now let's think about this, traders. What do you think is going to happen when we get close to 47.15? Is it going to go up? Is it going to go down? What do you think's more of a, where do you think is more of a support level? The 50,000 share buyer or the 1,000 share buyer? Because like it or not, it's probably going to get down there. And you know what? It did exactly that. Went to 48, dropped down to 47, tested it right there, shot right back up to 49. Now, don't tell me this never happened to you. You ever buy a stock, and as soon as you buy it, the thing goes down? Or how about when you sell the stock? You ever sell a stock like, damn it, why is that when I sell it, it goes up? And you're thinking that somebody's watching you. Listen, nobody's watching you. You're just not watching them. You think they're going to play games with you? They got so many orders to deal with. This is they don't have games to play. The only game that's being played is you not knowing how to play the game. See, a lot of it is, this is pretty easy stuff. The only problem people fail is maybe you got a little greedy, got a little cocky. You know what I mean? Maybe you want to make a little bit more. Maybe you want to buy a little cheaper. You know what I'm saying? I'm going to tell you a really funny story. Okay. I'm going to tell you a funny story. Something I never said to anybody. I just got off the phone, literally got off the phone. Let me show you something really quick right here. I won't show it. All right. So I just got off the phone with Porsche. Okay. I'm selling my Porsche. All right. Bought the Porsche brand new for about a year. I want to change it. I want to get a pickup. I found a pickup I really like. I'm getting a Tundra. Big difference, right? I go from a Porsche to a Tundra, right? So I'm trying to sell the car, right? And I know what the car is worth, but these people want to steal it. They literally want to steal it. So now my phone's like ringing off the hook. Everybody's interested in buying it. Now they're bidding for it. Okay. I had one person that offered me X amount of money, and I told him. And the other person's like, oh, I'll pay more. The other person says, I'll pay less. And I says, well, he outbidded you. It's the same exact thing, right? Now, the reason why I'm able to do that is I know how to play the game in the car business, because I used to be in the car business 20 years ago. My brother's in the car business, okay? And they know I know how to play the game. But they all want to steal it. Listen, you're telling me you wouldn't want to steal NVIDIA and pay, oh, I would love to pay $80 for NVIDIA. Well, unfortunately, you can't pay $80 for NVIDIA because you're being outbidded, okay? So that's the game. How many of you sold a car to a dealer? Anyone here own a car and sell it? Don't you feel like when you want to buy it, they're your best friend? When you want to sell it, you're like their prostitute. They're like, you have to like, they're raping you. You're like, I don't understand. Like why one day was this price? Now I want to sell, it's worth that. I see in the paper it's worth, yeah, but where we're going to make our money? I understand they got to make their money, and I'm trying to be fair, but I also know how to play the game. This is the reason why I'm bringing this up. It's the same game. You ever buy a house? Wouldn't it be nice to see where all the other bidders are? Don't you hate when the real estate broker comes up to you and tells you, put a bid in? They're like, where? Wherever you feel like it. Well, I don't want to do it too much. I don't want to have too little. I don't want to get outbidded. Now, that's a chance you got to take. Imagine there was a level 3, and you could see where those buyers are on that bid, on that house. Well, you could do it with the stock market. Okay. Now let's talk about a stock that's going to have earnings today, SMCI. Now, SMCI not too long ago took a very big hit. And you're looking at the stock right here and you're sitting there wondering, how does a stock go from 36 and decides to stop all the way down here at 28? Like, where did that number come from? Why wouldn't it stop at 30? Why that number 28? Is it support levels? No, it's not support levels. You got a 235,000 share buyer out there. You're talking 222 orders out there. Now, I don't want to sound like a broken record, and I want to keep repeating myself, but this is you having a seat on the exchange. Why would you not want that is beyond me. Because I could tell you this, fellow traders, you know there's something called the right of the chart. You heard of it? You heard of algorithms? You heard of high frequency trades? You heard of dark pools? You heard of AI? Okay, you heard of market makers? You heard of limit orders? But you never seen them. Well, now you can see it. Why would you not want this information? It's only going to help you, not hurt you. Now, you see a stock that's got a big support levels. I don't need to repeat it over and over again, but that's how a stock goes from 29 from the 235,000 share buyer in a matter of 15, 30 minutes up and goes up about $1.40. How cool is that to make $1 on 1,000 shares in a stock? So, you know, if you made $1, not the $1.40, let's just say you made $1 on the stock in 30 minutes. $1 on 1,000 shares, $1,000 a day, it's $250,000 salary. You ever think about that? You probably think about like, what the hell's $1? I don't know about you, but $1 is a lot for us. Maybe not for you, but for us, it's a lot. Now, this is where the greed and the discipline comes into play. Whenever you own a stock at Cybertrade University, the biggest thing that we kind of teach you is you got to know where to put your limit orders out there. You got to always look to take a profit. Okay, I don't care how much you love NVIDIA, love supercomputers. Okay, there are always going to be sellers out there, and those sellers are not going to be me and you. It's going to be the street. It's going to be Wall Street. And you're looking at a stock looking beautiful, trending up. You need to know where everybody wants to get out. And then once again, when I go over here and look at the exchange, I see I'm going to go up against a 200,000 share seller at $30.40, not $30.50, not 30, not 31, but $30.40. I think I want to get out before that, because you didn't. Now you're down to 29, and that's how you convert a winner into a small winner, or maybe even a loser. Okay, because maybe you're like, oh my God, supercomputer is doing great. I'm watching it on CNBC and Fox Business. They're crowning it. The CEO is on it. And then I buy it and the thing goes down. Well, it's all about supply and demand, fellow traders. So that is what we call the iceberg orders, and that's what we call the support and resistance, because it's not what's on top of the water, it's what's on the bottom of the water. And a lot of you are not looking what's on the bottom because it didn't work out too well for the Titanic, like I always say. Now, who here would like to get a sample of NASDAQ Book Viewer? Go right to the exchange and get it and put it up against, use any platform you have. Okay? Well, this is what you need to do. Send me an email, and I'll show you exactly where to find it on the NASDAQ website. So, and the reason why I do not want to bring you directly there is because I want to give you 2 videos. I made 2 great videos that are going to show you how to download it and how to set up the defaults on it. Okay, it's about 2 5-minute videos. So you can go right to NASDAQwebsite.com, go to NASDAQ website, and you go right to them. And believe me, I don't work for them. They're not paying me to do this here. I'm neutral. I work for you guys, but I'm just showing you, like, you can go and pay. You can walk right to the front door to New York Stock Exchange and see where Goldman is. You want to know where the door is? It's right there. Some of you are like, I didn't know that. And and the only reason why anybody would not want to go there is because of ignorance. So like I said, open up your inbox, type in new, Fausto, just write NASDAQ. And by the way, some of you, I probably don't know your name because some of you give me an email. Just write in your first name right here, like Fausto, and just hit send. And I'll get a copy of it, okay? And I'll tell you exactly, I'll give you those 2 great videos, all right? And with those 2 videos, I'll give you, where to find it, all right? Very, very important tool. Now, for me, following the orders is everything. You want to know where the right of the chart is? That's where it comes down to it. All right, so everybody got that? Everybody got the email? Yeah, my email's still there. Okay, good. All right, let's go to the live markets to have a little fun. We got about 10 more minutes before I go, actually. I mean, you got some more speakers here. But let's go to the live markets and let's have some fun here. Because I want to show you something which is a little bit different than level 3. What I showed you before is called level 4. Now, what level 4 is this. Basically, it's everything that you get in level 3, which is on the right, but now you're seeing it on a heat map. So you get to see how long they've been out there for and, and if their orders are getting executed. So it's a little bit more of an advanced tool out there. And I don't know, but let's look at a stock. By the way, anybody trade Bitcoin? You got Bitcoin right here. You could trade, look at this. You could see, oh, wow, there's a big order out there in Bitcoin. It looks like it just got executed too. Oh, that's good news. You could see all the Bitcoin orders out there. How big was that Bitcoin? It was 189 Bitcoin at $94,900. And it looks like he came in at 10 o'clock this morning and he just got filled. See that big green ball? Okay. So yes, you could use this towards Bitcoin. You could use this towards futures. You could use this towards options. But right now, I'm just going to focus on stocks. Let's look at a stock that's moving that we're trading this morning. Okay. So I want to bring, this is a good one right here. Let me bring up the execution system. Did you guys see what happened to Pony, the stock Pony? So Pony right here, you can see the stock just about less than a week away. Stock was trading right around $4.50. And right now the stock is trading at $14. Do you see how every day it kept going up, 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 up? Okay, so this is how a stock converts into a day trade, turns into a swing trade, all that good stuff. Now, why did that stock go up? And most importantly, when are we going to get out? Well, if you notice right here, and let me just go a little further. Get some more data here. You see this big red line right here? See all these red lines? These are all sellers. Okay? These are all sellers. Let me just get a little more data in here so I can show you. All right. So you can see right here, there were these sellers out here. There was one over here at 13. He got filled. There was another order out here at 13.50. He got filled. And then the big order started showing up around 14. Okay. And you can see an order here, here, and here. And basically, the stock has got a lot of buyers. Let me go back further. There was a lot of orders out here this morning, right around 11.50, 11. Look at all these big lines right here. Those green balls, what they're saying is that those orders on the offer got executed. This is what we're going to teach you in my class. A lot of big orders out there. They all got filled. And this stock just literally, once those big orders got done, boom, we went from 11 all the way to $14. Now let's do the math. What is 11 minus 14? It's $3. Okay. On a $11,000 investment. Where's my, okay. So where are we? There we go. Hold on, I'm listing my calculator. There we go. It's hiding. All right, there we go. So I'd like to show you this. $11 times $3 times, oops, wrong one. $3 times 1,000 shares equals $3,000 times 52 weeks. Times 5 is 15,000 times 52 weeks is $750,000. Okay. Do you really need $3? If you just made $1, you did pretty well. If you made 50 cents, probably someone would be ecstatic. Now, did you have to trade Palantir to do that? Did you have to trade NVIDIA to do that and risk 113,000? Did you have to trade, Tesla out there at 274? No. See, but if you look right here, Pony is the number 4 biggest percentage gainer. All right. And Pony's got something, I know what the company does. I don't need to go there and explain, well, why with the AI and, this is another auto driving platform of China, whatever it is. Like, oh, I'm against China or whatever. Don't talk about China. Who cares? You think I care what the company is? I'm just here just to make money. You think I care what these companies do? All I care about is risking the least amount of money as possible to high amount of reward. Okay. So that's what matters. Oh, early's earnings come out. I don't care about SMCI. I get it. But if I could trade it, it's moving, I got big buyers, why not? The goal is just to make a day's pay. That's the difference between people that didn't get taught by market makers and the ones that were. Now, how do you know if it's not a pump and dump? That's an actual, listen, pump and dumps are pretty easy to follow. We see stocks that have short squeezes in them, but that's okay. Did you email me back? Raj, I didn't see you email me. And I know you've been chatting up a lot. Did you email me that you're interested in getting the NASDAQ book viewer if you want to learn it? Because that's the only way I could show you is you got to watch that video. All right. If you want to you got to get the NASDAQ book viewer. All right. Let me go back to the PowerPoint because we're running out of time here. And I want to not take too much time away from the other presenter. So if anybody here is on social media, we got over 3,000 videos on YouTube. We broadcast live every single morning. We're on every single channel, Instagram, TikTok. I do a lot of shorts. So just make sure you subscribe to the channel, leave me a comment, and share us, and give us a thumbs up. All right. So if you want to get those alerts, you want to get those, follow us in the morning, a watch list on Telegram, wherever you're a fan of. We basically broadcast them all. People are like, oh no, I don't go on Twitter. Oh, I don't go on Next. I don't want to touch TikTok because I want the Chinese know I'm hacking my phone. That's okay. You don't have to. You can do it on anything else. Go on Facebook. We're on Facebook Live too also. All right. So, and like I mentioned earlier, you could apply this towards Bitcoin or anything else, futures. It runs all the same. All right. Now, let me just kind of explain a little bit more about what we do at CyberTrade University, everybody. So we're endorsed by every brokerage firm in the industry. This just names a few. I've been doing events with Metastock with Jeff Gibbley for, like I said, for 30 years. And I feel like I just met him yesterday. We're almost like brothers. He knows what we do. It works. If it didn't, he would never have me here. Okay. I've done presentations on the biggest brokerage firms in the industry, Thinkorswim, Charles Schwab. You name it, Fidelity, all of them. Also, if you ever want to look up CyberTrade University, a little bit about background, we got a 5-star rating on Google, which is basically unheard of. And not only that, but we were ranked #1 school from ChatGTP for day trading schools in the industry. Okay. So if you're a big ChatGTP fan and you always like to ask it, it ranked us #1 in the industry. Now, if you want to come in my live trading room, okay, and you want to join me for a week, all we're going to ask for is a $9 trial. I'm going to give you the book for free and the NASDAQ. If you want to go and figure it out on your own and use the NASDAQ book viewer, you're more than happy to. Okay, feel free to go down there and do it. But if you want to come and join us for our live trading and be there all day, all it's going to cost you is $9. Okay, now this is what you're going to get for $9. You're going to get live commentary. We do it all week long. You're going to get to meet the wonderful traders, the hundreds of traders that are in our trading room, thousands actually. Listen, a lot of people are not there all day long. Okay, some people only come one day a week. All you got to do is take your phone, scan the QR code in the bottom right-hand corner, or type in the trial on the bottom. We do live audio commentary. You get to meet some of the best people in the podcast in the industry. There's Jeff right there, good-looking fella. Okay, we've got a good podcast I did with him. You're also going to get a copy of my free book. And in a week, if you feel like we wasted your time, I'll give you $9 back. Listen, I don't make money on $9. I didn't intend to make $9. And $9 is just tells if you're a real person or not. And it just gives us a little bit more, give more skin in the game. So we're not looking for freebies. If you're a freebie person, I got bad news for you. This trading is not for you. All right. There's nothing free in the world in trading. I know you don't work for free. So, but we're not asking for, $9,000, $90,000. $9 just tells if you're a free person. So we're going to give you some workshops. We're going to give you some trading videos. Oh, and one last thing I'm going to mention, I'm going to give you that you probably didn't get with anybody. I will personally, if you do reserve, I will talk to you on the phone, and I will give you a personal coaching class. Now, the reason why I do that is that some of you here are probably going to have some questions to ask, and you're not going to know exactly, what to, you don't probably not a good typer like me, and maybe you're embarrassed, whatever it may be. So listen, as long as you're in the trading room and you take it seriously, we'll have a conversation, and I will be extremely honest with you. I'm warning you right now, fellow traders, it's not for everybody. And I will be the first one to tell you point blank. And I will save you thousands of dollars in losses. Let me tell you something. Trading sucks, okay? You lose. It's not worth it to do it the hard way. I just showed you, ChatGTP just told you, it is an 80 to 90% failure rate. Now, it's not that high being part of our education. And the only reason why a lot of people fail with our education is that some people just get cocky and greedy. And that's normal, okay? But at least you got a fighting chance to know what to look like. So if you want to see the right of the chart, here's your chance. And all you got to do is type in ctu.co. We got that link right there, or email me. A couple of questions came across here. When you have the trial open after the conference week, so we could take part of it? Yes. So click on register now. It's going to take you about a minute to fill it out. And what you're going to do is you can start on Monday, which I kindly recommend. Start with a whole fresh week. You got some great presenters here. And by the way, everyone here should try a little bit of everyone's stuff here, okay? See who you like. Try it. You don't have to spend a lot of money, okay? But go out there and try it a little bit and see what fits with you. Listen, some people like blonde. Some people like brunette. Some people like steak. Some people don't eat fish. Some people don't eat meat at all, but we got to eat, right? So trading's the same thing. You need it. Just got to find someone that is your style, that you understand it. But I can tell you this, I'm not going to change anyone's style. You like using indicators, you like using futures, whatever it is, you know what? You like using TD Ameritrade or TradeStation, whatever it may be, you could apply this to everyone's platform. I am just showing you how to read the market using the right of the chart. All right. Any other questions? By the way, a couple of people I just saw just come through, registered. Thank you very much. Oh, New York. Karana, I just got your registration from New York. Good. Well, looking forward to seeing you. And Mohammed, I see you from Texas. Good. Welcome aboard. All right. So any other questions, fellow traders, before I pass it on to Jeff to take over and bring in the next speaker? Just remember, traders, you got to learn before you can earn, right? And it's all about following the money. You hear about it, you heard about it, now you actually seen it. I do a lot of presentations for NASDAQ for several years. It's been there forever. And listen, they don't need Fausto Pugliese and Cybertrade University. I need them more than they need me. But they know I was one of the actual beta testers that helped build that platform. They know how much we talk about it, and they know that if you just knew how to trade the market, guess what? They make more money. You think they want you to blow up your account? That's the last thing they want. And that's what ends up happening. People blow up their account and then they're out of business. They don't want that. They want you to continue to trade. You trade, they make more money on it. You stop trading, they don't make any money. So that's why I've been doing a lot of these presentations. But you got to know how to play the game of trading. All right. Any other questions? One question personally I usually comes up and asks me, how much money you need to trade with? It's a good question, $9. What are you worried about how much money you need? That's the least of your problems. Don't worry about a brokerage account. You're not going to be trading. You know what? Let's go out there and learn how to drive first before we go buy the car, like I always say. Let's go out there and rent before we actually spend all this money and lock us up in the house and find out that it was a big money pit we should never bought in the first place. You got to see if it's for you first. All right, traders? So with that said, Jeff, thanks for having me here. I love talking to your staff. I got to get ready to trade the close myself. I could talk for another hour if I was, but I appreciate so much, Jeff, for having me.
All right, good enough. Fausto, we always love having you. You're always welcome here. All right, see ya. ctu.co.trial. The link is in the chat. It's in the description as well. Thanks again, Fausto. All right, let's go ahead and do this. Go ahead and make a few changes here. Dismiss. Okay, yes. And as we're kind of transferring into our next presenter, before we do that, I want to say thank you to another one of our sponsors, CMT Association. CMT Association, great organization. They've been supporting us for a number of years now. If you're interested in working for a bank, if you already work for a bank and you want more responsibilities, more assets under management, I have documented proof that having a CMT designation after your name will help. And they'll show that to you a little bit later. They're coming in on Saturday to talk a little bit about that. However, you can find out about CMT Association now if you go to www.cmtassociation.org. Of course, we are Metastock. Metastock's been the #1 rated software in its price category. It's been rated that for 32 years in a row. Kelly came in earlier. He talked a little bit about all the systems that are in Metastock, how to evaluate them. You can kind of systematically figure out what works best in the markets. We are running a little bit of a special as part of the conference. All of our conferences promos you can find at metastock.com/conf promo. But what we're doing for Metastock, we have two versions. We have the delayed version, which gives you the 15-minute delay quotes. It's only $75 a month. If you pay for a month, you'll get the second and third month for free. Allows you to scan during the day, see what the market's doing during the day, and it works with daily, weekly, monthly, quarterly charts, anything above a daily. Great. $75 a month. If you buy a month, you'll get the second and third month for free. You also get somebody to help you install it, help you kind of walk you through it. You get unlimited access to our support, and there's no commitment to keep it. So for $75 a month, you can trade Metastock until August 6th right now if you go to metastock.com/conf promo. So, John, I know you're here in the audience already, and I'm going to give you a formal introduction, but I was hoping you can help me with something first. Are you available? Oh, he's here. I think he's maybe stepped away from his desk for just a second.
Oh, can you hear me now?
I can now, yeah. There you go.
There we go.
As you know, we're giving away prizes all week long. And so I wanted to help you. Yeah, since I'm running solo, the person that's usually helping me, Greg, is kind of out with a sick today. He's got a little bit of a sore tummy. I'm hoping he makes it tomorrow. But what I'd like to do is give away this book right here. It's called High Profit Candlestick Patterns. It's by a mentor of mine, Steve Bigelow. Very, very good book. Probably one of the very smart guy around candlestick patterns, somebody I really, really like. A really good partner of Metastock. And somebody that we miss a lot. We're going to give away this book. John, what I need from you is a number. Can you make up a number for me?
I've got it in my head.
All right. Well, as long as it's between 1 and 5,181, I'll take it.
Are you ready for it?
Yeah.
23.
Ooh, okay. We're going low today. The last one we did was 2. So, David I in the USA. David I in the USA. You just won this book. I'm going to email you next week. It's not a scam. I'm not teasing you. You did win a prize from the conference. I just need your address. Make sure to respond next week when I send you the message. So there you go. Let me talk a little bit about John. John's a good friend of mine. John, how many times have you spoken at the conference or at an event we've done? It's been a while.
I mean, we've been around 17 years. I think we've been talking since the very early days. So I'm going to say a good chunk of that.
I remember learning quite a few things from you, including, I'm trying to remember the name of the particular indicator I'd never heard of before, Twigs. I learned Twigs from you.
Another fellow Aussie, actually, that I learned it from originally. And but yes, we even co-hosted an event in Vancouver once a long time ago. It's back in the old days of brick and mortar.
Cool. Yeah. Have you done any in-person events recently?
We did one in Vegas last year at the Money Show, and I love them. I mean, we started off our journey at Acorn as a in-person school in Vancouver, and I kind of miss the days of everything being face to face.
Yeah, for sure. Me too. I just sent you the presentation screen. It should have asked you if you want to share your screen.
Excellent. Just we should have my screen popping up. There we go.
There you go.
Have you
I can see
have
you.
you got me?
I can hear you. You know what? I'm just gonna get out of the way. It's your turn. Go.
Excellent. All right. Well, thanks for the introduction. It's been great working with Metastock. Jeff and the team at Metastock, of course, they're all such great guys and here to help, and as is everyone in this event. So I just wanted to give a quick shout out to all the Acorn members in the room and the Metastock community. It's great to have you all here. We're going to jump into a kind of a very timely conversation about the market in today's talk. We've gone through an extreme period of volatility, obviously, through the beginning of 2025, and I think a lot of traders are wondering, you know, is the downside over? Have you missed the bottom? You know, a lot of those kind of, this is a time of peak emotion, I think, in a lot of traders' minds, and that's dangerous. So today's presentation is all about looking at, you know, where are the areas of strength that we're most focused on in terms of where the value for the rest of this year may lie, and what specific areas we're focusing on and why. So it's going to be full of you know, kind of actionable insights that you can take away with you in your portfolio. So very quickly, just before we get started, obviously, we'll do a quick disclaimer because trading does involve risk. It's important to understand that. And what we're going to be speaking about today is not a recommendation to buy or sell any securities or stocks or options. This is for educational purposes only. Acorn Wealth is not a registered financial advisor in any jurisdictional province. So always be aware of the risks of trading and don't risk more than you're willing to lose. Any past returns discussed do not guarantee future results. You know, any positions discussed today may be being held or positions we're looking to get into by either us as a company, Acorn Wealth, or individually, myself or the employees and contractors of Acorn Wealth. So with that being said, we'll move over to diving right on into things. And the first thing, I guess, that we've already touched on is the overall market. There are a lot of headlines going on. If you've been following myself and Acorn Wealth for the last 6 months, we were quite vocal about the fact that we felt the market had topped in February. We did a number of events back in early February talking about that top. I was going to say Bill Gates. Bill Gates, Warren Buffett himself also talked about the fact that the market was at a very, very dangerous point, and it's been, you know, fueled by so many different headlines. We've had inflation, we've had tariffs, we've had rate hikes. We've had all of the kind of emotionally charged headlines that that one could expect in a volatile market such as this. And just 1 second here. So when we go and have a look at, you know, what that's looked like in terms of the charts, I'm just going to firstly take a look at the price movement itself. This is what the S&P's done. Obviously, I'm sure this is a chart that most people have been spending a lot of time looking at over these last few weeks. So if we just take a quick review, what we can see is that the way that the S&P built going into the end of last year and beginning of this year is it formed what we would call an upward channel. So just to touch on the technicals really quickly to begin with, that was one of the primary reasons that we were short the market or at the very least going into cash on short-term positions, because that pattern going into the end of February was one that has a very bearish story to tell. It is a predictor, a leading indicator of bearishness to come, a downward break, and we can see that what we got after that consolidation of the upward channel is exactly what that upward channel generally does predict or anticipates, which is a bearish breakdown. Now, there's obviously been lots of headlines to fuel that uncertainty and things of that nature, and we have, since that very sharp drop, we have since seen an equally as sharp rally back to the upside. And so this has been a very fast moving market. I wouldn't call it chaotic, because chaos, that word is very charged with the idea that it is random or unpredictable or without order. You know, I guess that's kind of almost the definition of chaos, isn't it? Without order. But this has been quite orderly. It's been quite technical. And so the big test from an overall market perspective that I see occurring here is, can this indeed break higher? And we're really at that next really key test point right now. The upward break. In fact, before I go any further, actually, I'm interested to see what the audience thinks here. You've already heard so many great speakers today, and those of you who were here yesterday would have heard everyone talk about these types of things. Where's everyone's heads at in the audience right now? Put a 1 in the chat box if you think the market's going to go up from here and continue to retest the recent highs. Put a 2 in the chat box if you think we break bearishly from here. Put a 3 in the chat box if you've got no idea. Right? Where's everyone's heads at in terms of the overall market right now?
John, we've been asking people all day on YouTube when they join with a poll. I'm going to share those with you too, if you don't mind.
Yeah, please do.
So the question was in YouTube is, how do you feel about the market between now and the end of the year? 41% said I'm bullish, 38% said I'm neutral, and 21% said I'm bearish. So there you go. We're also getting some people voting right now. So there you go.
It's about the same split by the looks of things. So this is look, I'll put it this way. We were highly confident of a market crash in the end of February. I would call that it was a 95% level of confidence that this was going to be a nasty crash in February. If I was to in terms of the entire market, if I was to put a conviction level or number on what happens next, it's certainly not as obvious right now. There is more uncertainty about the next direction in the market in terms of where we're at today than how confident we were of a crash back here, because we're at this kind of test point. And I do think there's an argument for a bullish or bearish move to be made at this point. The bearish argument is you'd be looking at essentially kind of this a head and shoulder system. That would be the bearish argument at this point, and we've already kind of almost broken high enough to challenge that right shoulder. So that would be, but the bearish argument would be that we don't go any higher than here. We kind of hang around in this choppy sideways action, and then a drop. That would be the bearish argument. And so what occurs from this point on, from an overall market perspective, is going to be important chart-wise. The interesting thing is that, you know, if you look at when we were up at these previous market highs, not only did the patterns suggest that the market was to drop, but you also had the Buffett indicator. Buffett talked about years ago that if the US market ever got to 2 times the GDP, 200% of GDP, then in his words, you are playing with fire. The market hit the US market hit 2 times GDP, 200% of US GDP right here. All right, so that was the top. Now, since we've had this correction, we've had this recovery, we're obviously now under that 2 times GDP, and Buffett recently said that it's kind of more back into buy territory because it's now under that level. But really, not a lot has changed. You know, the structure, the risks, all these kind of things are still there. So we've really got to look in this kind of market environment. We've got to look deeper into the stories moving behind the scenes. It's too easy to just get caught up in what's the market doing, and I think that the right strategy here is to look at the undercurrents behind the market. So here we've talked about the market. You know, we've talked about the index, the S&P 500, and but really, what I'm far more interested in are the stories going on behind the scenes. So we want to peel back that onion layer and look at something that we've been doing now for, you know, since I've known Jeffrey and Metastock, and since we started 17 years ago, is looking at where the smart money is going. And so over the weekend, I've spent a lot of time deep diving into going beyond what's just the market doing, but what behind the market is really moving. And just to put this in context, if you were here at the Metastock event early last year, this was a theme that we spoke about at the beginning of 2024. At the beginning of 2024, we had choppy, uncertain conditions as well. And I came out and said, look, I think that despite all of this choppiness and noise, the place that I would be focusing on the most in 2024 would be the energy sector. Sorry, the real estate sector. Energy was later. We'll get to that. But we said for the beginning of 2024, real estate would be my favorite place to look. And so I just wanted to just go back to that for the benefit of anyone who was there, or of course the benefit of those who weren't. This was the chart that I showed back in early 2024. And we're going to look at this in terms of some of the things moving now in a moment. But just to take you back to kind of talk through what this chart shows us, this is an insider buy to sell ratio on the real estate sector back then. So the way you read this is the green bars down the bottom, that's telling us the ratio of how many insiders are buying their own stocks compared to the number of insiders selling their own stocks. And so if you take a look back, in terms of some of these previous times in history, back in 2015, we'll see that these green bars had shot up significantly throughout this low. So when these green bars shoot up, it's telling us that the insider buying outweighs the insider selling. We have this kind of high conviction activity where insiders are excited and see opportunity in buying the companies that they run, the companies they are ultimately the best experts in. And if we look at this black line that kind of goes across the chart, that's essentially the average buying to selling ratio level across the entire sector. So whenever we see these sharp spikes in buying conviction from the insiders themselves, this above average activity when it peaks has coincided quite reliably with excellent buying opportunities. Now that could be as a trader, where you're just looking for short-term trading ideas in the best sectors. It can also, of course, be used in position trading or even long-term investing. And you can see the strongest spike of which came in 2020, post-crash. You saw an extremely high level of insiders buying just before the bottom occurred. And so going into 2024, with this history in mind, what we'd been seeing was the insider buying spiking, in fact, 3 times in a row. So you might look at this chart and then say, okay, well, so in each of these times, the buying happened, almost at the exact bottom. But over here on the right-hand side, we saw the insider spiking before the bottom finally kicked in. And I'm going to address that in just a moment. But before we go into that, I just want to see, does everyone understand what I've shown so far? In terms of what we're seeing down the bottom, what that's representing. Just pop a 1 in the chat box if you do. So this now goes to the next piece of the puzzle, which is timing. Because insider buying is not a timing mechanism. It doesn't tell us when to get in down to the day, right? It's not because the insiders bought today, so will I. What it tells us is it allows us to find where the pockets of strength are to start preparing for. Sometimes it might very well be right at that bottom. Sometimes it might be an immediate action that's to be taken. In other times, it may be close to, which was the case in going into 2024. And this is where you start getting into the timing piece. And for timing, this is where we look to technical analysis. So the insiders are the fundamental research, right? The insiders looking at that data which I showed you before is looking at the fundamentals and saying, where could the next batch of hidden gems be coming from? Where could the diamonds in the rough be found? And that's where we look to insiders to find that type of invaluable research that we couldn't do ourselves, or would be very difficult to do to compete on that smart money level. To time that idea, that's when we look at the charts. And so the real estate sector, IYR, when we looked at the charts in 2023 and early 2024 and saw that all of that insider buying was spiking, right? What we saw is that price was still consolidating. So insiders were buying more and more and more in higher and higher levels of conviction as price was actually still going down. And that actually made the trade idea that much more exciting, because what most retail traders are doing is they're simply looking at price dropping and therefore feeling like, oh, if price is going down, it's getting more bearish. But when you actually look at it through the lens of technical analysis, we see that even though price was going down, it was going down in a downward channel. And a downward channel, much like we talked about the upward channel on the S&P 500 being a high conviction bearish signal for the market at the beginning of this year, much like that is a bearish chart, a downward channel is bullish. It's a leading indicator of telling us that price is gearing up to most likely make an upward move. And in this case, it absolutely did. And so there were buying opportunities on IYR in April, May, which is, I believe, when we were talking about this in the Metastock event this time last year. And there was also a buying opportunity then when it broke out later in the year in July. And the real estate sector was, in fact, throughout that period of April through to the end of the year, the best performing sector in the whole market. So if you could go back in time and put your money in one place, one sector, this was one of the best places to be last year. And so if you missed that, this is important because we look at, well, how could have you picked it? How did we pick it, right? So that we can learn for the next time. And that gives you the opportunity to, when you look at it from a sector standpoint, you could have gone long the sector, right? Or you could have gone long an individual stock, which is how I played it. I used that knowledge to then say, okay, well, if the real estate sector could be the hot place to be, so to speak, then what stocks within that sector could be the best to look at? And so for that, I started looking for individual stocks that had some special qualities, and we came across IGR. And IGR is actually one, and I watch this right now. We actually been alerted this many times over these last 6 to 12 months. But back then, IGR was one of our favorites, and the reason being because it had this beautiful breakout pattern as well. And at the time, it was offering, I believe, an 18% dividend. So we were able to not only buy a great technical trade, but we were also able to buy something that paid us almost 20% per year just to hold the thing. And so that was the way I traded it and invested in it, was looking at the special dividend qualities. So that just gives you a little bit of a background to the type of thought process that that we go about, and both with our own money as well as what we teach, you know, at Acorn, and the alerts that we provide our community. And so the question I'm sure in many people's mind now in looking at the market is, you know, where's the next batch of opportunities? If the numbers, of course, that Jeffrey shared are similar in the group that's here live today, then basically there's quite a division between everyone of which way this market goes, and I think that's a fair enough place to be. And so instead of trying to figure out where the entire market's going to go, I think that's a lot more difficult than actually looking at where the individual pockets of strength may be. Because the entire market doesn't move as one. In fact, there are many stocks that began their declines as early as September, October last year. And by the time the market kind of finally dropped. If you want to think of that as the last shoe to drop, that was really it in February, the S&P finally falling apart. But there was a large portion of the market that was crashing long before that event occurred, right? So the opportunities in this market, I think, is to look for individually strong stories, stocks that are singing their own song, if you will, within sectors that are individually strong, looking for stocks that have already gotten to extremely oversold scenarios, instead of focusing too much on whether to buy or sell the S&P. And that's really kind of what we focus on. So I want to dive into where I think those pockets of strength are. Is everyone ready for that? Let's pop a one in the chat box if you're ready to dive in. Beautiful. So the first place that I wanted to draw your attention to, or the research I wanted to share with you, is back to real estate. So the real estate sector once more is heating up. In fact, I was reading an article in the Wall Street Journal last night about Brookfield Asset Management raising, I think it was $15 billion in the first quarter this year, which is a Canadian company that's also listed in the NASDAQ. BAM, B-A-M is its symbol. They raised, I think, close to $16 billion in total, give or take, to go out and buy distressed real estate. And they're also in diversified asset management as well, and alternative asset management that we'll look at later. But there's lots of examples of this. The real estate sector, of all of the 11 sectors, is one of the few that has popped back up onto our radar from an insider's perspective. So this is what chart we're looking at here is very similar to what I showed you before, in that it's giving us the buy to sell ratios. That's what the green bars are once more, and the black line across the chart is the average. So as you can see, who's in control, buyers or sellers? Well, we're above the black line, so buyers are in control from an insider ratio perspective, and they have been in control ever since March. So after the drop, the sharp drop we saw in the overall market, buyers stepped in significantly in this sector. Okay. So, and the blue line is what the sector's performance has done. So you can see those are the two things to focus on here. What's the sector doing? The blue line. What are the insiders doing? The green line. Now, this ratio is based on the number of transactions. All right. How many insiders are buying versus how many insiders are selling. And that is if you look at this type of thing at all, that's going to be the most commonly reported data. But in the interest of peeling the onion layer back further, what we can actually do is look at this a different way. And this is to look at insider buying versus selling in terms of volume, right? And so what we're now seeing is the insider buying versus selling in terms of how many shares are actually being traded. So we're looking for insiders to be, in this case, loading up, but we're also wanting to see how many shares they're actually loading up on. And so that adds an important piece to the puzzle. volume plus price movement equals momentum, right? And so if you take a look, when we now introduce this different way of looking at it, we can see that the real estate sector is also having a strong buy to sell conviction when we look at it from a volume perspective as well. So there it is, side by side. And this is why the real estate sector is one of the 3 top sectors that I'm focused on at the moment for our trade ideas. Okay, so if everyone's any questions on that so far? All look good? I know I'm getting quite technical right out of the bat, so I want to make sure everyone's understanding and following along. Okay, perfect. So next, ready for the next one? The next sector, and I'll just bring them both up side by side now. The next sector that we're seeing the same type of phenomena occurring on is the communication sector. So again, if you look at the bottom left, this is the traditional way of looking at it, transactions. So the buying versus selling, as you can see, since March has been above average in the buyer's favor. You can see that we have that has increased steadily month over month, and obviously May is not complete yet, but so far it is outpacing April. And we can also see that that same scenario is occurring when we look at it through the perspective of volume. In fact, we're seeing a very sharp spike in the amount of volume being bought versus volume being sold, significantly so in April. So compared to real estate, we're actually seeing arguably a more impressive example of this in communications. Okay. So this is the second sector that I'm looking at in terms of the individual story. We're not seeing this, by the way, on any of the other sectors. These are the only 3 sectors in the market, at least currently, where this is occurring. And the best example of this, of the 3, is arguably the energy sector. And so if we look at the energy sector and we look at the buy to sell ratio, so if you take a look at the buy to sell ratio here, it's at currently at 0.73. So selling still outweighs buying, but the level of buying is above average. In the real estate sector, it's at 1.23. So there's 1.23 buyers for every 1 sellers. Now this is still above average. The buyers are still in control. Right? This is still better than what we're seeing in the other sectors. But what's unique about the energy sector, and this is the only sector in the market where this is occurring, is we're seeing the buy to sell ratio is currently at 7.5. That means for every insider sell transaction, right, we're seeing 7.5 buy transactions. 7 times more buyers than sellers. So this is absolutely noteworthy. Wouldn't you agree? And then if we look at it from a volume perspective, we can see that the buy to sell ratio, which is an average of 2.78, we're currently at 15.88. So for every 1 share sold by insiders in the energy sector, we're seeing almost 16 bought. So when you're wondering where the opportunities in this market may be, you can chase the headlines and look at the news and you know, and all the talking heads on TV. But I mean, in my opinion, and it's just my opinion, but in my opinion, the place we should be looking at is what the smart money is doing. What are the insiders doing? Because insiders know about their companies better than anybody else, right? They know about product launches, mergers and acquisitions, big customer contracts, litigation or court cases being resolved. If it's a biotech company, they know about, you know, if their drug's working or not. They're aware of FDA approvals and how things are going. And you know, while most people think of insider trading in the illegal sense, and there's certainly that gray area of the market, insiders are allowed to buy and sell their own stocks. There are obviously rules around that, but just remember, this is publicly reported to the market. When they buy and sell their stock in their own company, they report it publicly to the market, and we're able to therefore piggyback off of meaningful insider activity. A lot of it, the key word there is meaningful. A lot of it can be noise, you know, small transactions, insiders exercising options, shares that might be given to them as part of their compensation package or performance rights and things like that. So we're not just looking at any insider transaction. What we're trying to focus on here, and what we are focusing on, especially with this example, is really meaningful insider activity, where we're seeing mass buying, multiple insiders, very large percentages, large dollar figures in a concentrated time. And that is when we start to see these kind of unique opportunities like we saw in real estate early last year, and what we're seeing again now in some of these sectors that we've just gone through, those 3 sectors. The research has been done on this by multiple from multiple sources: University of Michigan, Wharton School of Business, Harvard and Columbia. You know, they say that insiders make market-beating returns when trading before big events are announced. Even the Wall Street Journal, you know, insiders have a persistent edge. Well, Peter Lynch, there is no better tip-off to the probable success of the stock, right? And so in this case, what we're not, the beauty of this top-down approach that we've just gone through is we're not just looking at one insider or even one stock. We're looking at this happening in a very concentrated way across 3 entire sectors, and one specifically being energy. And so this approach, while nothing is a guarantee, right? No level of insider buying guarantees a rally or a drop. But for me, when I go out and buy a stock, and I see this type of conviction happening behind the scenes, it gives me a much stronger sense of confidence and excitement for what may lay ahead for that company. Very different from the way I used to do it before Acorn. You know, when I'd go and buy a stock based on an indicator or a newsletter or some hot stock tip, and you just hope it worked out. You know, you don't, because you're not an energy specialist, or you're not an oil specialist, or you're not a diamond mining specialist, or a biotech specialist, or whatever the case might be, right? So you just hope that you've got a good company. And I spoke about this with a face you might recognize, which is other than Kevin Harrington from Shark Tank. And I flew down to Florida early last year and spoke with him about this. I was asked to talk about our smart money strategies. We've been doing this for almost 18 years now. You know, we called the top of 2008, the top of 2015, 2020, the COVID crash, we nailed that 3 weeks before it happened. We gave a similar warning that we did at the beginning of this year. And so I'll play you a very short clip of how this all fits together from this much longer interview. And then we're going to break into taking a look at how we capitalize on this type of activity. So enjoy.
Okay, so I'm going to pin you down now, okay? Because I've heard the word strategy a few times,
Yep.
and that ultimately, you know, what investors want is a strategy. But what is your smart money strategy?
A strategy is firstly more than one thing. It's not just one indicator or one scan. It's all of those things together, which is the difference between a strategy and a bright shiny object.
Okay.
And so the strategy that we teach and that we follow is firstly, how do we find the idea? Because I'm not a fundamentalist.
Okay.
I don't want to be. I'm not analyzing annual reports and things like that, which others like yourself are probably expert at.
I've done a few.
A few. What I'm more interested in is letting the experts, letting the smart money do that research for me and tapping into that. So the way we find ideas is we're looking for stocks where there is a substantial amount of insider buying going on behind the scenes.
I like that.
And
I like that.
And we love that.
That's one of my strategies too, by the way. So
Is it?
Yeah, I love that. Yeah.
Well, I mean, you've got to assume that the CEO and the CFO have a fairly good understanding when a company's undervalued.
Right.
And you'd hope that they know what's going on.
And likewise, if the insiders are dumping the stock, then that might indicate there's something that's not so rosy on the inside, possibly, right? I mean, a couple different ways to look at it, right?
If you look at the tops of the market in the 2020 crash, very large insider selling compared to buying prior to that. The 2022 drop, we saw the same situation, in fact, 3 times as much insider selling before that drop there. So
you go.
There's the insight.
Right. Okay, well,
So there you go. So that's what we're all about. That's what we've been doing for 15 years. Well, 18 years. Sorry, I keep saying 15. 18 years. This is the going back to the roots of what we've been teaching and what we've been doing day in, day out. So even though all the reasons and the catalysts behind the market change, the strategy has stayed the same. And if you go back and look at when market meltdowns and market turbulence occurs, this is when the biggest opportunities to apply this occur. $0 oil was a great example of that. You know, if you remember back to $0 oil, I mean, gosh, what's the #1 rule of making money? Buy low, sell high. Things get low when markets crash. Things get low when there's peak uncertainty. So we shouldn't fear market meltdowns. We should prepare for them. Markets will crash and markets will recover, right? That's one thing we know at least about the market. And so when market meltdowns occur, instead of fearing it, we need to harness it. And when oil dropped to zero, which was a crazy thing, it even went to negative levels. A lot of people missed that because they weren't prepared for it. When the market pulled back sharply earlier this year, a lot of people weren't prepared for it. And so preparing for it means having a strategy and knowing how to act on that strategy. So when oil hit $0, we went and did the same type of thing that we've just done, the research I've just shared with you earlier, and started looking at, okay, well, where are the oil stocks that have most impressive insider buying? And importantly, insider buying after oil crash. That's a really key element. So things like TTI had 8 insiders adding 50 to 982% more shares in their personal portfolios after oil crashed. That had a tremendous value. It was one of the stocks we shared with our members. Calen Petroleum was another one. After oil crashed, the insiders then loaded up on their own stock. And that one had a tremendous recovery. And so the key is putting these things together in a meaningful way, which forms this kind of recipe. And I'm going to share with you 5 stocks that we are watching closely that follow this recipe in just a moment. Now, for the sake of time, and for those of you that are interested in following this type of research, that this kind of research appeals to you, we have done something very special with Metastock that we launched here at Metastock in the middle to end of last year. And it's a very special report we put together for capitalizing on these exact types of opportunities. And it's our Energy Insider Surge report. So I'll quickly go through that and to make sure everyone has the details. We don't chew into anyone else's time today. And then we're going to dive in and take a look at some of these stocks and show you exactly how the energy report ties into it. So obviously, this is very well timed for the research we looked at earlier in terms of what's going on in the energy sector. For the benefit of those of you who haven't been following some of the previous events here at Metastock where we've spoken about this, the reason why we are so, excited about the energy sector is a theme that you've seen and probably read about last year and throughout this year, which is that we are seeing a very big inflow and level of attention going into energy. And this is very much being fueled in a major way by AI. If you take a look at an interview that the former CEO of Google did last year, Eric Schmidt, he talked about this, I think it was back in April, to Stantec, and he said, the infrastructure needed to power AI is immense and will only grow as these systems become more advanced. Energy will be the foundation of all technological advancement. Okay, so this was a fascinating interview, and it certainly inspired me to start digging deeper and look at how big this was, and you start to uncover data. This is an older report, but even this just goes to show this was the energy consumption in 2023 of Google and Microsoft. These two blue bars. Both Google and Microsoft in 2023, before the AI explosion, already used each individually more electricity than 100 countries, 24 terawatt hours before we saw this AI explosion. Right now, you've got AI on pretty much everything out there. Google, Microsoft, everything is now powered with AI. The entire market had a massive downward day with Nvidia plummeting, and it was the largest, if you remember back in, I think it was February, in one day, Nvidia lost so much money. It was the largest drop in market cap in one day in history. And it was all fueled off simply the news that China had a better AI model that had just been released called DeepSeek, right? I mean, the importance that this AI theme is playing is more than just, asking ChatGPT what clothes you should wear today or tell me a funny joke. I mean, this is technology that is being built into everything, and national defense, everything, right? And we are in a race to the top, or you could argue it's a race to the bottom for those of you who dislike AI. But this is a major theme, and it relates to all of the types of ideas that we're looking at throughout this year. Whether it's healthcare stocks that are curing drugs and diseases through advanced AI implementation, whether it's AI-powered energy management, whether it's data centers that are of course behind the backbone of all of this technology. There are big themes that relate to almost every single sector where this is going to impact. So it's more than just looking at ChatGPT. It's actually looking at the stories behind it all, right? Kind of like if you were to have invested in Apple. You could have bought Apple stock when they released the iPhone, or you could have bought shares in the companies that mine the minerals that go into creating the touch screen. And obviously that would have been the more explosive idea. And so when you are dealing with such a diverse theme where there's a lot of fundamentals that go into it, this is where looking at insiders become extremely valuable to find those diamonds in the rough that would be very difficult to do unless you are a specialist in this area and have a team of people researching all hours of the day. It'd be very difficult to find some of these types of ideas. But these are ideas worth finding, because as Eric Schmidt also said, whoever controls the energy controls the data. And that is why we are seeing such of course, an urgent demand for this, because we are competing against the likes of China. And as you know, we in North America, we don't like to lose. Right? It's not a race anyone feels they can afford to lose at all. And so tracking where money is flowing from the insiders and screening for these ideas on an ongoing basis is what we've developed this product for you to be able to provide. What the Energy Surge report does is this is a monthly report, which we've actually just published the new one over the weekend, which has actually engaged our own AI trained engine that scans through all of these AI related ideas that have the most concentrated levels of insider buying, timed with the technical patterns. So we are scanning 8,000 stocks every single day, looking for opportunities where we have a very high concentration of insider buying and the patterns to go with it. And once a month, we then send you our 5 favorite ideas that fall into that. We break down all the insiders, we break down the patterns, we break down how they fit into the overall investment theme. We go through, obviously, again, the insider buying from a sector standpoint, the individuals, who are the individuals that are buying and what their track record's like, sector updates, of course, especially when we're looking at a sector like energy and some of the related sectors that we talked about earlier, as well as in each of the individual reports. We also go through additional stocks that are not quite ready yet, but we're watching most closely for up and coming ideas. So every month it's those 5 favorite setups plus an additional watch list to go with each one. So for today, what we're giving you access to is 12 months access to that report from today on, for only $97. So it's an incredible value. 12 months access to that report. It's a one-time payment. There's no rebilling, no subscription required, and that's something that we've done very special for today's special event. And I'll put a link in the chat box: www.acornwealthcorp.com/meta. And there's probably no better way to demonstrate what you're getting than to just actually show you. So there's a link in the chat box, and we'll come back to this screen in a moment. But I'll just jump forward a little bit here. So the types of stocks that we have alerted already, for example, I'll show you some recent ones that we've done. So Lithium Americas was one from late last year. Of course, lithium being part of batteries, lithium batteries. So very much related to the data centers and battery storage. lithium has been a story of its own. Lithium has been depressed in price levels for a long time. It's not going up and down in a correlated way compared to the S&P. It's kind of it's got its own story to be told, and those are the types of things that we're looking for. Things that are marching to the beat of their own drum in either bullish or bearish directions. Lithium Americas was therefore a trade that we had shared in one of our first ever energy reports late last year after releasing it right here at Metastock, and that was one that we had found that was breaking out. We bought it ourselves. This is a screenshot from my Interactive Brokers account. We were selling it on LAC. We picked up a couple $1,000 profit there, all the way up to the peak of $5 as it hit the high there. This is a great example of the types of setups that we're looking for, individually powerful stocks that fit into this AI and energy theme. NEOG is one that we're looking at on our watch list right now. NEOG is a stock that has, again, got a significant amount of insider activity going on. Now, this is actually from the health sector, health technology. They've got some very fascinating things that they're developing in terms of AI to improve their internal processes, and that's where you're starting to see AI fit into sectors such as healthcare and other related places. So this one is not quite ready yet, but we are watching it very, very closely. And one of the reasons being that it is kind of just bouncing off a potential recovery point in the chart. You can kind of see that downward channel there. What's interesting is that we have seen some very notable insider action on that. So we've seen insiders buy, for example, one of the directors just on the 22nd of April bought 350% more. Another director on the same day, 2 days later, bought 137% more. Another director bought 53% more. Another director bought 50% more. Another director, Catherine Wadicki, she bought 77% more. And this all adds up to a few 100,000, $1 million plus. This is on top of buying that had happened earlier in the year in January. So what we're seeing is multiple insiders buying high double-digit to triple-digit increases in their positions, and now we're waiting for the timing to come around. This is one we're watching, and this is one that will very likely be one of your alerts in the upcoming next report. Comstock is another one that we're watching very closely that fits into the energy sector. This one we're watching very closely. This one, in fact, which is just potentially at the point of a flag breakout, not ready yet, wouldn't be buying it now, but it is one we had alerted earlier. And in fact, if you were here last year, you'll remember me talking about Comstock as one of my favorites, because it had this beautiful pattern, $220 million of insider buying right as it was breaking out, and that was when it was at 13. We were already up $4 on the options we bought on this one, and that's now gone substantially higher, as I think it's at $25 now. I'm running out of time here. I've got to pass the mic back over, so there's about 3 more I could show you. UAMY. But look, I mean, these are the kinds of ideas that we're seeing the rubber hit the road from what we spoke about at the beginning of today's presentation, that these reports are absolutely packed with. 5 every month, generally 5 extra stocks to add to the watch list in each report as well. Entry signals we're looking for, targets, options, insiders, the whole kit and caboodle all broken down, and you'll get 12 months of that for only $97 with no rebill, no nothing, one-time payment. So if you like what we've talked about today and the way we've gone about this from a top-down perspective through to execution on individual ideas, for $97 it's tremendous value, and you'll see that from the very first one you'll get delivered in your mailbox today. So with that, I want to I'll finish up there, and I'll put the link in the chat box one more time, and just want to thank everybody for being part of today's event, and of course everyone at Metastock for hosting us in another terrific week.
Thank you. Thanks, John. All right. We got to do this. The link right here should be in the chat, also in the YouTube chat, acornwealthcorp.com/meta97. Get you that special offer. Thank you very much, John, for joining us. Very, very much appreciate it.
Absolute pleasure.
All right, go ahead to do this as we move on. I do want to say thank you to Stocks and Commodities Magazine for sponsoring the events that we're doing. One of our 3 sponsors. We've talked a lot about stocks and commodities. Have you subscribed yet? You can do it. www.traders.com. $97. I think it's actually $87 a month. They'll get you a subscription to their magazine for a year. www.traders.com. Want to say thank you to all of the guys over at Stocks and Commodities for supporting the Metastock events and helping us out. So, of course, we are Metastock. Metastock's been rated the best software in its price category for 32 years straight. We've talked a lot about how it can help you scan the markets, test trading ideas, forecast probable price movements. We have our DC version, which is delayed charts, 15-minute delay. You can run it during the day. You can look at the charts. You can do the scans during the day. On a 15-minute delay, it's only $75. If you pay for a month, we'll give you the second, the third month for free. You can do that. Metastock.com/conf promo. You can give us a call, 800-882-3040, or you can chat online with us. We'd be happy to answer any questions you've got. Metastock.com/sales-chat. Our next presenter, we have 2 presenters now. Our next presenters are Jake Bernstein and Brian Latta. Jake Bernstein has been trading since I think it's the 60s, the late 60s. I believe that's correct. Correct me if I'm wrong, Jake. He's written a prolific amount of books on the market. His most popular one was How to Day Trade. Brian Latta has taken some of the work Jake's done over the years, and he's really made it cool. And today they're going to talk about their JBXC system. So with all that being said, Jake, Brian, how you guys doing?
We're doing good. How about you?
Doing good. I can hear you well. Brian, are you there as well?
I am, Jeff. Good to be here. Thank you.
Before I hand it off to you, I want to ask a favor.
Go ahead.
Okay. What I want to do, we're going to give away prizes. I'm usually usually have Greg help me give a prize and we go to the thing, but he's got a tummy ache today. So I've been relying on our guest speakers to help us give away a prize. The next prize I want to give away is Larry McMillan's newsletter. He's got a newsletter package, and I just need you guys to guess a number for me. Not guess a number, just give me a number. To give you what number I need any number between 1 and 5,181.
420.
420. That sounds like a number that would be from somebody in California.
That's right.
Lynn S. In the USA just won that prize. They'll reach out to you next week to help you get that subscription set up. Jake, thank you for coming. Brian, thank you for coming. Brian, are you sharing your screen or is Jake sharing his screen? Who am I going to turn the presentation over to?
I'm going to turn it over to Brian. I'm going to do a few minutes of introductory since I barely have a voice today.
Okay.
Brian, he's going to show you the good stuff, and then I'll finish up. How's that?
Sounds good. I can already see your screen, Brian, so everything's going well. I'm going to turn off my camera, and I'll be here if you need me.
Well, thank you very much. Appreciate the opportunity to be here. Pardon the voice or lack thereof. It's not only my voice, but it's allergy season here in California, which makes it even more difficult. I just want to say a few things to open. I'm at that age now where time is the most valuable thing to me. I don't want to look at a bunch of charts. I don't want to figure things out. I don't want to read reports. I just want the bottom line. And that's why one of the reasons why we designed with Brian's, mostly through Brian's work, the expansion contraction indicator, which is for me, red light, green light. I'm either in long or I'm in short or not in at all. But Brian will show you how to use it for swing trading in more detail. It's an excellent indicator. Metastock has done a fabulous job programming it for us, in addition to the expert commentary, which tells you everything you need to know whether buy or sell. So it's very simple. We don't do anything really complicated. It's the best way to save time, make money, do something that's purely objective. I also want to say it's been a pleasure working with Metastock all these years. I think the last time I saw you, Jeff, was in, was it Singapore?
It might have been. I thought we did an event up in San Francisco since then, but it might have been Singapore.
Well, whatever it was, it's been a wonderful time. You guys do the fantastic job. It's just beautiful what you can do with Metastock. Just remember, folks, although there's a lot of great indicators at Metastock, don't let it confuse you. Do the thing that's most simple and most clear, because the more indicators you put on a chart, the less objectivity you will have. You'll get confused. I'm going to introduce Brian, who's been in the business for a long time. He's a fantastic coach. He's coached literally hundreds of, if not more than that, traders. He is very, very clear in his presentation. So enjoy it. And I will chime in from time to time, not to interrupt Brian, but to add a little bit of controversy and color to it. So take it away, Brian. It's all yours.
Thank you very much for that, Jake. And obviously, I still have to thank you quite a bit as I became your client back in 2014 in order to learn the setup, trigger, follow-through process of developing systems. And that has helped me develop multiple systems as well as the expansion contraction indicator, which is truly just based on your moving average channel. So I'm just going to pop up here with the laser pointer. It is different from most other indicators. As you can read through this probably a lot quicker than I can, so I'm not going to reread this, but it does identify long-term trends clearly. It also identifies short-term swings within those trends clearly. It also identifies the strength or weakness of those trends or swings. Is a mathematically derived overbought or oversold, since this indicator is not, say, fixed or limited like RSI or stochastic with a range. We do want to still have overbought, oversold levels, or at least limited upside or limited downside, since I believe overbought, oversold are really poorly labeled. Obviously, indicator doesn't tell us the future of buyers or sellers, but we do want to still see where we've got support or resistance, whether or not there may be limited upside or downside. And the one thing that's a little different than most indicators is it's not a lagging indicator. It doesn't require, say, 20 periods like a 20-period simple moving average to plot. It requires one period to plot, as it's basically just looking at the difference in price and Jake's moving average channel. And we've managed to, as Jake said, plot that into a buy, sell, green light, red light type program on that. So as we, sure, go ahead, Jake, jump in.
Oh, thank you. So remember this. It's very important to trade in the right time frame, not to try and do things you can't do. So for example, I have clients who call me who are surgeons and say they want to learn how to day trade. And I say, why would you want to day trade if you're going to be in the operating room? It's just so inconsistent. Remember that you can use the expansion contraction in any time frame. Just make sure you're going for the big moves. Because if you're like most traders, and believe me, with over 52 years of trading and having mentored literally hundreds of traders, I know what traders do, and what most traders do is the wrong thing. If you're not making big money on at least 20% of your trades, you're a loser, because you're going to continue to lose money in the market. Your losses will add up to more than your profits. So even if it's a day trade, you have to have a strategy for taking the big move out of a day trade, not just taking small little hits and big small little profits and big hits. Very important to remember that. So as I said when we started, I want to work smart. Time is of the essence. I don't want to have to mull over things and read research reports. It doesn't matter what the stock is, what the sector is. It's all about objectivity, and the expansion contraction indicator provides complete objectivity, and then you become the weak link in the chain, and you don't want to do that. Back to you, Brian. Sorry.
Oh, no problem at all. And of course, I've hovered over here over the disclaimer because this is still all important. Despite whatever the past has done or the present is doing, we obviously don't know how things are going to be used. So obviously here, as you've read through this, we're not soliciting anything in this particular instance, but we do know that the past performance of the system has been, and the reality is it may not perform the same in the future, but I'd rather trade something that I can prove has been consistent rather than not. So with that, I do want to kind of pop in that when I say there's been a huge amount of research behind this, it did take several years to basically put it together into a system. And Jake, when I first showed you the indicator, you said basically, well, I don't recommend anything I don't use, so I'm going to need some time to look it over. And I believe it was about the next year on that, and we decided to start going ahead and release what was there, as it had been quite consistent. So it is available at no cost for many platforms. Of course, with Metastock, it is also an expert advisor, which is paid for, but that does a lot of the hard work for you. As again, this is 100% rules-based. It's objective. All of that I learned from Jake. Pre-Jake, I didn't have 100% objective rules. Post-Jake, 100% objective rules. The challenge has been to follow the rules. That seems to be a human failure. And of course, Jake and I will both show you how we use this as it is just slightly different. So obviously, go ahead, Jake.
I'm very proud of what you've been able to do. You took my methodologies, you adapted them to very specific application. So it's been a great pleasure to have a student like you who's no longer a student but a professional. Turn it back to you.
Thanks for that, Jake. And of course, you can see Jake's, I'm going to have to say, it's been decades that you've been putting out the weekly capital markets reports and other programs, even seasonality, which are great programs and definitely worth taking a look at if you're looking to add to your systems. As I mentioned, I am my own trader. I have my own corporation and have been a trading coach and literally have traded and helped over 4,000 traders over the past 23 years on this, and have coded other proprietary systems as well as the expansion contraction indicator. It's basically been from learning statistical process control on the job back in the 1980s, working at a electronics manufacturer. So if you're wondering where all what you're about to see came from, statistical process control defines everything in order to have high reliable components or electronic components, or even a trading system, right? It has to be a process. And we'll say as a coach, I've heard these things more than anything else. I think people want better entries. They want better exits. They'd like to know when to get in or when to get out at a gain in advance and basically feel or know that it's the right thing to do and the right time to do it right now. So what I'm adding here at the bottom is the irony is that of the people that I've coached, those that were willing to do the work and become systematic and back test their programs in the past, once they've proved it to themselves, they become system traders and then stick with that. So you do need a clearly defined process. Hopefully it's proven to meet your objectives, whether that's say growth or income, suits your style of trading. As Jake was mentioning earlier, maybe you're a day trader, maybe you're a short-term swing trader, maybe you're a long-term position trader, and it obviously needs to fit your risk tolerance. So in providing the rules that will be shown towards the end, we're basically basing this on 2% risk. That's what I'm willing to take on a small risk per trade. And personally, I'm not going to take more than 6 trades with 2% risk in any one market at any one time. And ultimately, if you're looking to trade anybody else's programs, ideally they can show you the numbers. And by that, I mean long-term win to loss, profit to loss, average gains, and so forth. So in the next couple of screens, I'm just going to pop up briefly some of the challenges that people will have with systems. I plotted up here MACD, I recognize that indicator with just the basic price chart. And of course, because I can code in on Trade Navigator, here are some buy and type sell setups on here. Jokingly, I do put BS on my chart, but just enough BS to be clear and trade at not too much. If I don't need it to make a rule or trade, then it's not on my chart. What we'll see here, there are times when we might get consecutive losers and choppy markets, and might be sideways pricing to create small gains or losses. Most systematic processes will from time to time give you bigger winners, but ideally we're still in the win more often, make more than you lose, and the consecutive losers is always a problem. Mathematically, it's if you have a 65% win rate, you have a 1 in every 100 trade possibility of having 7 or 8, maybe even 9 losers in a row. So taking a look at some of the normal statistics, it's a bit problematic when we have consecutive losers in a row creating a drawdown. So the second chart, just briefly, I've popped up a secondary indicator on this RSI and just put in buy or sell setups above or below 50 on this, and you can see once again, too many consecutive losers, too many choppy buy sell on this one in sideways markets. Yes, it can also create some bigger winners, but as Jake mentioned, if 20% or more of your trades are not bigger winners, that is a bit of a problem. And so if we've got 1, maybe 2 on here that are a little bit larger than the typical risk, then that's also a bit problematic. You're going to have trouble in the long run being consistent. So back to Jake's setup, trigger, follow through. All I did there was basically get a clearly defined process, ideally meets your objectives. I'm a swing trader on the daily charts, good for several days to several weeks, and a position trader on weekly charts, good for several weeks, may go for several months. Weekly charts from time to time will produce 18-month trends. Not regularly, but it can happen. So again, if you want long-term trends, you're going to need to basically back off and look for, say, not day trading type charts as one of the things that I've learned. The more often you trade, the more risk you take regularly, the higher the probability you may have of an unacceptable drawdown. As Jake said, up trigger follow through goes back, still have to have 100% objective rules to get in. Say A, B, C, D required to get into the market. Rules for getting out of loss, also A, B, C, D. There may be different reasons for getting out of loss or on a trailing stop or such, or a time-based exit if you're in options, and rules for taking profit on that are profit maximizing in those instances. And so it's why I kind of wanted to add that second one. If you got rules to get in, you need them in writing. They need to be clearly defined. Ideally, at the bottom there, as you can see, back tested on that one, and I will show some results why we needed the alert at the beginning on the disclosures, as again, can't prove that the future will perform exactly as the past, but I'd rather have something that I can prove has been consistently profitable and trade with that process. So to get into expansion contraction, as I was mentioning before, most indicators are defined as lagging because they need multiple bars to plot, and the expansion contraction is non-lagging as it just requires 1 bar to plot where we are based on Jake's moving average channel. And because I've got 2 components in there, it's got a trend filter and a swing filter, which allows us to always identify what's the current pattern of price, up or down, short term and long term. And again, that helps us to identify clear setups. It does mark all of the conditions, as Jake mentioned earlier, with the green light, red light. Strong up bars will be dark green. Weak up bars are coded light green. In other words, the trend is up, but the current price pattern is down. If the trend is down, but the current price pattern is up, we'd be weak down and you'd see light red bars. And if we're strong down, the code will be dark red bars on the charts. Ideally, we want to make it just visual so that it is what it is, and there's zero doubt about where we are right now. As I said, I'm using some statistics here at least in order to identify the normal range. On that one, uses 500 bars of data. So I will say occasionally on the downside, if you're looking for a new stock on these setups that doesn't have 500 days, 500 weeks, 500 minutes, if that's what it is, it may not show the normal range, but that's just helping us define strong or weak mathematically, and so that it is what it is. So Jake, did you have a comment?
Yeah, just one comment. Maybe it would be helpful to show just once what we mean by expansion contraction on a chart, and then come back to these explanations. There you go. That's what I mean.
It was on the next chart. I mean, the next page.
I preempted you. You're right. Go ahead.
But that's okay. I mean, I wanted to have a clear definition. Hopefully, if you're watching this, ideally take some screenshots. If you want this information immediately, I know this is being recorded. It will be available again. And then, of course, you can pause this as, again, there'll be rules on there. But as we were mentioning, green or light green bars on here, you will see red or light red bars. This is basically coded with a buy setup. There is BS here too, but just enough to take the trades on that. And as you can see, there's a buy setup with the B on here. And of course, that's going all the way over to where there is a sell setup that briefly traded lower. Go ahead, Jake.
And the difference between the free version, expansion contraction indicator, as opposed to the one that's available here at, hold on a second.
The expert advisor. Jake, we lost your audio briefly. We'll just mark on this one is a 15-minute intraday chart of the Qs, but we will see buy and sell setups clearly on the charts.
The difference being that the expert advisor makes the decisions for you and does all the heavy lifting, so you don't have to sit there and think about what to do. For me, it's just a question of red to green, red to green, and green to red. But the expert advisor takes all that into consideration and does the work for you. Go ahead, Brian. I won't interrupt anymore.
Oh, not a problem. Always want your input on this. And as Jake says, yes, there is an expert advisor. It will show strong buys on here. That marker is this green triangle above a buy marker on here. So this is the last buy setup on a 15-minute in the Qs. Of course, this is back last week. So we'll have some current data on here. But I know Jake wanted to see some intraday charts on here. So we'll pop forward here. Bottom right, it says this is a 30-minute chart of the Japanese yen, top left. And again, we'll have buy setups right here. The expert advisor is identifying with the green triangle just below the red dot far left, the buy setup on this one. There are rules on these sell setups where Williams accumulation is still above its average to not take certain trades or wait for two in a row on expansion contraction to trigger a trade. Again, the rules will be coming up shortly, and I don't want to bog it down too much because ideally we're just seeing there are times when we're in buy type setups and the market trades significantly higher on the 30-minute chart. This was throughout the day and into the next day created a fairly long-lasting or longer duration trade on here. In fact, as Jake was mentioning earlier, ideally your systems have, say, 20% of the time the ability to get bigger winners, and expansion contractions been showing two targets hitting and bigger winners better than 30% of the time traded in liquid markets. So in order to get the explanations just a little clearer, I did pop up if we've got clear entries and exits, we will see bigger winners and smaller losers. The main thing is the in fewer trades. As I'll have to admit, when I first got together with Jake back in 2014, I thought some of the systems he had didn't take enough trades. And of course, that was my mistake that I figured out after a few months of realizing that if I trade more often, I'm literally taking more risk more often. And ideally, we can make our objectives in the fewest number of trades. And the duration on the expansion contraction trend component has shown to be some 24 to 32 periods. The reason I'm going to go to periods is that's weekly or daily or intraday on that on average. Of course, you can see there are times when the swings might be a little bit less than that. And that is just a part of it. But with the arrow marking a B way left, and then a sell setup with the red arrows marking here. Another B with expansion contraction is basically turning long-term, short-term bullish. And we'll see the red or light red bars turn green. This is the red light, green light opportunity here to take a trade and hit multiple targets and go out on a reversal. In this case, would hit multiple targets and goes out on a long trade here. And of course, this is back from August of last year. I did have the intraday charts here from previous, but we're going to go to current time here also to take a look at how this has, say, progressed over the last year or two or three. I'm still walking data forward to help show consistent results over time. Wrapped up in the expert advisors Jake was mentioning here earlier, the buy and sell setups on there will show whether it's strong or weak, and whether an upswing, whether it's strong or weak, and if we're contracting or not at all. It'll show supports and resistances on those prices, and the diamonds on here showing where we may be at price extremes for some profit targets. So with the rules you'll be seeing here a little bit later, the idea is to be, again, 100% objective, clearly defined, and consistent. So on that one, we'll also want to pop up, as I mentioned, long-term trend and strength. As you can see in here, there is a cloud or the cone in the background, as Jake likes to call it, that is green, which is the trend filter. And as the marking down in the bottom here, we have a long-term trend filter that's up and strong on that over time. Here we are back in October, the first week of October 2023. That trend lasted till there was a sell trigger that would have filled until almost April of 2024. And when we're seeing strong move up expanding, a weak correction back down into Jake's moving average channel, that is weak up, then strong up again, weak up for a period, strong up again. So I've marked where we're weak up and correcting in a long-term uptrend, and where that pattern then turns to change from consolidation in a very narrow range here down near zero with expansion contraction as a non-trending type pattern that eventually did reverse into a short-term swing down and a trend down turning red and giving us a setup that here unfortunately really only lasted a week before starting to see contraction again here, which is downside weakness, which did create a reversal. So sometimes weakness is a continuation, sometimes weakness is a reversal. Ideally, we've got it clear on here with the red light, green light process to know when to get in, where to get out at a gain or a loss consistently here. So on the next chart, as I was mentioning, range expansion, and I marked it here with the arrows that are actually, expanding here, going apart. On the long-term trend, when that's generally expanding, we know we're in the strongest part of a move up on that. And I've also marked out on here, resistance would be where the cloud in the background has reached its maximum point and starts contracting. And as you'll see up here, we're relatively close, usually within a bar or two, maybe three of a swing high when we're at a maximum range. As you can see here, we had another maximum range. And if I go straight up, we're at near another resistance just prior to a pullback. So both the supports at or near a swing low on this one with the cloud at its maximum range, would show us some type of support, which I've marked here with the green arrow pointing over to this red diamond, which says prices at an extreme and at least take some profit on the sell. So we will have targets and entries on this in order to make it very consistent. So I mentioned also at the beginning, it's very divergence friendly on here. So over the long haul, you can see with the divergence, as Jake describes it, usually that price is making new highs. And at that point, when we go down and take a look at our indicator, in this case, the width or height of expansion contraction has been getting significantly less and less and less. It was at its maximum point. So as we look up at the swing up, which was A and then a B, point C here is less than point D over to the left, which creates a divergence. And Jake's got clear rules on how to trade divergence, when to get in, where to put your stop, when to take profit. And those rules are applicable here to expansion, contraction, as well as momentum and CCI and the D-trend oscillator and MACD with the settings on that for divergence. This expansion contraction fits well into the divergence models with some clear setups also. I've done a bullish divergence in this case. If we take a look at the first point A, we are at a price low, and the point B, we do make a lower low, lower than A. And as we come down to expansion contraction, the red cloud here is significantly narrower than at the beginning. So point C off to the right here is less than point D. And that's creating a divergence in this here, which also gives us a buyable opportunity, again, with a clear stop with Jake's rules on that, which we can go over. Works well with all of these processes that help us to identify rules to get in or out on that. This next chart, I did plot with the blue arrows, the actual entry price. It would be back on the B, just to get an idea. The calculated stop is the red arrow. First profit target and or possibly second target with the price extreme is marked with the green arrow. So just to give you a little idea, entry price, stop loss in red, profit targets, right? Another take profit target at a price extreme. We'll pop over here. There's another smaller B over on the expansion contractions expert advisor. We'll see continuation type trades, although I don't have the expert advisor queued up to this continuation buy. We are getting a secondary buy as expansion and contraction goes strong up again. And we can see where the entry price is on the close. It's a market on close order on the setup day in this case, where the stop would have been below with the calculation. And again, the profit targets. Just wanted you to see here with this past chart, where you'd have got in, where you'd have put your stop, when would you have taken profit on that over and over again, where we can see some of the JBXC buys and or continuation trades on here. Wanted that to just be visual. Go ahead, Jake.
Right. So just to be clear, those green, those green and red arrows and the instructions put there by the expert advisor, right?
Nope, those are ones that I put on there. That's why I did this once and continue to show this, just so people get an eye based on the rules, where the stop would have been, how close is it, or how far away is it, right? Where the targets might have been, just to show entries, exits, and stops graphically.
So these markings were put on by the expert advisor.
They were not put on by the expert advisor, right? I put the red and the green and the blue arrows on myself.
Gotcha.
The B's and the S's, the diamonds, those are all pre-programmed on there. I just, again, since most people will say, well, you say you've got a stop loss, but what does it look like? Where is it? Is it below support after a buy or what? So I did want to keep this chart on here to just see what the stops and targets are, just to give everybody an idea what to expect. And now with the expert advisor on here, I did mark out with the triangle just above the buy setup far left on here, where we've gone short-term, long-term bullish on this one. So we can see that we'd be getting the strong buy set up, that's just telling us this is a strong, bullish, trending market that short-term in an upswing has been coming out of consolidation. So as we can see, price is going sideways and consolidating short-term. And fortunately, this does get the breakout and moves to the upside further. So some of the conditions, a strong buy, are labeled on here with the green B setup and with the expert advisor showing us the strength of the signal.
This is a gold chart, right?
It's a gold chart.
Thank you.
Okay, as I'm trying to show a variety of charts on here so that everybody can see that is consistent throughout a variety of different markets, from futures and stocks, which are your expertise, to options and currencies, which are my expertise. So again, multiple markets and consistent. Again, the strong buy marked out here, which again showed that the price did manage to move higher. We made a brief correction down here, relatively short term on here, over about a little more than a month, and a very narrow range on here. You can see the large dashes or small dashes Those are the normal range, also called standard deviation, which helps us identify strong or weak with normal distribution. Don't want to go too heavily into the math terms, but if we know what's normal and we're above normal, then we're strong up. And that's what identifies or what the expert advisor is identifying over on the left where those conditions are.
And just
On
let
the
me
next,
say,
go ahead, Jake.
if your trading is not allowing you to get some of these big moves, like this big green move up in the middle of the chart, if you're not getting at least a few of those a year, then you're doing something wrong or you've got a bad strategy. That's all I've got to say.
Right, that went to say 20% or more of your trades are ideally bigger winners. And of course, this is from the beginning of July that trades all the way over to the end, down towards the end of October. So that was a multi-month move up in gold. As I said, I want to show gold's generally been trending up. So we're expanding up to a new high. We contract with the market weak bearish. We break out strong up again. We go bearish again, this time with a little more strength. Expansion contraction initially sold off strongly. We can see with the sell-off and price trading significantly lower on a wide range with expansion contraction, but true to some trends that fizzled out pretty quick, gave us a bit of a choppy sideways consolidation. And then finally, the most recent move up, as we're just looking here at the end of last year. And as I was mentioning on the continuation buy, the expert advisor here is also showing you that the small b is a trend continuation buy. So if you did get in on the original JBXC strong buy setup and you got up and you've made a profit and ideally you're at break even following the rules, I want you to be able to add to winning trades, because I have found in strong trends when you're adding to a winning trade, once you're risk free, all for the same risk you're taking now, you might be able to take a big winner and make it significantly bigger by being willing to take either continuation trades or add-on trades in a trend. So how can you make a big winner bigger? Be willing to add to it when there's no risk. So I did mark a secondary continuation buy. Again, there is a small green B with the triangle above it, and it's saying trend continuation buy. Trends bullish. It is strong in here on that one. So we've got these patterns on here that allow us to know 100% objectively and clearly when to get in and where to trade. Just mark that gun, another strong buy on here. If that's what it shows, expansion contraction has turned bullish on that. And again, that was a 4-month move on there. And finally, that last one on gold that did create the most recent buy. And as I had mentioned before, that same chart showed that there were just some small losses on these corrective patterns. And that is what we'd like to see: bigger winners, smaller losers, bigger winners, some smaller losers, and then bigger winners again on that. So I am marking on here on this where I've got the up arrows, all of these setups, a JBXC, a continuation trade, continuation, JBXC, continuation, 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 a JBXC sell, another JBXC buy, and another one here. All of those trades off of these setups on here all at least hit the first profit target. And with Jake's rules and mine included, hit the first profit target, go to break even, remove the risk on the trade. And so, yes, this has still been gold over time, but with the few small losers and more winners, some big, ideally that's what we're seeing throughout, and it's 100% clear. I am going to pop up, as I did go to Grok this time, about asking how to develop a successful trading plan. We did go through, I'm just going to highlight it on here. Got to define your goals and risk tolerance. So once again, how much are you willing to lose is really where you should start per trade and on all trades open in the same market, in the same direction at the same time. As I've had a bigger drawdown once, and that was from taking too many trades with too much risk in the same market at the same time. And ideally, you learn from your mistakes. I've had one big drawdown when I started a long time ago and haven't since. So picking the markets and the time frames, they do behave differently. But if you're getting this, if you're not going through this as a part of your trading plan, you're missing out on some of the absolute most critical things, such as back testing and studying the data. As I've mentioned before, those that get this and seem to move on and do well and create their own systems are willing to do the back testing, which requires 100% rules, like Jake set up, trigger, and follow through. And again, you don't want this to be a hunch. It's a system. And literally, I just kind of bolded the parts that Grok came up with in this particular case. And to be fair, edited out anything that wasn't entirely correct. And actually, I didn't edit out anything. So I just made some notes on here, which were important, like risk management, not negotiable on that one. Also on here, just keeping a journal. Most people won't keep a journal. I will say if you track what you're doing, you are more likely to stay in control. And certainly learned that myself by getting into debt one time on credit cards a long time ago, and figured out how to get it all paid back and live normally. So if you got a plan, if you keep a journal, log everything. What's actually the best about journaling is that you'd be able to tell how to make your rules better. That would be from the past, right? 2021 was the last time I made a rule change on a system to get a 10% smaller stop based on the previous 5 years of data. And that immediately was a 10% improvement. And I knew it was going to work because it was from the past. And that, again, if you can edit a rule from the past and see a better performance from your past trades, yes, it's heavy spreadsheet. Yes, I did learn that with the statistical process control. And it is critical to track what you're doing to stay in control. So, and of course, it's not about being right every time. These systems are typically 60% or better, sometimes get to 70, or had occasionally where that's been in the mid 80% and really strong trends. But again, that's just knowing your numbers on here and in order to know what to expect in the future. So just double checked out this one. Trade their system. Don't just chase every new idea, right? Because again, it's like the shiny object syndrome. There may always be somebody out there that just says, I do this, and you go, ooh, that sounds simple and cool. Well, don't chase every new idea unless somebody shows you the data. It's absolutely critical in this case that if it's consistent over time, they should be able to show the numbers on that, on this. And so again, it's really critically important when you're seeing somebody else suggesting do this or do that, that there is some kind of proof.
Brian, can I jump in for a sec?
Sure, go ahead, Jake.
Okay, good. You've probably all heard about the importance of keeping a journal. Keeping in your journal what you bought, what you sold, where you got in, where you got out, what you did right, what you did wrong, and so forth. And people say, learn from your losers. If you learn from your losers, you're not going to make the same mistake again. That might not necessarily be the case. You might make a mistake that's related to the one that you made. There's 1,000 things you can do wrong when it comes to trading. There's only a few things you can do right. You need to pay more attention to your winners than your losers. Why do I say that? Because learning what you did right is super important because it'll be wash, rinse, repeat. What did you do right? Why did you make money? Did you make money out of dumb luck or did you make money out of a strategy? You did it right. So look at your winners, study them over and over again. What did you do right? Repeat, repeat, repeat. That will automatically take care of losses if you're repeating the process that gave you the winners. I'm done. Go ahead, Brian.
Yeah, absolutely true, right? That just redefines it right there. It's not about being right every time. It's about making more than you lose, and we do need at least 20% or so bigger winners. By that, at least I target out getting T2, the second target, at a minimum, as that's really where your setup trigger follow through shines on that for most people. That there are the numbers on there that say this wins more often and may make as much or more than it puts at risk over time. And that is how you become consistent, by following a systematic process that's been proven in the past to meet your objectives. Now, I did bring up the Japanese yen in the bottom right there on a daily chart. And this is the old chart, as you see back from November's session that we did. I wanted to post this up because I was showing throughout the last year what the JBXC sell in this case, or a buy, and if they hit T1, T2, or T3. This was trading with no more than $5,000 risk on any one position on that. So when you're seeing the dollar values on here, they were based on the stop calculations that are included here, and whether or not they hit T1, 2, or 3, or T1, 2, or 3, or just T1 in this case, or T1. Many of them may hit a single target, but we've got 3 on here that just hit T1. 1, 2, 3, 4, 5 charts that hit all 3 targets. Oops, I got another one here. There's 4 that hit T1 on that. But let's go to the next chart because we want to walk this forward. And over to the right, 2 more trades popped in after that last trade that only hit T1. This trade hit all 3 targets again with the dollar values on there. And then the next trade hit 2 profit targets on that. And that was the chart we showed in February on this session. And I'm going to walk that forward a little further. We did have a couple of JB setups that were continuation trades that added a couple of more trades in here that hit all 3 targets, and currently in on 2 targets and are open on the 3rd contract. And this sell on here, based on the rules, it's just showing there that no fill on a sell setup with the Williams accumulation still bullish. Jake's use of Williams accumulation distribution does require a sell setup to be will AD below average on that, and I still follow that also. So just wanted you to see that over time on this one, we can walk forward results, and that way you're not looking at, say, right now and just saying, gee, that looks good now, but how about over time? And so I'm manually basically walking this forward for you so you can see some of the results. And as I mentioned on the, go ahead, Jake.
Just to be clear, it works on stocks as well as futures.
Exactly. And okay, I'm just going to admit, I know how well the yen does being a currency trader. So when I did a test in the futures to answer someone's question, I said, hey, how does this do in the currency futures? Does it do as well? So yes, I did this, and then we put up this example of the spreadsheet, which was showing 2023 to 2024 and 2024 now to present, as this is continuing to accumulate the T1s or T2s or T3 targets, and what the totals are accumulating up to. And the final column is just the profit to loss ratio. As you can see, the column headers as I go across here. The test was started in a September several years ago. So that's why if someone's wondering, why isn't this January to December? Well, it was started back in September a couple of years ago, but still almost 1-to-1 profit to loss ratio, 41 wins out of 51 trades, showing a positive win to loss ratio, positive profit to loss ratio, and column N is just showing you the accumulation over the last several years on this trade example. But this is a part of track your trades and know exactly what you're looking at. Average 3rd target, average 2nd, average 1st. Should make sense. The 1st target may have a relatively small average. And as Jake mentioned before, ideally your system hits T1 and T2 more often than not, and that will help you with the positive outcome results. So in order to continue, as I said, with where we kind of run through before, last year we did post out these results from the small basket of stocks traded with buy and sell setups off of the stocks, and the small basket that I trade out of the currencies to show the results on there with expansion, contraction, buy setups, buy and sell setups, which have been a little better than 60% this year. And the swing trades coming back to support in an uptrend or resistance in a downtrend. Those have been winning at about 68% this year. And not too many divergence buy or sell setups so far this year, but I do look for those to put on the charts and to accumulate this basket. Go ahead, Jake.
Those are not minus signs, those are dashes.
They are not minus signs. That's plus 16% on Apple this year, or sorry, last year, plus 20. Those are dashes, not minus. I'll put them in parentheses when they're a loss.
Right.
Since there are some this year. So let's pop to now. And this year, Apple's up, Amazon's up, Nvidia is down. It did have some consecutive losers. Yes, we'll get some consecutive losers. In fact, the Aussie dollar this year has had the maximum, which I've had so far, which is 6 consecutive losers. That's happened once in Apple, better part of 5 years ago, and has now just happened in the Aussie dollar on that, but is currently in a trade that's up 170 pips or points, however you want to run that out. But Nvidia is down. Everybody else is up a little bit this year, as are the currencies, but these are on the buy or sell setups. They're on the charts. We're basically walking forward, taking the setups as they come and printing the results. Again, I can't promise that you get the exact same results because general human nature is to not follow the rules. And because I have that same general nature, I absolutely have to have rules or I'm more likely to do whatever or nothing. And so if that makes sense, why have I been so adamant about doing what Jake says, set up, trigger, follow, have full rules? You got to follow something because whatever isn't consistent. But I'm going to go through these pretty quick because, again, these are the rules for the strong buy setup and the weak expansion contraction buy setup. You'll see entries, stops, T1s, T2s. Again, I'm not going to linger over this too long due to the amount of time we've got. But we'll also have strong sell setups or weak sell setups on that, as again, depending on the conditions. And we want to have some alternatives in order to manage these situations individually. The swing buys, these are Jake's swing trades. He's not had a problem in releasing the rules, and I don't have a problem in releasing the rules either on that. And if you want to write them down and back test them, I always love to hear third-party individuals verifying the consistency of the systems, as I know I hear it from Jake all the time. And Jake, because I have coached also some of your clients, I hear it from them that they're happy with your systems because they've also back tested them and found them to be consistent. So we're going through Jake's setups there on the swing trades, and here's the swing sell on that. And also mine, I've got a little bit different swing buy or sell setup, but admittedly, it's just modeled after Jake's setup, trigger, and follow through. And here's the swing sell setup with the entry rules and max stop and the T1 and T2. All of those are calculable and should be easily replicated. And again, I'd love to hear if you want to back test it. If you think you can bust it and make us look bad, go for it. I always appreciate it. I've even had things audited, and when you've got systems confirmed and or audited, at least unshakable confidence about the future, although I have zero idea what the future is really going to do, not good about predicting the future, I'm going to go with past results and assume that we should see something consistent as long as we've got, Jake set up, trigger, follow through with the rules to when to get in, where to get out of loss, when to take a profit, rules of when to add to positions, and ideally they've been back tested in liquid markets and shown to be consistently profitable. On the last slide here, I just wanted to pop out because the Power Console, an expert advisor in Metastock, been great for setting up here, did a test on the stop and reverse with reentry. And as you can see this graph here, yes, there were some losers. There were fewer losers than there were winners, and the size of the worst losses were significantly less than the size of the bigger winners, and there were more bigger winners than smaller losers on that one. So I know that's a relatively small chart, but I did want to give maybe the 5 or 10 minutes we got to have Jeff Gibby pop in on that. So Jeff, if you're ready on there, my assumptions are you're ready to pop in with your take on all this, and more than glad to hear that.
I'm ready. All right. So I do want to, before we kind of go in and talk a little bit more about the add-on and then just show a little bit of it off, there is one question and one comment before I take over. The comment is Tom Petty in the chat says Jake and Brian are the cream de la cream of trade education.
That was nice of him.
Yeah, thanks for that, Tom.
Always appreciate it, Tom.
Yes, that's so
Karina
nice.
wants to know, what are the best times to trade futures?
Well, during the day session.
Okay.
Now,
Fair
Jake,
enough.
if you want to
Well,
jump in on that one, you're the futures expert. I don't trade the futures market, so I do track it and I do help people trade futures with their trade plans. But overnight, lack of liquidity. And so again, during the day time would be best if you're going to long-term trade the futures. Well, that's certainly going to require a larger account. But go ahead, Jake.
I'd say the best time is when there's a strong, confirmed seasonal trend working in your favor. So, for example, the last 3 months of the year, very strong trends, very high probability of success on the long side. So you can take the seasonal and you can adjust your trading to participate only when the seasonal is in a strong direction. So that's the best time for me.
Right on.
Right, Jake. Well, I'd also say when you're 5 bar above or 5 bar below, which is the strongest pattern, are trading on daily and or weekly charts or weekly long-term trends. Those would be the better opportunity to get bigger winners in shorter periods of time. So if you're looking at a time frame, well, don't trade consolidating sideways markets unless you're trading the range, selling the upper band of the moving average channel and buying support. But other than that, right, we want the big winners that go for a long time and go for a long pricing. And so that would be strong trends.
All right. Karina also asked, well, for during the day, do you like to trade during the open, during the close, or does it matter?
It really doesn't matter. It depends on what your system says. But of course, in my day trading books, in my own trading, I use the 15-minute breakout, which is very, very simple methodology. It doesn't even use any indicators. And as I said, it's in some of my day trading books.
Okay, perfect. All right, I'm gonna go ahead and take over a little bit right here. Thank you again, both of you, for all the work you've done. It's been a lot of fun over the years, Jake. I look forward to seeing you in person again sometime.
Likewise, Jeff. Appreciate that.
Thanks, Jeff.
All right, very cool. I do kind of want to talk a little bit about, or in a little bit of detail about kind of what's included here with the expansion contraction indicator. I often call it like the Swiss Army knife of indicators just because all of the stuff that's kind of built into it and kind of like the way that we designed it and put it together. Obviously, Brian had a lot of the look and feel. The ideas were very, very much his. But in terms of kind of helping identify the long-term and the short-term trend strength, whether the range is expanding or contracting, the support and resistance levels, whether it's overbought, oversold, if there's divergences, that kind of stuff. I call it the Swiss Army knife of indicators. It's just all of those things. What I do like is kind of the way that we broke all those kind of conditions down in the expert advisor in the commentary. So I just got a screenshot of it here. You can see that right on this particular screenshot, there was a strong buy. You can see what the long-term and the short-term strengths were, what the range was, whether it was contraction, whether that contraction was strong or weak. You can see whether or not there's a breakout, what your major and minor support resistance are, whether there's a divergence, whether it's overbought or oversold, what the actual stop losses are, the targets, all that stuff is kind of baked in. And I really like the way that kind of just helps you, especially as you're getting new, understand everything and kind of get a good idea of what's going on with it. So that expert advisor, I think, really does a good job. Scanning, of course, we do scanning in there. You can look for divergences, buy signals. You can look for long-time bullish and bearish trends, sell signals, all that kind of stuff is available. And as Brian alluded to, this has system tests that are built in that you can kind of go in. And all of these, generally like a pretty good system test is going to have some losers. Every system has losers. This is a really good distribution of your winners to your losers. Thank you, Karina. I appreciate the question. So in terms of the total system overall, it includes recommendations for new trends, trend continuations, exit recommendations, stop losses, targets. You get that dashboard view I talked about, the expert advisor, the scanning, the system testing. So really, Brian did such a good job with this in terms of the design, the look and feel, and I love it. When we initially released this, we released a boot camp. We did a 2-part boot camp series where Jake and Brian discussed how to use the JBXC. After that, I kind of go in and talk about how to run scans, how to use Metastock, how to use the charting, because I understand a lot of you may not have Metastock yet. We can help you with that. We're also going to include a free trial to Metastock, but what I want you to do is if JBXC is the reason you're buying Metastock and getting started with Metastock, I want to make sure you understand how to run those scans. I want to make sure you understand how to set up those charts and kind of all the tips and tools to making Metastock work the best for you. So the JBXC add-on is $5.99. That's the conference offer. It's going to be $4.99. As with all of the products, we're going to offer them with a 30-day money-back guarantee. This is going to include a trial to Metastock. So if you haven't tried our award-winning Metastock software program, you can find out why it's been rated #1 in this price category for 32 years in a row. You can do this at metastock.com/JBXC. You can call us at 800-882-3040. You can chat with us if you have any questions. We'd love to talk to you. Metastock.com/saleschat. So I'd encourage you to give this a go. There's a reason that the Metastock program has been rated so highly for so long. There's a reason we're willing to stand behind this with our money back guarantee. We want you to try it. If it's helpful for you, we know you're going to keep it. Like, why would you return it at that point? 800-882-3040, metastock.com/JBXC, or metastock.com/saleschat. Again, thank you again, Brian, Jake, for being here. Appreciate it. And also thank you for the really cool add-on. Before we kind of get over to our next steps, I want to talk a little bit about our free community site. We've been kind of working on this for a while. We're almost to 1,000 users. Help us get to 1,000. I'd like to invite you to come and join our forum where you can chat with other traders. You can learn about the markets. There's all kinds of different information about technical analysis. We'll do lessons every week on a different indicator. A couple weeks ago, we did volume by price, with stochastics, Ichimoku, like all kinds of different stuff where we just the idea is to kind of educate ourselves about technical analysis, share ideas with each other. It's a great community of traders. It's designed to be a community of traders helping traders. It isn't going to cost you anything to join. thetradersforum.com. I hope to see you in the room. I'm in there almost all the time. So thetradersforum.com. And of course, we are Metastock. Metastock's been rated the best software in its price category. It's won that rating 32 years in a row. For all of you that have been using Metastock for decades, thanks for using Metastock. I appreciate it. Thanks for voting for us year in and year out as the software. I personally wouldn't be able to trade without it. Testing, scan. I love the scanning. I ran a scan twice today. Found some trades. Helps you forecast probable price movements, get real-time commentary alerts, signals. Again, all of it starts, we have a delayed version and a real-time version. Our delayed version is only $75. It's going to give you daily charts that update all day. It's a 15-minute delay. And you can even scan during the day. So if you want to find opportunities that exist in the market during the day, that'll help you do that. The offer that we're going to do for you is if you want to try any of the add-ons, we'll give you a free trial. If you want an extended trial of Metastock, if you buy a month, we'll give you the second and third month for free. At $75 a month, that's about $25 a month to use it from now until August 6th. So metastock.com/conf promo, metastock.com/saleschat, or 800-882-3040. So there you go. All right. Our next guest, another good friend of mine. Vince Vora, I think, is one of those people that have really kind of helped me refine the trading that I'm doing. A lot of the things that he talks about when he says he's looking for stocks in a trend, the things that he uses, I've implemented in my own trading. And he's probably been one of the most influential, let's say it that way, influential traders in the way that I trade and helping me be more successful at what I'm doing. And so with that in mind, I'm gonna go ahead and get him. Vince Vora works for tradingwins.com. We're gonna go ahead and get him started. Vince, how are you doing today?
I'm great, Jeff. How are you?
I'm good. Let me go ahead and make you the presenter here. We'll get the handoff complete.
Excellent. I'll try to share my screen as well. Let's see if that works. There we go.
I can see you. Yeah.
Good. Good,
I can
good,
see you
good.
at the clock office.
All right. Thank you very much for inviting me back. I really appreciate it. I'm going to try to show my screen here. Let me know if you can see it.
We can. Looks great.
Yeah. Excellent.
I'm out of the way. Go.
Okay.
Sure.
Thank you. Thanks again for the invite. Welcome everybody. Everyone at Metastock has been great to work with over the years. We know them well. We've been partners of theirs for many, many years, and it's been a lot of fun. I'm happy to be here to show you our Victory 2.0. If you haven't seen it yet, just a bit of background. We came up with Victory back in late 2019, and then last year we upgraded it to this newer version. So I'm happy to share that with you. Before we get started with the actual add-on, the indicator, a bit about myself. I'm the head trader here at Trading Winds. I've been doing this for almost 4 decades now, and throughout that time have come up with several different strategies and systems, and been coaching students for about 9 years now, and having a lot of fun. Please do remember that trading can be risky, so please don't trade with real money until you're completely comfortable with the system you're trading. Victory 2.0, the whole point about it was, number one, I wanted something that would be very reactive to changes in the market, but just like all my prior systems, something that would significantly reduce my risk in the markets, and that's what the motivation was behind it. So let's forget about the slides and get to the actual charts, and let's talk about Victory 2.0. So this is a system that's based solely on technical analysis. There are no fundamentals behind this. It is strictly an algorithm that looks at a few different indicators, and when they line up a certain way, this will tell you whether the system is suggesting a buy, a sell, an exit, etc. Now, what we try to do is follow trend, but not just trend. We try to follow a trend when momentum is behind that trend. So I'm going to explain exactly how we do that. I'm going to share several charts and try to show you how this works on just about any instrument. So you can trade this on any market, any exchange around the world. Before we released it, we did test this on several different exchanges: US, Canada, Australia, India, for example, Hong Kong, all over the place. It's based solely on technical analysis, so it'll work on anything: equities, futures, Forex, crypto, if that's what you want, any time frame as well. I'll try to show you charts as we go through. Please, if there's any symbol you want to look at, type it into the chat, and I'll try to bring that up and show you. Let me know what time frame you want to look at. We'll try to fit it all in. So in an effort to trade with trend and momentum, this is how we do it. I'm going to explain first all these different symbols that you're seeing on the chart, and then I'll share with you the 8-point checklist that we need to make sure we have in line before we place any sort of trade. Now, some of these checklist points you can use with any other system. You can incorporate into whatever method you're using now as well, but they work exceptionally well with our Victory system. So what you're seeing here, obviously these arrows, green and red, indicate, and by the way, if you hover over any of these symbols, it'll tell you what they are. So green arrows are indicating a good time to enter a long trade. And you may also notice this is a weekly chart of, actually a daily chart of the SPY, the ETF for the S&P 500. What you may also notice is that there are smaller arrows and some of the bigger, thicker arrows. You'll know if you hover over them. Again, green arrows are long, red arrows are signifying a short, And the thicker ones, both green and red, you're going to see HPB or HPS. Those are high probability buys or high probability sells. They just have a couple other layers of in the algorithm to make it an even safer play. Okay. Now, the dots that you see here, green or red, are what we call reentry signals. The reason why they're dots and not arrows is because we're already in a trade. So if you miss this one, it's telling you that this is also a great spot to get in. So if you miss that, you have a chance to get in, or if you're a little more aggressive and you've already gone long here, you can add to your position at each reentry. What I would suggest though, when it comes to an exit, is any change in color. You'll notice that once you're in a trade, all the bars remain green, for example, during a long trade. All the bars during a short trade remain red until there is some sort of change in direction. And so whether you're seeing an exit flag like this, or whether we just go from green arrow to red arrow, any change in color, what we would like to do there is exit the trade completely. Okay. So, and the other thing we want to look at is this blue line. This, as I hover over it, you can see is just a plain everyday moving average, a simple moving average, 20-period simple moving average based on the close. It is the one indicator that I would never trade without, to be honest with you. It's something I've traded with my whole career, and I will continue to do so until I'm no longer doing this. The reason being is this is what we use to judge momentum. Remember, it's fairly easy to spot an uptrend or a downtrend, especially if you're looking at the pivots, right? Pivot lows, pivot highs. If you have higher highs, higher lows, you're obviously trending in that direction. But determining the amount of momentum behind that move makes a real significant difference in your success rate. And what we look for on that 20-period moving average is the slope. Okay, so for a long trade, we want it to be sloping in an upward direction, and the higher the degree of slope, the better. During the downtrend, when we're playing the market to the short side, we want a slope lower on that, and the more significant the slope, the better it is. Okay, and finally, down below here, there are a couple of ribbons. Now, since I'm on the daily time frame, I'm using the weekly and the monthly. Reason for this is whenever I'm taking a trade, whatever time frame I'm looking at, I want to confirm with two higher time frames that those higher time frames are trading in the same direction as I'm trading on this time frame. So we use the color of the indicator. So if we are currently in a green state on the daily, we want to make sure that we're on green on the weekly and the monthly. As you can see right now, we are not. It is a mixed time frame. This is telling you on the weekly, we're in red. And on the monthly, we are yellow. When it's yellow, it means we don't want to be long or short. We're neutral. Okay. So right now is not a time to trade this chart. Back in here, when we had these buy signals here and here and here and here, these were valid trading opportunities confirmed by the two higher time frames. So when we turn green here, we had a green on the weekly and a green on the monthly. We had slope, and I'll show you a few other rules that we use. They were all in line, and they worked out nicely. And so that's what you want to see. You can look at any time frame, whether it's the weekly, the monthly, and so on. You can also use this to judge the overall market. So if you're using something like the SPY, the S&P 500, or the NASDAQ 100, the Dow Jones 30, for example, you can look at, it's a good idea to start with the monthly and say, hey, what is the market doing right now? So we're in an uptrend. Okay, great. even though I want to trade on the daily time frame, I'm going to go back and I'm going to look for long setups. If we're in a downtrend, then we want to look for short trades, etc. And again, you can use this on any market. You can go to the other extreme and look at a 1 minute chart, right? If you're a day trader, 1 minute chart and look for trading opportunities there, or a 5 minute, an hourly, you name it, whatever you like. Now, there's another way with this add-on to judge what the overall market is doing by not only looking at the index charts, but also looking at the different sectors all in one window. This is what it looks like here. What you would do is you would right click here and you would apply template, and then you would go down. They're in alphabetical order. So mine here, the Vora ones are near the end. And you would look for what we call the market overview, MTF, okay? A multi-time frame. And we have them for a couple of different markets. Obviously, we have the market overviews for the US market. We have them for Australia, for the Nifty in India, and we can add more if necessary. But once you select that, this is what it's going to look like here. Now, when this loads, when you bring this up, it's going to take a few seconds to load. There's a lot of data here. So we have the 4 main index charts, the Dow Jones, S&P 500, NASDAQ 100, and the Russell 2000. And then we have the different sectors, such as communications, consumer staples, energy, financials, etc. What we're looking for here, and these are 2 different time frames, daily and weekly. Now you can change the time frames on these. You can look at 1 time frame, you can look at 2, and you can change them, customize it however you like. What we're looking for is to identify, you know, what the majority of these are doing right now. If you look at the daily time frame, it's almost all green down this column, right? The most recent column here. So that tells you that the market has been trending higher, and just about everything has been going in an upward direction, right? On the weekly, though, you can see that we're almost all red still. So it's a mixed bag right now. We've got the longer term view, which is the weekly, in red, meaning we're in a longer term move lower, but recently we've been retracing. We've been moving higher on the daily. Ideally, what you want is daily, weekly, monthly, all to be in the same direction. Or if you're day trading, you know, the 5 minute, 15 minute, hourly, for example, to be aligned, and so on. And when it comes to this template, you can look at different time frames as well, like I said. Okay. If you're trading on a lower time frame, you're going to have to add the template for the ribbons down here for that time frame. So if you trade a 5 minute, you're going to go to your templates here, and you're going to select the 5 minute template. And that will bring, there's a 1 minute, a 5 minute, hourly, 30 minute, they're all there. And that will bring you the 2 higher time frames on the ribbons down here, okay? So let's get to the rules and show you how we identify high probability trade setups, because that's what this is about. You know, when you're in a strong trend, you can basically buy in at any point during that trend and make money. How do you improve your accuracy, reduce the amount of time in the market? You do that by having different layers of criteria that complement each other. So when we have a victory buy signal here, actually, before we even do that, I'm going to show you the 8-point checklist that I use. Before I enter any trade, I need to be able to check off these 8 boxes. If even one is unchecked, I do not enter the trade. So this is what I'm looking at. First of all, cleanliness of the chart. What I mean by that is it predictable? Is it very clean, or is it, you know, bouncing all over the place? So for example, if you compare a daily to a 1 minute chart, for example, right? This is messy. This is back and forth messy. During a day where there isn't a huge move one way or the other, you get a lot of back and forth. This type of chart will increase the number of times you get stopped out, right? Which is what you want to avoid. So you want something that is very predictable. One that comes to mind, the communication ETF XLC, especially on a weekly time frame. You'll see what I'm talking about here. It is, look at that, right? Very predictable. Up, down, back up. I mean, it is so clean, so easy to trade. If you take a couple of hours on the weekend and go through chart after chart after chart and build a watch list of charts that are this clean, this predictable, your accuracy rate will increase automatically. You know, again, we're going to try to time the purchases here as well as we can. But when something is trending this cleanly, you can buy it just about anywhere there and make money. So a clean chart like this eliminates risk for you right off the start. Okay, so that's point number one. Number two is your reason to entry. We're using the victory strategy. So we want a victory signal, either an arrow or a dot, etc. Then we want slope on the 20, right? That 20 period moving average needs to be sloping in the direction of the trade. And the more significant that slope, the better the chances of us being successful on that trade. Okay. Now, another thing is where the actual bar closes. So this buy signal, for example, right? Where does it close? Is it near the 20? Is it far away from the 20, etc.? What we want is it to be near the 20. When, and this goes for any moving average, when price moves away like that, it will always snap back. So the last thing we want is to purchase up here, and immediately after we purchase, have it pull back on us, and we find ourselves in a hole right off the bat. So we want that entry to be as close to the 20 as possible. So all of these here are valid for that. Okay. The other thing, the next thing we want, sorry, I was trying to zoom in here. Let me widen out a little so you can see the little markers for open and close here. The next thing you want is you want the bar, the close on that bar, excuse me, to be as close to the high of the day for a long trade as possible, at least in the top half of the bar at a minimum, but the closer it is to the high, the better, right? And in case of a short, you want it to be as close to the low of the day as possible. So, for example, if you look at the high, the close here, where we are compared to the 20, compared to the close here, how far we are from the 20, right? So we're looking for something as close to the 20 as possible, all right? And then we're looking for support and resistance. If we look to our left here, we're either going to see a lot of blank space or we're going to see a lot of activity. So, and that's where something like the volume by price indicator that Jeff was just speaking about is going to be a big help here. But basically, what you do not want is a lot of overhead activity, right? You don't want a lot of prior activity just above your entry signal. You want a lot of blank space, okay? Now, this is a weekly chart. For example, we go to a daily and look at an example like this one here, right? If we look to our left, there's really nothing there, right, at all. That's ideal. That's what we want to see, okay? And we want to make sure the higher time frames are in line. So the ribbons here, we want to make sure if we're going for a long trade, we want to make sure they're both green. If we're going for a short, they're both red, okay? And lastly, the other thing we want to check is the earnings date. How far away is the earnings date? The reason for that is earnings is usually an event that causes a gap in the stock one way or the other. Now, if you're trading an ETF, for example, they don't have earnings. You don't have to worry about it. A currency, you don't have to worry about that, right? Crypto, you don't have to worry about that. It's just a single stock that you have to worry about that. So check that earnings date. You want it to be at least 10 to 15 days away, if not more. The further away it is, the better. We don't have to worry about a gap. So if you can check off each and every one of those boxes, you know you've got a very good chance of making a profit on this. And then how do you manage it? Well, the reason why we left them all green is so you don't get scared out during a little pullback here. Again, you can hold until you change color. You can add to it if you're a little more aggressive, or you can also scale out at certain points. If you try this indicator, along with it will come a couple of training classes where we will teach you exactly how I do this. And what we do is once we enter an order here, we identify a take profit level overhead. If it hits it, we'll take a third of the position off. If we then pull back and get another entry here, we add that 30% back, etc. If we hit another level, we'll take another 30 off. The final 30, we'll let it run until we get a change in color. Remember, any change in color, we clear out the full position, okay? So, as I said, it works on just about anything. Let's look at some of the more popular stocks. But again, please let me know if there's any that you want to see. I'll start with Palantir, for example. And just to show you the types of trades that we would normally take versus not. Something is off here. I'm not quite sure why this isn't coming up. Let me try it. There we go. I had the wrong symbol. So again, when something is trending, you'll get setup after setup after setup here. And that's what we want to focus on. When something is gyrating back and forth, we want to avoid it, right? This is where traders lose money. Have a look at this. So if you bought here, right, it starts to go your way, it turns around. It stops you out, you lose money. Even though it's a small loss, you lose. You short it, it turns around on you, you get stopped, you lose, etc. That's what's going to happen during a sideways move. You're just going to get chopped out and stopped over and over and over again. So we want to avoid those areas. These rules here, the 8-point checklist, okay, if you follow it, the bulk of the trades that meet that criteria, okay, will not be in here, anywhere in a consolidation, right? It'll help you avoid those areas. Having said that, when you spot an area of consolidation, you want to take advantage of it. You want to continue to monitor that area. This isn't a great example, but when you're faced with a channel, here's a better example. Here, you want to mark the high of that channel, right? I just roughly draw lines in here, and the lows, okay? And you want to identify the breakout point, whether it's to the long side or to the short side, okay? And if it coincides with that 8-point checklist, if everything lines up at that point, you can get in, okay? Have a look at this example for a minute. Number one, the slope on the 20, in most consolidations, the slope on the 20 is flat. So that one point, that one piece of criteria keeps you out of all of these trades, right? Well, let's say that here you get the breakout. Now the 20 is still flat, right? So do you take that or not? You can. There's two rules that I follow. When you do not have a sloping 20, if the bar on the entry bar here is above a prior high, closes above a prior pivot high, you're free to take that, okay? That is just as good as having slope. The second, let's say the prior high was higher, it was up here. This bar had not moved above a prior high yet. The second condition that would allow us to take that trade is on a retest of the 20, or in this case, this support level here, the upper edge of that channel. So as it comes back, meets up with that, and then turns around, meaning it's held support. Okay. Once we break this high, now we're able to get into that trade. So this is a great way to identify bottoms and tops by using those two rules. Other than that, it doesn't really matter. If you want to keep life simple, okay, all you do is wait for the trades that have slope. There are many of these. You will not go very few days without trades. There are lots of trades. Your job will be to identify or compare one to the other and select the best of the best for that day that you're trading. I don't like to take any more than 1 to 2 trades per day. I like to spread them out. Okay. A lot of times, if the market is up or down a big amount, let's say the Dow is up 600 points one day, you're gonna run into a ton of long setups. But the next day, the Dow can pull back 400 or 500 points, and you find yourself in a huge hole. So you want to spread your trades out as much as possible. Okay. But as I go through this, it's pretty easy to identify the trades that meet the criteria versus the trades that do not. The first few, you will be following your list and checking them off one by one. After you do 4 or 5 trades, it'll just become second nature, and you'll be picking these off in no time. Let's look at something else like Robinhood, for example. Here. And again, let me know which symbol. Oh, we have a couple of symbols here. Great. Hey, Peter, thanks for coming on. Appreciate it. I'll get to those other symbols in just a moment here. So let's look at Robinhood. Robinhood's been one of the more talked about stocks in the last couple of years, right? But again, whether it's being talked about in the media or not, highlighted on CNBC or anywhere else, it doesn't matter. What you're looking for is a trend. And again, it's great to start on the monthly trend. This has very limited history, but you can see here, it's been heading higher. If you ever see grayed out bars, it means that there isn't enough data to calculate the algorithm behind the scenes. Okay, this has a brief history, so we need more of a history. But here on the weekly, have a look at this. Just identifying this channel right here and waiting patiently. Now, this is the problem a lot of traders have. They don't have the patience to wait, for this to get out of here. I mean, this was, almost a couple of years wait. But the advantage to this, the longer it carries on, the bigger the move. One tip I will give you is that whenever you identify a channel, once it breaks, like it did over here, which by the way, we had a re-entry right here on that break. If you measure this, okay, draw a line from the start of the channel to the breakout point, and then take a similar, what you want to do is the same measurement in the direction of the trade. And now it can go beyond that for sure, but you should expect at least that type of move in the direction of the breakout, which can be huge. So the longer the consolidation goes on, the more excited you should get. Eventually you'll see a big move. But again, if you just wait for the criteria to line up, when you have slope, you have all the other 7 points that we're looking for, these are the type of moves you get. And again, you can go to the daily time frame, you can go to a 1 hour chart. It really doesn't matter. There's going to be opportunity as long as it meets that criteria, just like this short right here, right? The short, it's the same criteria except in the opposite direction. What we're looking for is a clean chart. We're looking for a victory signal. We're looking for that signal to be near the 20. We're looking for the 20 to be sloping lower. We look to our left and make sure there isn't a lot of, support in this case, a lot of activity down below. And once we break that low, we're free to take that short. If we get another signal along the way, we can add to it, okay? Any change of color, we're out of there. It's that simple, okay? One of the symbol requests was MO, the Altria group. Okay, let's have a look at that. I'll start with the daily here. Again, let me know if there's any different time frame you want to look at. But again, you can see here that the ebb and flow with this chart is pretty clean. You don't get a lot of short moves, you get extended moves, which is fantastic. It makes it easier to trade. So here we are. Here's an example where the 20 is completely flat, okay? So we see this arrow, 20 is flat. Did we close above a prior high? We did not. Had we retested the 20 at that point? Not yet. So we let this carry on. Here, you can call this a retest. If you're not very clear on it, it's very simple. All you do is mark that prior high. And when it does break that high, now you're free to get in. Or, even simpler, you wait for a setup that has slope. That's it. So this was a high probability setup. Look at the degree of slope. That tells you that the momentum behind the trade is great. So it's like having a wind at the back of those candles. This is just a temporary pullback before a continuation of that move. So getting in here would have been a sizable move for you. Same here. Look, you get this. You're not quite sure if this is going to continue, just grinding sideways or not. Even if you're not quite clear or experienced enough to play these, have a look at this one. Nice and clear. Lots of slope. You look to your left. Yeah, there's some activity, but not a lot of activity there. And what happens next? We just take right off, right? And during the training class, we'll tell you how we identify overhead targets, what we use to do that. Using prior pivot highs is something you always want to look at as well. That's one method. We'll teach you a few, but you just carry this on and any change of color and you're out of there. It's that simple. Let's look at DocuSign. Raj, you wanted to look at DocuSign. Let's have a look at that. And there we go. So again, just quickly looking at this, based on what I said, you know you should avoid this area in here, right? It's a consolidation. But if you're worried about, not being experienced enough to spot this area, if you follow the checklist, it will automatically keep you out of this area, okay? But these trades like this one, here, anything that has that slope is nice and clean, has blank space to your left, etc. All the points on that checklist. It just makes it super easy. So something like this, a trade like this pays for many, many losing trades, okay? Now, these rules that I'm giving you are there for a reason. And the algorithm behind the scenes is meant to help you keep losses small. Big losses are very difficult to overcome. Small losses are very easy to overcome. And so you'll notice that even on a brief pullback like this, sometimes you get taken out of that trade. That is for a reason. We want to keep losses small. You'll notice during these areas where you're not going to trade anyway, but you'll notice that as soon as it turns against you, it takes you out. So if we had gone short here, we would have been stopped out immediately. If we had gone long here, we would have been stopped out immediately, over and over again. Small losses are okay. It's the big ones that you want to avoid, okay? And also in the training class, I'll teach you my money management rules. There's 5 simple rules. If you follow those 5, you'll never take a big loss again. And I'll guarantee you that. There aren't many guarantees you can make in this business. I will guarantee you that. It's mathematically impossible if you follow those 5 to take a big loss. So I'll share those with you as well. But the trending areas are the easiest. And again, any time frame. Let's look at other markets, like the futures markets, right? Like gold, for example. Let's look at gold futures, right? I mean, gold has been really the hottest market now for a while, and it continues to be just fantastic. Even this setup yesterday worked out great today. Gold is up about 100 points. A chart like this is so easy to trade. First of all, the fact that you have trend and momentum on your side is more than half the battle. One right there. Now it's just a matter of trying to pinpoint where are those areas to enter that give you a better chance to turn a profit. Okay, and here it is. If you follow those rules, it'll get you in at these times. Again, you can add to it along the way. You can take some profits along the way. Many different ways of doing it. You can follow a higher time frame. It'll certainly keep you in a lot longer, but look how clean this is. And, you know, especially on the monthly charts. The monthly charts are going to give you some monster moves here. But obviously you'll be in the trade a lot longer. Now, your time frame, determining your time frame should be based on how much time you have to dedicate to this, to your trading, not based on, you know, how much profit it's going to give you or anything like that. The time frame is based on how much time you can dedicate to your trading. If you can be in front of your screens every day, you can trade on a daily time frame or lower. If you cannot do it, if you can only, you know, check your charts and so on weekends, use a weekly. If you want to only do this once a month, do it on the monthly. But, you know, especially for a retirement account, I mean, managing a retirement account would be so easy with this on the monthly. You're taking high probability setups that, you know, you could be in for through many months, but have sizable gains. And the second it starts going against you, it will get you out, okay? Preserving those gains. The last thing you want to do is give them back. So gold, not a problem. You want to look at currencies, for example. Let's look at currencies. I'll look at the Swiss franc compared to the US dollar. Again, the monthly might be a bit long for that, but regardless of what time frame you're using, or let's say it's a penny stock that doesn't have a lot of volume or so on, the price action will look like this. You won't be able to take any of these signals. Any of these signals would be losers. But if you follow these rules, you won't be in any of them. It'll keep you out of there. If we switch to a daily chart, okay, now we have a much cleaner, much more predictable price action. And that's what we want. You want to jump on a trade like this or like this, boom, you know, the safe ones. Look, if you only focus on the ones with significant slope, that alone, look at the size of some of these, right? They're very simple, very easy to take, very easy to spot. It does not take long to learn this, okay? And in addition to all this, let me just show you Bitcoin, all right? Just so you see that also works on on crypto. This trade back here, no brainer. Even this little one, the short trades recent. If you can, maybe short one of those ETFs that are out there now, etc. You can look at it on a longer time frame, on a shorter time frame. It doesn't matter. The plays are all there. But to help you find these, there are other tools here that Metastock has included in this. First, I'll show you the expert commentary. If you go to the top left and click on View here and go to Expert Commentary, this should bring up a box here. That's not only going to tell you a bit more about Trading Winds and myself, etc., but if you look on your chart here, the most recent candle is going to have a little triangle there. It always defaults to the most recent candle. And it'll give you a description of what's currently happening on that chart. Now, you could move that little triangle anywhere by clicking above one of these bars or using the arrows at the top left of the expert commentary window. But here, I moved it to here. So I'll show you that if I move it to the prior one here, you'll notice that this text is in red. And that's because this bar was red. If I move it forward, it now changes to green. So everything's consistent, but it'll tell you what it's signaling here. So it's telling you it's signaling a high probability long, etc. And then if you're trading it with options and so on, I mean, you not Bitcoin right now, but any single stock, it'll talk a bit about, what kind of delta you might want to be looking for, what kind of expiry date you might want to choose, etc. More importantly, as the trade moves forward, it's going to give you a stop loss level here. So if you have a full-time job, family, etc., you can't be glued to your screen. And say you set up a trade, this evening, but you don't want to go to work tomorrow, leaving yourself exposed with no stop. Well, you'll have the stop here. And then as it moves forward, that number changes. So it's like a trailing stop, okay? So if you can watch it and you can stay in until the color changes, great. If not, you can use those stop levels to trail it, okay? This expert commentary is meant to sort of hold your hand throughout the whole process, okay? Now, my favorite tool here, if you go to the top left and click on the P here, the Power Console indicator, 3 tabs down on the left is the Explore tab. Here is the scanner that helps you find trading opportunities, okay? Now, there's all these strategies that you can use to scan. Again, they're in alphabetical order, so you would have to go to the bottom to select mine, okay? Or you can right-click on them and say Add to Favorites. That's what I've done. And now all I have to do rather than scrolling is just click the Favorites tab, and the ones I want to use are here. So we have a Vora Victory one, and which highlights the arrows or finds the trades with the arrows, or what we call Vora Victory Reentry, which are the dots. You can search or scan for either one, but we've gone an extra level. You'll notice that these ones here say Vora Victory Filtered, and the other one is Vora Victory Reentry Filtered. The ones that have filtered means they're filtered for slope. It's only going to find you the ones that are already sloping. Okay, so it shortens your scan time. Once you've checked off the ones you want, you come down to this portion and you select which group of stocks or markets you want to scan. I like scanning for North American equities here, the ones that are optional. I like to trade options, so I'll select these, and there's 5,600 of them here. Now I'll go to the top and I'll select my time frame. So if I'm trading off the daily, that's what I'll select. If I'm trading off the 5-minute, you can do that, or the weekly, monthly, whatever. This window will confirm what it is you're searching for, and then all you have to do is click Start Exploration. Okay. Now, believe it or not, this will only take a couple of minutes. Even with 5,600 stocks, you can see already we've gone through 53 charts. And I've got a lot running on my laptop right now, including the GoToWebinar session, etc. If I didn't have all that running, this would be going much quicker. But I've already run the scan for tonight, and I'm going to share a few with you here tonight. So AEM came up, Agnico Eagle. This is a gold play. Have a look at this chart. How nice and clean, right? Now, if we go through the checklist, we have a clean chart. We have a victory signal here. The bar itself is near the 20. It closed right near the high of the day. If I look to my left, there's nothing but blank space, so no resistance overhead. If I'm looking at the 20, not only do I have slope in the direction of the trade, I have significant slope, okay? If I look at the weekly, the monthly, they're both green, in line. In the earnings date, I can tell you is further away. You don't have to worry about that either. So this meets all the criteria that I'm looking for. And it's a great trade. I can look at it into it a little deeper. If I look at the weekly or the monthly, for example, it'll show you that we're basically at an all-time high. Okay, so there's absolutely no overhead resistance, which is an ideal situation. So all I would have to do here is mark the high, and tomorrow, once the market opens, if I get a trade, one tick or 1 penny above that high, that's a valid, I can now be okay with entering the trade. If, let's say, it gaps and it opens up here, well, I'm no longer okay with that. That's the same as having a signal with a bar that's far away from the 20, okay? So a little gap is fine. I don't want to be too far from the 20, okay? Now, these signals, once the bar is closed, they will be there for life. There's no repainting here, okay? But while that bar is live, the symbol may change, okay, depending on the price fluctuation. So whether you're on a 5-minute bar, a daily bar, a weekly bar, etc., while that bar is open, is live, trading is active, the symbols can change. But once it closes and it's there for life. You can be rest assured it won't change. Let me give you another one, ASA here, okay? Now, look at ASA, right? What do you see that might be a problem here? Well, the slope. It's pretty much flat, right? Not a lot of slope there. So if I was comparing AEM to ASA, I would absolutely select AEM, the prior chart, due to the slope, okay? So this is what you'll be doing. You'll be running your scan, you'll be selecting a few, and then you'll compare one to the other, exactly the way we'll train you to do, and you will be selecting the best of the best for that time period. Now, if you see a bit of a consolidation here happening, again, you want to wait for it to break the highs and then go from there. Couple to the short side, IQVIA holdings here. Have a look at this chart. Nice and clean, a very significant trend lower, lots of slope lower on the 20, right? Higher time frames are red. You look to your left, there's nothing but blank space, which means no support. So you have yourself a high probability sell signal, okay? And lastly, one more before I pass it back to Jeff so he can tell you exactly how to get a copy for yourself. Biogen, have a look at Biogen. Now, Biogen, we've been trading Biogen ever since it broke out of this channel here to the downside. We've been highlighting these setups for our members over and over and over again. And there is another one here now. Likely target will be this low down here. But if we go to the higher time frames, I'll go to the monthly, you'll see that the next sort of level of support is going to be down here somewhere near 70. And we're at 116. So there's still plenty of room for this to fall. Okay. So now, in addition to this, Jeff's going to tell you how to get a copy for yourself. But along with the add-on, you'll be getting a 1 year of membership with Trading Winds, our membership service, which includes nightly emails 5 times a week, every Thursday to Sunday. Or Sunday to Thursday, excuse me. I will send out a market recap video by email, talking a bit about what happened in the markets that day and what kind of news is coming up that we should pay attention to, etc. And also highlighting trade setups that I take. This is not an alert service. They're not recommendations, but they are trades that I am taking. So if you want to look over my shoulder, see what I'm doing, it's there. The other thing we do is meet live 3 times a week on Zoom. Every Monday at 1 p.m. Eastern, Wednesday morning at 10 a.m. Eastern. Tomorrow morning, we're meeting again. Fridays at 1 p.m. Eastern as well. They're all recorded. These sessions are at least an hour long. We have a great group of members from beginners to very experienced. Some of our members have been with us over 8 years, very knowledgeable, and we're looking for trade setups during that time. And we're also talking about the economy and whatever else might affect the markets. There's some great chats and some great members. Peter, who I was referring to earlier, is one of our members as well. And so I hope you give it a shot, but I'm going to stay on. I'll be available for questions if there are any. If we don't have time to answer them all, you can always send us an email at info@tradingwinds.com. Wins is W-I-N-S, info@tradingwinds.com. Jeff, I'm going to pass it back to you. Thank you once again for having me on. I really appreciate it. Jeff, I think you're muted. I can't hear you.
Okay, before you leave.
Yeah, not a
Can you hear me now?
Yes, I can.
Oh, now I can't hear you though. Oh.
Oh.
Okay,
Can you hear me now?
Yeah. Okay. Before I let you go,
Yeah.
Can you give me a number between 1 and 5181?
3287.
Okay. I need that for later.
Okay.
Just gonna write it down. That's a prize winner.
Excellent.
Congratulations, number 3287. One comment, I think we got all of the questions. One comment that I liked was Peter said, and actually I was talking to Kelly in his office. He's watching the presentation too. But Peter said, Vince, your presentation gets better every time.
Oh,
and I was in there talking to Kelly, and Kelly's like, he's just so straightforward. He's like, I love it how he's just like, look for a chart that doesn't look like, that looks good. Like, just keep it simple. So great job. I appreciate that.
Yeah, I mean, thank you. It's the trader that always overcomplicates things. It's not the market. The market's obviously complex, but it doesn't have to be. If you keep things simple, the results will be there. It's just a matter of finding a couple things that work for you and just repeating them over and over again. So that's what I try to do.
Great job. Thanks a lot, Vince.
Thank you.
All right, here's the box that we have. I actually think they did a really good job designing it. The Vora Victory Method 2. It's one of our best-selling Metastock add-ons. I love the detailed commentary breakdown, the expert alerts, the advice that's in the commentary that tells you what those deltas to look for, that kind of stuff. So, in terms of the stuff that we added, Victory we released in 2020, and it was right before the pandemic actually kind of hit. But it was looking to take advantage of the higher volatility that exists in the market, and was an extremely good selling add-on. People really love it. It's been around for a while, and it took us a while to release an upgrade because we kind of like, well, what can we make better? It's already very, very simple, very clear, very easy to read. What can we do to kind of make it even better? And so we added the new high probability setups, the suggestions that you should take profit, the multiple time frame dash views that you can look at. So I'll show you the daily, the 5 minutes, the 30 minutes. You can actually change those too, where you can actually look at any time frame. So if you look at those market dashboards, you can actually use that on any time frame you want. You have the and then you have the market dashboard. So you do get the market explorations again. I just love the ability for Metastock. So somebody asked what platforms does it support it. This actually works in TradingView and it works in Metastock, but it's designed. But with Metastock you can scan. It's such a handy feature. The ability to go in there and scan for setups and find the ones that fit the criteria that you're looking for work really, really well. So get the expert advisors. That's going to give you the, I keep trying to mute my laptop. It keeps popping up on the side. Should be done now. You get system tests in there as well to kind of understand how everything works. So very, very cool. We added, based on some feedback, we added Indian broad market views and Australian market views. We added some different additional templates that are in there. And there you go. So here's the market, the multiple time frame view. Again, you can look at this in any time frame. This looks at daily, weekly, and monthly by default. We've changed it so that it actually shows yellow instead of black, so it matches the chart that you're looking at as well. Here you have, again, the ribbons that show you what is also happening on the weekly and the monthly, and that just applies as part of the template. So the take profit suggestions, the high probability setups, and this multiple time frame analysis all happens automatically as version 2. And we also added an exploration, so you can just scan. If you just want to find those high probability setups, you can give a scan for them. And of course, we have like the additional scans that are available that have been shown to us. So the expert advisor does a really good job. I like how it kind of gives you an idea of what the SOAP is. Kind of gives you a look for kind of ideally what kind of SOAP you want to look at. Tells you if you're in a long position, tells you what options you should have, what stops you should be using. All of that's kind of help. It's like looking over the shoulder of Vince and kind of seeing exactly what's going on. So that's included. You get the system tests, those are included. When we did release version 2, we decided to also include 2 of Vince's other strategies. He had the winning momentum strategy and the veracity strategy. Those are very, very popular add-ons. Those are available as part of it. Those are also complete experts, a complete system. So those are just thrown in. And then in addition to that, when you purchase this, you're going to get, as Vince was talking about, his daily trading ideas, the weekly training series, the on-demand technical analysis videos. Normally, if you just go up to the website and subscribe to that, that's going to cost you $97 per month. It's a $1,200 value. We're including it with your purchase of the product. We also have a boot camp that we recorded with Vince after the product was released. And so all of this is going to be included. You're going to get the Vora Victory 2.0. You're going to get a bonus add-on, the Veracity. This sold for $19.97. You get the winning momentum strategy, the Trading Wins Pro membership, the online training, all of that stuff would normally, if you just bought it separately, would be available at $5,657. As part of the conference, we're going to go down to $997 for you. So I'm sorry, $797 for you. Even a little bit cheaper, the lowest we've ever sold this for. So normally the value is $5,657, $797. If you don't have Metastock, we'll include a trial to Metastock as part of it. We're going to include that bootcamp class, the Vora Victory, the 12 months of access, the other 2 systems. We're going to do a 30-day money-back guarantee so you can look at it. $797 is all. If you don't like it, if it doesn't help you, you can just return it. You're not going to pay anything else for it. So to do that, you can go to metastock.com/conf promo. You can give us a call at 800-882-3040. And I'm just trying to type and talk at the same time. Or you can go to metastock.com/sales-chat. Any of those are good ways to do it. This has been a very, very successful add-on. Take a look at it. If you like it, keep it. That $797 is a one-time cost, and it has a 30-day money-back guarantee. So give it a go. Metastock.com/conf promo, 800-882-3040, metastock.com/sales-chat. Thank you again, Vince, for being part of the event, and appreciate all the nuggets over the years, all the help over the years. Been a great partner. So with all that in mind, before we go to our final speaker of the day, one, we're going to give away this prize. It was $32.87. I do want to say thank you to the CMT Association for sponsoring the event. We've talked a lot about the CMT Association and the accreditation that they offer. If you want to find out more about that, go to cmtassociation.org. Okay. All right, we're not going to go through all of these right now. Let's figure out who that winner is. What we're going to give away now is 3 months of Metastock real time. Normally that's about $300 value. We're going to give away 3 months of the Metastock Zenith program. That includes really just some great news, some great information to help you get started with, well, it doesn't help you get started with Metastock. It's basically a product that Zenith is a product that includes some of the best news and research and fundamentals out there. They developed it at the cost of over $1 billion. It's powered by Reuters News, and that's normally $165 a month. We're also going to throw in 3 months of Learn Metastock. So it's the Metastock prize. The winner was $32.87, and when I have a second, I'm just going to tell you who that was, and then we're going to Richard R. in the USA. So Richard R. If your name's Richard and your last name starts with an R, and you're in the USA, there's a good chance you won. I'm sure there's a few Richards that registered for the event, but congratulations on that. If you want to get your own extended trial, you can go to metastock.com/promo as well. Our next guest is Casey Stubbs. Casey runs a podcast that I should listen to. I'm going to check it out. Let's see, he runs the How to Trade It when he shares his insight and expertise in the trading world. He's the founder of tradingstrategies.guides.com, a website that offers a variety of trading strategies and a resource for traders. He's got 2 decades of experience in the industry and a wealth of knowledge that he's going to share with us today. Casey, I can see you. How you doing? I can't hear you though.
Okay, there you go. Hey.
I can hear you now, yeah. Okay, let me go ahead. I'd have to push a button here to give you the screen. Okay. It should ask you if you want to share your screen. It should be that easy. I like your mic too, by the way.
Oh, yeah, it's a gaming mic. I don't game, but I have a gaming mic.
Oh, there you go. Let's see. A lot of traders are gamers, so I'm surprised that you don't.
Well, it's my kids game a lot.
Okay, there you go. Okay, fair enough. I can see your screen. I can see you. I can hear you. I'm out of the way. It's your turn.
Okay. So you can the slideshow showing. I'm on slide 1.
Yes, sir.
Okay, great. And so then, what is the time on this?
You are the last speaker. So generally, we've got you slotted to go till the top of the hour. And
okay.
If it takes you a little bit less, or if it takes you a little bit more, do what you need to do.
All right, great. Well, thank you. All right, well, as Jeff said, my name's Casey Stubbs, and today I'm going to talk about my weekly 1% strategy. My goal is to trade once a week, and so I focus on high probability setups and just slow, easy, consistent. In the past, one of the big hangups for me was always trying to be complicated, trying to find complex strategies and hit home runs and, do all, the speaker right before us said, Vince said, it's the traders who make it complicated. And that is very true. And so I've taken a lot of time to make it simple. And so that's what I'm going to talk about today. So, I went too far. Okay, so goals for tonight, just a little preview, just so you guys have an idea of what we're going to be talking about. So I'm going to talk about how I earn 1% per week using safe, high probability trades. Primarily, I'm going to be talking about the type of trade that I'm going to be looking at. So when I say high probability, there's one specific setup that is really just so much better than the rest. And so we're going to focus on that. It is really important over time that if you hit the best of the best, the best setups are the ones that we want to go after. Why go for the second best? I think one of the things that traders do a lot is that they focus on over trading. They want to get in. It's like maybe it's a little bit of fear of missing out. They want to get in on so many different things. And so because of that, they take too many trades. And that is one of the surefire ways to get yourself into trouble, to sabotage your success, to maybe that fear of missing out, that fear, you want to really replace your income, you want to make a lot of money, and so you feel like if you don't take a lot of trades, you're going to not be successful, right? And so I've eliminated that a lot because I am only trying to take one trade a week, really just one trade a week, that's it. And it's just simple and easy to manage. So, and the way that I do that is I use options. I sell puts to collect premium on stocks that I already want to own. And I'm going to show you today. Today, I'm not going to talk much about options. I'm going to primarily talk about the charts that I'm trading, because you can trade it with options, or you could also buy the shares. So whichever way you prefer is fine. But the way that I do it is with options. But I'm going to primarily focus on the best setups and how we do that. And so again, you use Metastock charts with proven filters to select the best stocks. And the key word there is focus on the best. Okay, so step number one is focus on strong trends. Stocks with clear trends and strong technicals. I'm going to show you a chart here in a minute. It's AT&T. I don't know if any of you have been looking at this, but right now it's a perfect fit for what we do. As a matter of fact, for my community that I'm in, we do a trade on Monday, and AT&T was one of the trades that we did. And so you'll see why here in a minute, but we're looking for a strong uptrend. We're looking for a price that's above the 50-day moving average and above the 200-day moving average. We're looking for RSI between 40 and 70, which is helping us for a momentum confirmation. And again, like I said, why this is so important, it's great for credit spreads or secured puts. So when we're looking for our charts, these are the things that I'm looking for. Pretty simple. I don't do a lot of fundamental analysis, but I do some. But when I'm doing my scans, I don't actually look through those, but after I pick the stock, I do. Okay, so this particular example here is AT&T. And so the very first thing I want you to notice when you're looking at this chart here is that it's a really nice uptrend, right? This is a beautiful move to the upside. If we go all the way over to the left, you can see right here, this is in May over the course of a year. So this is a 1-year chart. And over that time, it's primarily moved in the upward momentum. Okay, so that's the very first thing we want to look at. So if you have no indicators and you have to determine what type of stock to trade, if there were no tools or indicators or anything, you would just look at price, right? And that price that you'd want to see, it's very simple to understand, but you'd want to see something that's moving in a direction like this, from left to right. Okay, and so the way the market moves, it never goes in a straight line. It always moves like this. If you're looking for a nice trending stock, that's really what you're looking for. Looking for a nice, healthy trend. I just drew that on there. So there you go. We're looking for a nice, healthy trend. And so if all you had was price, then you could use that. You could use price to really get a good understanding of the type of trade that you're trying to find. Okay, so then the next moving average here on the chart, this is a 200 period moving average. Now, the way that the 200 period moving average works, it's pretty simple, pretty straightforward, but I like to go through and explain everything here so that people really understand how it works. So the 200 period moving average is 200 days of price. It's the average price over the last 200 days. Now, why this is such a great tool is because it shows strong trends. Because a trend that's gone for 200 days is a very long trend. It's over a year. You know, you look at this chart of AT&T, it's definitely been going over a year. We go back, I don't know how far this trend is going on, but we do know that it's gone back at least a year. If we look back even further, it might be going on even further. I didn't look at it. I just looked at the 1 year. But this is very healthy. It's a nice steady slope. You notice one thing about the moving average here is that it helps to smooth out the trend. Because with charts, you know, sometimes you can get carried away because you see some red bars, you see price crashing, and you're like, oh, the trend is over. Or you might try to short it and you don't really have a good understanding. Sometimes price can cause you to, even though we like looking at the chart like this, but sometimes price can cause you to make some false decisions because we don't have the big picture. So I like to put this 200 period moving average and trade on things that have the 200 period moving average moving in a nice steady slope to the upside, because I know that this is a long-term trend and it's moving in a nice steady direction. And the longer the trend, the more smooth the upward movement, the more high probability of a setup that we're looking for. And so we did take this setup at the beginning of the week and it worked out really well for us. Okay, so the next feature that I wanted to talk about was the 50 period moving average. And it's again the exact same thing as the 200. The only difference is that it is 50 days. So it's a little bit shorter and it will start to turn over before the 200 because it's only 50 days. And so it's a little more reactive. But you're going to notice here that there's a nice little gap in between the two, and they're both moving steady and the gap is the same. And we call this when we see this perfect. You don't see this too often because I'm going to show you some other charts here in a little bit, and those charts are going to be much different, and you're going to see how different this looks, right? So to actually find one like this, there's usually not a lot, and that's why we're looking for setups like this, because they're usually the best of the best. And so we look for price to be moving up, we're looking for the 200 to be moving up, and we're looking for the 50 to be moving up, and we like them to have a nice steady gap right here. All right, so now the next part is the RSI, which stands for the Relative Strength Index. And the relative strength is, the way that that's calculated is it depends on the settings, but this is I believe this is a 14, which means it takes the relative strength of the stock over the last 14 days. And so so this is the fastest indicator out of all of them on this chart, right? So the 200 is 200 days, the 50 is 50 days, and the RSI is 14 days. So this one's going to react much quicker, and it takes just the last 14 candles. So you'll notice right here on this big move right here where price went, and you notice it's green every day, and see that, and you can watch what happens to the RSI in that same period. You see RSI is moving, and then it goes up to 80, and then it drops really fast. And you'll notice too that the drop here is not that heavy. I mean, it's a big drop in a day from 28 down to 26. It's a huge bearish candle. And you're going to notice though that the RSI cooled off really fast. Again, because it's a faster indicator. It's only going through for 14 days. So the way that we like to use this is we want to see this moving up as well, and we like to see it above the 50 because that indicates that the momentum is moving in the right direction, right? So here you're going to notice that we dropped down, price dropped down, the RSI dropped, everything's still above. It's above the 50, it's above the 200, the RSI cooled off, but now it's coming back and it's crossed above the 50. So this is when we're running scans looking for ideal setups, this is really how we're scanning. We're looking for charts that are above the 200, above the 50, and above the 50 RSI. And all right, so now once we have a clear understanding of all the indicators and what they mean and how we're going to trade it, now we're going to be looking for setups on the chart. So what we try to find is there's two real key ways that we like to do this. So I'm going to go over the first one, which is one of my favorites, and that's the pullback method, right? Where we identify the trend, but we want to see it make a little bit of a pullback, right? So we'll just use this big move as an example. So if price comes out here, we break up and we're moving up, and I'm like, oh wow, the RSI is getting hot here. We're at all-time highs. I'm not wanting to trade this right away, right? I'm just not there. But what I am looking for is for it to pull back. So one of the first things that once it starts getting hot like this, I'm looking for the price to then begin to look and perhaps touch the 50 or maybe go just below, right? That's what I'm looking for. I'm looking for then for the RSI to cool off and then for the moving average to get in contact again. However, we're not looking for too steep of a drop. We're not looking like for a complete collapse. So we want to identify that. And here we got that, right? We got a nice slow sideways move. It pulled back, but then it went through what I like to call my consolidation phase. So that's something else that I like to look at, consolidation inside of this box where you're just going right in here, where it goes sideways for quite some time. Now, one thing you want to understand is when the way the market moves is that there's buyers and sellers, and people have to have supply and demand, and the price has to have a higher demand of buyers than there are sellers. And so when it's super hot and everybody throws their money into it, it takes time after a while to get more buyers because everybody that already had money already bought it, or the rest of the people are kind of like, oh, I don't know if I want to buy it this high, right? And so then what happens is the consolidation phase, and that's where people start taking nibbles, they start buying, or maybe people start taking profit, but you're going to see it going up and down, and that's just accumulation. And people are building up shares, they're buying it, and it's usually happens before a big move. You like to see a nice accumulation phase. And so then once that happened, we hit the moving average, and you can see here, we have a nice RSI above 50, and then we got a nice breakout, right? And let me erase some of my scribbles. I'm famous for scribbling. We got that nice big breakout, and what happened was that bullish candle broke out the all-time high, but because it got the consolidation, the RSI is not overbought anymore. It's a nice healthy. It indicated heavy buying stepping in, and then it did consolidate a little bit more. However, it kept on going up after that. And so the way that we would do this, the way that I do this, and the way that I teach people is we find a setup like this and we will sell a cash secured put. And what that means is that I sell a put and I probably put my stop somewhere down around 22, not my stop, but my strike price. Put my strike price at 22. And so what that means is if I sell a put, they give me money. We'll put a dollar sign there. They give me money and I tell them I'll buy this at $22. And if price stays above 22, I don't ever buy the stock, I just keep the money. Okay, and so what this does for me is I can sell these each week and just collect cash and never really even own a stock. Now, if price does come down to 22, well, then I buy it at $22 a share. So I get a discount because at the beginning of the week, it was $23.25 and I sold it for a 22 strike. I got to keep my premium. I got to keep my $100 and I got the stock at $22 and it was a really good stock. It was a high priced stock. So that's what I do. I like to sell premiums every week. And my goal is that I'll sell the stock, sell the option, and I never actually own the stock. But if I do, I'm using this scan to find the absolute best stock. So then I buy the stock at $22. Well, then what's going to happen? Well, it's going to keep going up. And you can see that that's exactly what happened here. We're at $27. And so this is a really great strategy for collecting income. And we just do this every week. And as your account grows, if you think about it, if you can target a 1% gains every week, it's a nice, steady, consistent income. And that's really what we're looking for. So let me just check to see what time it is here. And okay, so I want to just keep talking about this because there's different entry requirements. So I talked about the first one where we hit the moving average, and then we got the bullish candle. Okay, another thing that I do look at, and this is actually, this one hit the moving average, so that could have been an entry point right there. But then the other one is the breakout of the high, right? Which is what we saw right here, breakout of the high. Here's another one where that happened. We had a consolidation phase, and then right here, and then it broke out of the 52-week high, right? So that's two different ways that I like to do it. Is I like to look for a pullback or look for it to break out of the top. Now, one of the things that is really important here is that consolidation phase, right? And you're going to notice, like as we look at right now, we're not at a 52-week high. So the current setup is definitely not a 52-week high setup. However, it's got consolidation. So the consolidation here is extremely important, and we're in the moving average. Everything is moving in the right direction. And so if we break out of this box, I'd be looking at a nice buy setup, but we also took it off of the bounce off the moving average as well. Okay, so that's really what we're looking at. You can also do some other ways to get in on a pullback. I like to also look at trend lines. So you'll notice that when the price moves up, there's trend lines. Anytime you get a pullback, you get some of them are more steep than others, right? This one didn't really have a trend line, but these did. And when you get that, it's a nice setup as well. So so that's really how we do it, and that's the best example of finding a very good high probability stock. Now I want to show you another stock here in a minute, but it's not a high probability, and I mentioned it because a lot of people were actually asking me, and these were real examples of stocks that people said, hey, well, should I buy that this week? And so this was one that somebody gave to me, and I'm like, yes, we should buy this. And then another one that somebody gave to me, I'm like, no, we shouldn't. And so again, key lesson here, avoid choppy or sideways charts. And that is, though, we actually like choppy and sideways but we don't like to trade it in the choppy and sideways. We like to wait for it to break out. Also, you want to favor clean trends with pullbacks into support. And when I say clean trends, just like I mentioned, you want to find that really nice sloping move, the strong sloping powerful 200 moving average, the 50 that's spread, a nice example in between the two, that river looking setup on it. So that's a really good setup there. Okay, so now this is another stock, and this one, you know, it's not like it's a horrible stock, and it's one that looks good. And I can understand, like when someone mentioned it to me this week, I was like, yeah, no, I don't want to do that. And so I thought, what a great example here to teach on as to why I want to avoid it. So this particular setup is going to be Carnival, and I'm going to share with you why this is not a good setup for us. So first of all, the price is below both moving averages. It's failed some support retests, and I'll talk a little bit about that. And so why do we skip it? Well, no edge, the probabilities are against you. And so the rule is you want to trade only when the chart confirms the setup. So if you have 2 trades in 1 week, which this week we discussed taking both of these trades. If you have 2 trades in 1 week, you have one that looks like this, and the other one that we saw, which was absolutely perfect. Which one are we going to trade? Now, there's a great chance that this trade would be profitable. However, the probabilities is saying that it's not as good as the other trade, right? And so if you learn to be consistent and play the highest probability every single time, that's how you become successful, is by always, it's by having a good decision matrix and allowing your system to tell you what to do rather than playing a guessing game, right? We don't want to do guessing games. There's a chance that we're going to make money on a guessing game, but I don't want to take that chance. All right, so in this particular example, you're going to notice the differences here. You're going to notice that the moving average, see, they're twisted and windy right here, and it's flat. Now, as I say that, we're going to notice also that the trend, it had some big moves, but look at where price is over here, and then now look at where it is. It is almost the same. It's a little bit higher, but it looked like it wanted to form a trend, but then we had a big, huge drop, huge move to the upside, huge move, and then big, huge drop. And now it's like, oh, what's going to happen? I don't know. Is it going to continue the downward move, or is it going to break out and go to the next phase to the upside? It could do either thing. And so for me, that's not a trade I want to take, because there's just too much volatility, instability, and there's too many questions here. And you're also going to notice here, take a look, this 50 period moving average just crossed below the 200, and that is a very bearish sign for traders, and it's below the 50. And so now what happens? We have resistance right here, right? That's really important resistance. And so what do a lot of traders do at resistance? Well, they're actually looking at shorting that. So a lot of times when it comes up into here, you might be buying, but a lot of the smart traders would be selling. And as soon as you buy, boom, it drops, right? And so I'm not saying that's going to happen. I don't know, but this is not a high probability setup. Now, so we have the moving averages. They're not in the nice flow. Price has been moving up, moving down. And let's take a look at the RSI right here. The RSI is above 50, so we had a nice pullback, and but again, that's just not enough to go off of, because remember we said earlier that the RSI was a really fast move. The RSI reacts quicker because it's only 14 days. So you'll notice the RSI has a big jump right here. It's above 50. It's looking good, but that's only one piece of the picture. And it is confirming that we do have momentum, but it's not confirming the type of trade that we're looking for. Now, could that change? This could actually change. If it breaks out, we do have a box here and we have a breakout possibility. So again, that would give me some more excitement, but it would have to break out. It would have to go above the moving average. And then I'd want to see this 50 cross back up, right? And then, so the 200 is actually looking pretty good, but I'd like to see price come back up. And then, you know, once it comes back up, I'd like to see it come back down, test support. So I'm looking at, I would not trade this for quite some time, right? It wouldn't have to make a new high, but it would have to break out of this box. It would have to break above the 200. The 50 would have to go above the 200. It would have to come back down and then retest a support level several times, and then looking for a nice consolidation as well. So we did get the consolidation. We do have the RSI confirming, but it's just not enough of the clear picture. And so many times I see that traders get themselves into trouble because they're like, oh, this could bottom. I see support right here. They're like, we're going to bounce this off of support. And all of those are good observations. And, you know, they're great, but I just feel like it's so important to have a key checklist of key things that you're going to have in order to really be successful long term, and not only be successful, but the level of your success. Because if you take guessing game trades like this, it detracts a lot from your setups and from what you're actually trying to accomplish. So with this particular chart, I would definitely avoid this and not take this trade. Now, I also do like to look at some higher time frames. This is a daily chart, but if you did want to look at a weekly on this and see, okay, it might be a different story. If the weekly shows that it's a little bit stronger, perhaps that would play into it as well. However, again, for me, I'm looking for the very best setups, not some that have some of the criteria, but not all of the criteria. And so the way that I would trade this, though, if I was going to trade it, is you would look at a key level down here and you're looking for a support level, and I would be saying, okay, I would like to sell an option, sell a put down here at $17, and if price came down at 17, I would buy the stock. But if it started going down to 17, I wouldn't want this stock. Whereas the previous chart, AT&T, I would absolutely love that stock because it's just a really excellent setup. Whereas this one is a setup that I would definitely avoid. Okay, so let's go get my pen back. All right. All right, so that was the second chart. Now, again, just some key lessons on that, and just to recap that previous chart, it was not a perfect setup. It was below the moving averages, and we would stay away from that. All right, so this next one is going to be an early breakout. Now, early breakouts are not my favorite either because they still haven't confirmed enough, but they're still better than what we saw. A lot of people want to get in early. Okay, they want to get in early because if they get in early, there's a bigger chance for profit. And that's very true, right? So there's a trade-off always. If you're going for, and this is a really important tip that I think everyone should realize, and that is if you're going for the bigger profits, you're going to be having to give something up, right? There's always a trade-off. On the one hand, you're getting more profit, but what are you giving up on the other hand? You think that you're like, oh, I'm going to get in early, it's going to be great. Well, what you're giving up is probability, right? So if you get in early, you can make more profit, but on the other hand, you're giving up your probability. And that's totally fine if you understand that, because there's a lot of traders that are successful, and you got to know what kind of trader you are. I'm not a home run trader. I want probability over everything, right? There are some traders that I know they don't win a lot. You know, they are winning 20% of the time, but when they win, it's big. It's big. And that's okay if that's the kind of trader that you are. But the problem that I've found with that being that kind of trader, you just got to decide. I love getting big wins. I mean, I dance around and celebrate. I love it. It's so much fun. But I also don't like losing all the time. I don't want to lose 80% of the time just going for a few big wins. To me, that's not a fair trade-off. So I'd rather identify an early breakout and then be patient and wait for the setup to develop until it turns into high probability. Okay. And that's just because I don't want to have to go through some of the big drawdowns that I would have to go through if I was losing 80% of the time. But I know some of the really big wealthy people, they hit big home runs. And sometimes, look, I'm feeding into this. Sometimes all you need is one big trade, right? All you need is one big trade and you're set, right? You get in on Bitcoin early, put a lot into it, you ride that thing and you're done, right? You're rich, you're retired. So if that's your strategy and that's what you're going for, then do it. But I just want you to understand that there's always a trade-off. Okay, so the chart that I'm going to be sharing here now, and I actually do like this stock a lot. This stock, in my opinion, is a possible disruptor type stock. It's a new company. It's a technology company. I think that the banking industry, and I do, like I said earlier, I do some fundamental stuff. I don't do a lot of fundamental, but there's certain things that I look for in with the fundamental, and it really goes in line with what I'm looking at when I'm looking at technical analysis. So I'm going to talk about that just for a minute, since I got off on a tangent on why I like this stock. So when you're looking at the past 150 years in stocks, you're going to notice that disruptions and technology has ruled the markets. Okay, we can go back to when the steel industry took off, back in the early days, back when oil became a thing. We got, Standard Oil and Pittsburgh Steel and all that stuff, right? Those types of companies were disruptive. That was new technology, and people got really wealthy with it. And it has just continued on to now with the internet and all of these great tech companies, right? New technology is going to make money. So my rule of thumb for that, and it goes in line with what I shared earlier with the high probability stock. If there is a new tech, there's usually somebody that's in the lead, and maybe there's a bunch of people that are in the race. Always go for the best one. Find the best company and invest in that company. If you look at life, if you're a sports fan, usually there's a team that's they're the best. They dominate everyone. Usually there's a player that dominates everyone. Whatever sport you're into, you're going to find that one person that's the best of the best, the best of the rest. If you have 1,000 football players or 1,000 basketball players and one of them is better than all of the rest, which one are you going to invest in? You're going to invest in the leader. If you've got 10 stocks that are in a brand new technology, which one do you want to invest in? You want to invest in the very best of the best. And if you just use that as a rule of thumb for your investing, you're going to do really well. And you don't, again, I'll kind of disrupt I'll add some my own personal disruption. You hear a lot of talks about diversification. I'm going to invest in 50 different things. Well, if one is the best and you put in 49 of the second best and you only have one that's the best, go with the best, because all of that other clutter can actually really take you down. Now, of course, you're going to say, well, I'm doing diversification because of risk, because the best might get hurt that day. You know, I'm a little bit older, so for basketball, Michael Jordan, Michael Jordan might sprain his ankle. Hey, life happens, things happen, the best can go down. So in that case, you need to be diversified. Well, my counter to that would be, you need to be risk managing. You need to be able to manage risk. So if you go with the best and there's a drawdown, well, pull your funds out and find out the new best and just keep rotating, right? You don't need to have all of your money in huge funds or in a huge, massive allocation. So let's just take now. So that's my thing. I do like this company. I think they're going to be really good in the new technology banking, kind of like Robinhood too. Robinhood is another really good one right now that I've been looking at. But these guys are good, and you can see the moving average here. The 50 period broke above, and so when that happened, I'm like, okay, we're definitely bullish here. We're definitely bullish. So look, broke above. What else do we have? Well, we have a nice upward trend. We broke out of the high. Okay, right here we broke out. Now, at this point, I'm looking at the setups, because look, now we got a nice little spread here. We got the breakout. The RSI is confirming, strong RSI. But what happened was, well, it broke out so hard and so fast that it had to have a pullback. And this was a tremendous opportunity, one that I was watching, and you're going to notice it went from 6 all the way up to 18. So from 6 to 12 was a double, right? And then, so we got a nice little double in there, and then some, from 6 to 12, and then from 12 to 18. So this thing really rocked and made some people some bank. But when you have a high flyer like that, you got to remember that there can be profit taking. So right now, we had a nice pullback, pushed into support, and we're back up. We're back up above the 200. We're back up above 50. We're back here. And so with that being said, this is a very, very good chart for growth. The only problem is this 50 is still slanted. Okay, so with that being said, it's not perfect, and it does disqualify for an entry that I'd be wanting to take. This is a great entry, and there could be a little bit of a trade-off though, because in some respect I could say, well, this is a high-flying company. It's a growth company, whereas AT&T is an old company and it's steady and it's going to give me a higher probability, but it doesn't have the highest potential for return. So the question you got to ask yourself, and you really should have a decision-making checklist or matrix or some way that you're deciding, and you got to say, okay, this has got a sloping 50, but I could go from 12 to 18, which is a very good target, which is $6 a share. And if we go back to the AT&T chart, do I think that AT&T has that much profit potential? And the answer is definitely no. And so if you're using profit potential as your guideline, then you might say, well, this is definitely not as high probability as AT&T, so that takes it at a disadvantage, but it has much, much, much more profit potential. I might be willing to make that trade-off, right? And I am totally okay with that. And I think that that's a good way to make your decisions, but I can't tell you what to do because everybody has their own way of doing and their own risk tolerance, right? Some people would love just to stick with the nice, safe, steady, slow growth. I know that I'm going to win almost every week. But in this particular setup that I'm looking at right here, this one right here, I would put a nice tight resistance level or support, I mean, right below this moving average or right above. I'd say, okay, I'm going to sell a put here. And in this case, if the stock drops, I will buy it. And I'm okay buying it at 12.17, or, you know, if we sold the strike, we'd probably do it at 12. I'm okay buying it at $12. And if it goes up, well, then you just sell the premium every week. And the way that I do it is I like to just collect premium every week. I really don't want to get to the point where I'm going to collect the stock. However, if I do, my goal is never to collect the stock, but if I do, I'm usually very happy as well, even though it's not my goal, because I can make great money on the other side with the appreciation where the stock will continue to move up. So, I mean, if you just kind of, I'm going to just go back real quick, a couple slides, because I want to go look at that AT&T chart again just for a second. And because I want to show you just the difference. So we have this chart here, which has the sloping down, but now I'm going to go back a couple, if I can. This is the setup we're not going to look at. And then here is the perfect setup. So you're going to see here, though, that the profit potential on this is just not that. Even if it gets back up to the other high, that's 29, probably not going to get. I mean, but this was still good movement, though, but it just took more time, right? It's just steadier. So it went from 18 to 28. It was a $10 move, whereas SoFi went from 6 to 18. It was not quite a 10, it was over a $10 move. So it was a bigger move in a faster period of time on a lower price stock, which, as you know, if you're buying a lower price stock, you can get more gains, right? Because you can load more into it. You put $1,000 into a $20 stock versus $1,000 into a $6 stock, you're going to buy more shares. Therefore, the more shares, the more money you make per share, you know, per dollar that it goes up. So just again, in recap, this Carnival, not a good setup at all, below the moving averages. AT&T was our A+ best setup. And then the third one was what I would call an early breakout, a high profit potential, not high risk. The probability is still good, just not as good because we were sloping down, but it did break back up. So I think that we could be like, okay, this was the pullback, it's over. One thing I might want to do here is, before entering, maybe put a trend line on there and be like, okay, if it breaks that trend line, we're definitely on our way up. The other thing that didn't really happen yet is not a lot of consolidation. There was a consolidation phase here and a breakout, which is good, and then a smaller consolidation phase right here. And so those are good, but this hasn't consolidated as much as some of the other ones that I like to see. Okay, so again, when you're looking at your stocks, you want to make sure that the price is greater than the 50. Just to recap, you know, because you could take this screenshot just to give you some ideas, just to give you some good filters. Because I know a lot of times traders always want to know what to trade. Well, this is it. I just gave you a really solid formula. I mean, this stuff that I've taught today is not brand new information. It's been in a lot of the books that I've read, stock books, and what I've learned over the years. You know, I have read a lot of them, but this is it, 50, 200 day moving average. That's straightforward. You're looking for a nice solid RSI momentum, 50 to 7. When you're using options like me, you want it to have a lot of volume and liquidity because you want to be able to, you want your spreads to be small so that if you have to buy your option back, it's not a huge spread. Sometimes in options trading, if you don't have a lot of liquidity, you'll buy your option or you'll sell your option for $1, but then you have to buy it back for like $2.50, and then you got a $1.50 spread, and that's no good. So that's a little bonus tip that you need to understand. These are all little things that you learn as you do this a lot, right? And then so high options liquidity, and so you just look at the volume and you want to look at the bid ask to see what the spread would be. The other one that has gotten me a lot is to avoid earnings week. With earnings, it's kind of like what I said earlier about the high probabilities and the guessing games. You don't really want to be playing guessing games with earnings because sometimes the earnings just doesn't make sense. Because I just had one that I did because I didn't follow my own rules, and the earnings came out and they were great, and the stock went down. And it's like, what's going on? Earnings is supposed to mean it goes up. So sometimes you get the number you're looking for and the stock still goes down. Or maybe the earnings weren't good and it goes up, or and you don't know what the earnings are going to be anyways. It's like everybody's saying earnings are going to be great, get it. You just never know. So it's best if you're wanting to be safe and secure, you want to avoid your earnings. So again, you can just use a very simple scanner like this. Metastock has all of that stuff. It can be very simple. There's no reason to search for thousands of different things and trying to figure out what stocks to trade or watching TV. That's another little tip is I don't ever watch TV. I watch TV, I watch movies, but I don't watch CNBC. I don't watch the news. I don't do any of that because for one, it makes me mad because I don't know. It's like these guys are idiots. I'm not going to waste my time watching them. And I shouldn't say that because they're not idiots, but some of the stuff they say is ridiculous. So I don't watch TV. I don't scan for stocks. I don't get hot tips. I don't do any of that. I just use a very simple thing. No reason to be complicated. You don't need thousands of stocks. You don't need 10, 50. You just need to find a few good ones like what I showed you. And so this is a very simple method. All right, so again, I just use cash secured puts. Very simple, straightforward. And if you don't want to use options, you can obviously buy the shares. Again, trend is what we want to go for. RSI confirms the momentum. You want to use structure, pullbacks, repeat weekly. I honestly only do this once a week, and the way that I do it is I sell weekly options. So I buy the option on Monday and it expires on Friday. And so I trade once a week. It's too easy. So again, my vision here, I'm closing out. I thank you all for letting me share. I thank Jeff. But I want to help people replace their income, right? So if you're making $1,000 a week or whatever, learn to trade options and make 1,000 at your job and 1,000 at options. I help people with little growth strategies and help them grow their income so they have two revenues. And if they ever did want to leave their job, they could. That's actually how I got started in this, is because I lost my job. Because in 2008, the economy was really bad and I lost work. And so I had to figure out what to do. I wish I would have had this as a backup. So it's safe, repeatable, consistently, without day trading or gambling. The name of my website is Freedom Income Options if you want to learn more. And with that being said, that's all it. Jeff, I thank you if you're still around.
I'm still here. Where am I going to go?
I don't know. Snack break?
Stephen wanted to know, what delta do you normally look for when you do options?
I like to go for the 30 delta on the puts. And that's because it's kind of a sweet spot. You get, again, it's like what I said earlier about the trade-off. You get a premium it's a trade-off. It's not quite super high probability. Like if you go for like a 20 or a 10, you're going to win most of the time. But a 70 is the sweet spot, or not 70, the 30 is the sweet spot because you get a nice premium. And again, since I'm picking such high quality stocks, if the few that I do lose, it's okay because the stocks are great. Good question. Great question.
That's always a good question because so many people have different strategies around it. Ed wants you to know. Good webinar. Thanks, Casey.
Oh, thanks, Ed. Appreciate it.
And it's freedomincomeoptions.com. I looked it up, made sure that was the right address. It goes straight there, freedomincomeoptions.com. I put it in the chat. Casey, thanks for joining us. And thank you,
Jeff.
Thanks for wrapping up the day for us.
I appreciate it. You're doing a lot of hard work. These are long days for you.
Yeah. Hey, I'm having fun. It's all, I could do this all day. Oh, wait. I did. All right. Thanks a lot, Casey.
Thank you.
All right. We're going to wrap up there. Let me go ahead and do this. I just want to say thank you to all of our presenters today and yesterday and tomorrow and the next day, the day after that. I want to say thank you to the sponsors, CMT Association, cmtassociation.org, Stocks and Commodities Magazine, traders.com, and of course the Traders Forum, in which we have our brand new member. Thanks for joining, Gabriel. I look forward to see you in our sessions that we do. Be sure to say hi when you're there. www.thetradersforum.com. You can join. We do live market chats. We learn about the markets. We do events. We do a lot of events, actually. It's a lot of fun. So thetradersforum.com. Of course, we're Metastock. We've talked a lot about Metastock and scanning and testing and trading. It's been rated #1 in its price category for 32 years in a row. You can get an extended trial. You can get any of the offers we talked about today. Just go to metastock.com/conf promo. If you have questions, give us a call, 800-882-3040. That'll work here in the US and Canada, or metastock.com/saleschat. Thank you for being here. All of you that have stayed till the very, very end, I appreciate you. I'll see you again tomorrow. We kick off with, I think, Jeff Hopkins tomorrow. And then we have another great day lined up. So I'll see you in the morning. Get some rest. And I'll see you tomorrow. Bye.